All welcome at this 10 o'clock in the morning, right? Getting ready on the July 23rd. This is our big Cyber Expo that we are doing. That is our biggest event of the year. I'm going to open up with you and talk a little bit about what's going on in the market and tell you a little bit about what we're basically expecting in the next couple of next 2 days. So let me just see something really quick. So regarding about what we're going to be doing here at the Cyber Expo, we're going to bring some of the biggest and well-known gurus in the industry, people that I feel that are loyal and valuable for your knowledge that you need to understand the trades today's markets. It's been a great summer so far, so hopefully everyone's been enjoying it. But this is obviously has to be probably one of the most active summers I've seen in the market. So I'm glad that you guys are here because we're going to get into it hasn't really slowed down at all. Usually September, October, November are the busiest times of the year, but you know what? I haven't seen anything that's been backing this market off as much as I see it today. I mean, it has just been nonstop over and over and over again. All right. So just really quick, let me just get an audio check. Can everybody hear me loud and clear? Just give me a chat in the keyboard chat. Just right on just give me a yes, please. Sounds nice. Okay, good. All right, and also where everyone says to, just click on that drop down menu so it says to everyone, so everybody can see everybody's chat. Okay. All right. So anyway, I'm going to start off and talk a little bit about my basically trading blueprint. How I'm going to crush the earnings announcement. It is a big day today with earnings. You got a lot of big names. You got Tesla coming out to close. You got Google. You have Google that's coming out. You got IBM that's coming out. So it comes every quarter. So I think you guys need to understand what to look for and why, you need to see what is going on with these stocks if you want to be able to capture the big run-ups. But before we do that, just a quick little risk disclosure. This is going to be going on for the next 2 days. Just let you know that we're not going to, any of my traders or gurus are going to make any guarantees or promises. This is strictly educational only. And it does vary student to student. So please, very important, be very wise. Don't go out there and trade what you can't afford to lose, I always say. All right. So anyway, here's all the big speakers that you're going to be seeing. So there are a lot of them that are going to be going on for today. If you cannot make all of them, that's okay, because you could always watch the recording. We're going to send them out. We'll send some highlights, some clips. Just make sure you like us and friend us, and please share them. All right. So let's go to the live market really quick, and let's just start having a little fun. What do you say? All right. So there are a couple of stocks that are moving. I'm going to bring this up over here to just show you what we got going on. And right here, fellow traders, this is our actual professional trading room. Just going to bring this up right here so you guys could see it. So right here on the left-hand side, these are all our instructors, and these are all our traders around the entire world. You can see them, Christopher, Chuck, Deborah, Kathleen, right here in the middle. Hold on, let me get my little pointer so you can follow a little bit better. How about that? Here we go. All right, there you go. All right, so here's our alert service of what we're basically talking, and I'm going to unmute it.
Hopefully it makes one more push here, but remember, this stock's been up a lot since yesterday and even the day before. Karen, I don't think that we were focused on this stock 2 days ago, but it was moving from then.
All right, so that is Josh, one of the instructors, and I actually with him in the morning, but I'm joining you guys here today. He's talking about a stock IOVA. You could see the stock had a really nice move from $2.20 to $4. I'll bring it up over here so you can see a little bit better over here. This is the actual run up on the stock. Long term, you could see the stock went from about $1.20. It's almost up about 100%, moving up beautifully. And you could see it just over the course of the day. Now, what I'm about to show you and what we're going to learn is this. Does anybody know why IOVA is going up? Anyone have an idea? Why is this stock going up? What is the reason for it? Now, if you look right here, I want to point something out really quick. So you see it's right here, fellow traders. This is our alert service, and we're live every morning at 9 a.m. And you could see right here, here's the stock, right? So that was at 9:16. And you can see there are a lot of stocks that are moving that are on that list. But, you know, obviously the market opens up, things change, and we kind of eliminate what we want to trade or not. But what I want to show you is that at 9:15, that stock was trading right around here. So that stock was at 370. All right. Right now it's at 415. Let's see if you guys could do the math. What is, or I'll even help you guys out. Let me bring this out. I love bringing out the calculator. So at 375 minus 415 equals about 40 cents. If you times that and you bought 1,000 shares, that comes out to about $400. Times that by 5 days a week, times that by 52 weeks, and there's about $100,000 salary. Anyone here have a problem with that? I don't think so. Now, why is it going up? I know one of you right here, Jim, is saying, you know, biotech small cap, you know, phase 3, new drug coming out. That's great, but why is it going up that much? Well, this is what I'm about to teach you guys. There is something called level 4, which is this. And this is what we're about to learn. This is basically going to show you where all the big block orders are, all where the buyers are, where all the sellers are. And we're going to see it with NVIDIA. We're going to see it with Tesla. We're going to see it with every stock you could even imagine that's out there. But the difference between one stock versus the other is just volatility and price. They all go up for the same reason, buyers and sellers. All right. So now let's get into the fun part about it. Okay. So before I go any further, first of all, I'd like to introduce myself so you understand. Well, wow, that's amazing. Like, why did no one ever talk about it? How did that, where did Fausto learn that from? Well, let me tell you a little bit about myself, and then you'll understand why you need to learn this immediately, because if you don't, this is why people fail. I'm actually a 12-time champion at the Traders Money Show. I've competed against every school in the industry. I beat every school in the industry. And after doing it for 35 years, I'm still here today, have been through some of the worst economical market crashes in the industry. And if you could survive that, you could survive anything. But it's not about winning. It's about teaching. Okay. And the way I got started is this. Before I became a very good trader, I was a very big failure. And why that was is because I was one of the self-taught individuals that went out there and think, I could learn myself. You know, anyway, what did I know? I was 22 years old when I got started. I'm actually 53 today. And it's, you know, and it just came out that after blowing up 2 accounts at that age, I finally did what most people are doing today, like what you're doing. I had to sit down and be like, what am I doing wrong? I'm not a stupid person, okay? I was very good at school, very hard worker. What am I doing wrong? And you know what the smart people do? They listen to smart people, okay? And how I learned from smart people, I went out there. I live here in New York. I still live here today, which is the financial capital of the world. And I said, okay, let me go find out who are the most best trading firms in the industry. Let me go sit into one of these meetings and let me try to see what am I doing wrong. And what I've learned is that, first of all, back then, it's not like today. Back then, you actually had to work for them. We had desk fractions back then. You had to split the profits. You had to get licensed. It cost a lot of money to get this software technology. But after seeing what I was taught, the first thing I was taught, and exactly what I'm teaching you here today, is that I'm like, how could anyone even have a chance of winning without knowing something that I was taught, which was the right of the chart? So it's like, and how do you not have these tools? And I knew why trading was an 80, 90% failure rate right there at that moment in time. So that's why I'm here. I'm here to show you that my parents always taught me, being first generation Italian, that listen, if you want to be good, you got to surround yourself with good people who know what they do. And you got to learn not how to make money, because you know you can make money in this business. My parents always taught me, he says, Fausto, learn with people, the mistakes they make, so you don't make the same mistakes, because that's what you need to fix. Okay. Don't worry about the winners. The winners take care of themselves. It's the losers you got to learn from. So learn from the people that make the mistakes so you don't lose that money also. Now, over the years, I've coached, I've taught, I've moved on. We're one of the original, I'm one of the original shows bandits of the industry. We're the longest running educational school in the industry that I know of. We do training for some of the biggest brokerage firms in the industry. And I've done a lot of presentations to some of the biggest companies in the industry. I also do a lot of work with NASDAQ by doing presentations, which I'm going to teach you today. That's the big goal. I'm going to show you exactly how to trade on, how to trade the market. Now, how do I know that? Because I was something that was called a market maker. What is a market maker? Somebody that actually makes markets in stocks, which, by the way, you could do it yourself today. And this technology I'm about to show you has been around for over 50 years. So don't be disappointed if you're learning for the first time. Now, my goal today is this. I'm looking for traders like all these people that you see here today. I'm looking to teach you guys to hopefully you to be one of them, because being a good trader, I've learned that you have to surround yourself with good traders. You got to teach them how to trade, because that's how we all make money together. Now, just want to kind of show you also, this is my lovely family. I always love to share that with you, because I've been married for over 28 years and happily have 3 wonderful boys. My lovely wife, Debbie, Max, Lucas, and Alex are my kids. Being a good trader, I was able to travel around the world. I was able to, I got hobbies. I own a home living channel. If you haven't subscribed to it, Fausto Home Living. I raise backyard chickens. These are the hobby things that you do, but I got the time to do it. That's the big deal. That's why we love trading. Trading really gives you the opportunity that you are your own boss. You can come and go whenever you please. You don't have to worry about getting fired or, being retired, going out there and just learning how to trade the market. That's what it's all about. But listen, it's not about me. Okay. This is about you. And I know a lot of people want to live the dream, not to, oh, look at the fancy cars and the cash. It has nothing to do with it. We just want a simple life. A lot of us are retired. We want to start trading our money. We see some opportunity out there. That's what the goal is. So what I'm looking to do today is I'm going to invite all of you at the end of the next 30 minutes to come and join my trading room so you guys can see what it's all about. Okay? Because listen, we practice what we preach, not like some other people. So everything that you see here that I'm going to show you right now, I'm going to give you a reality, because you're going to get a big reality check that a lot of you have been trading blind for how long you've been trading. And you're going to see like, wow, I would love to see this in action, and I will do it for you. So be prepared. Don't go anywhere, because I'm going to show you how to do that. So listen, we already caught some huge winners this week. I want to talk about them, and I'll show you exactly how we trade them. Now, did anyone see the stock donut yesterday? Anyone a fan of Krispy Kreme? I'm a big fan of Krispy Kreme. Okay. I usually have a Krispy Kreme coffee donut cup here, but I got my NASDAQ one. But anyone a fan of Krispy Kreme? You got to be a fan of Krispy Kreme. Just give me a yes or no. Anybody a fan? Good. There we go. We got a lot of big fans. All right. Like it better than Dunkin' Donuts. Anyway, Krispy Kreme has got destroyed. Okay. Got hammered, but for some reason, in the past 2 days, the stock has been taking off. It was up about 75% yesterday. You could see here, this is actually one of the chats that I posted out there. Dunkin' Donuts is moving. And that was at 10 a.m. right around here. 340, look where it is, up to 550. All right. How did Fausto know? And had I put that alert? I'm going to show you how we do that. But you know what? There's even better ones. Open was up 300%. This stock within 2 days started right around $2, went to $2.50, went up to $5. Okay. Now, on top of that, now we got an earnings session is starting. Look what's going on right now. Look at all these companies that are coming out earnings. Now, listen, it's not about earnings. because earnings only come every quarter. So it's like, oh, earnings season's over. That's too late. Let me go back to my day job. No, listen, every day is an adventure. But because it is earnings announcements, I'm going to sit there. I want to kind of talk a little bit about them. All right. So let's talk about the huge implications that we're going to be having going in earnings. First of all, politically, that's really been the big thing right now behind the scenes, what's going on. Tariffs, taxes, the new wonderful bill that came out, how these companies are going to get affected by it. You see the massive tariffs that have been going on. You see interest rates are still high. And the market's positive. The market's been on rally after all this negative, scary thing. We had this whole Liberation Day, everything else that came out there. The market has not been any stronger than I've seen in a long, long, long time. Now, you could see NASDAQ's doing great, but we don't know what to trade. That's the big thing. Well, my goal, what I'm here to teach you is this. Don't try to analyze the market. Just follow the big boys. Follow the money. That's all you need to do, okay? A lot of us make things more complicated than what it is. You have to understand what drives the market and makes things go up and down. Is it the news? Is it indicators? Is it hedge funds? Is it large block traders? Listen, it's all about what I'm about to show you right now. It's about following the smart money. Now, what I'm about to show you right now, fellow traders, is going to be very disturbing. What I'm about to teach you right now is how the market actually works. Now, if you're not doing this, don't worry about it because I'm going to teach you how to do it. And you're going to be all invited to come into the trading room and play around with it. Now, before I do that, I want to do a quick poll question. I'll just figure out, do I have to poll access to the polls? Could everyone just tell me, does anyone here have something called NASDAQ Total View, or they call a book viewer? Okay, there it is. Just give me a yes, no, or not sure. We just put a poll up there. So let me, so we'll go out there and fill that. Now, if you're a student of Cyber Trading University, please do not answer this question, okay? Because we want to kind of keep it and see how everyone else is here, how they're using it. Now, as everyone is answering that question, I'm going to get my crayons out here because I'm going to draw a little bit stuff here. Wow. Okay. So the numbers are very, 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 very shocking. Okay. Listen, by the way, Brandon, I didn't hear from you. Dan, Michael, Alan, guys, don't be shy. Just click yes, no, I'm not sure. No one is going to insult you or embarrass you. But if you don't talk and don't admit it, you're never going to learn. Okay. Because your poll, it's funny. You always feel like, why does someone ever call me on a poll? Politics, whatever it is. Okay. Get my opinion. Now here's your chance to speak out. All right. So let me end the poll and let me share it. Now, look at this number right here. 70% say no. 18% have no idea. Okay. Not sure. So I'll take that as a no. It was a trick question. And only 12% use. Now, remember, keep this in your mind. Trading is an 80, 90% failure rate. Now, listen to me carefully. What I'm about to show you is I'm going to teach you how the market works. You are actually going to see every buyer and every seller in every stock. Now, how does that work? Well, I'll explain to you. This is called, we'll look at the stock NASDAQ, okay? Now, we're going on to the actual physical exchange, meaning you have a seat on the New York Stock Exchange. You could walk down there. You could see all the orders. You could see all the buyers and sellers. So I don't know how important you think that is. I'm telling you, it's probably the most important thing in trading. So you're seeing every buyer, every seller. You're seeing how many people looking to buy it for the most and who's looking to sell it for the least. Who's looking to sell it who's looking to sell for the least and who wants to sell it for more money. So you're seeing every single buyer out there in the entire world that want to buy the stock, sell the stock, and it's being aggregated so you get to see it in one number. Now, I noticed that looks a little confusing right now. It looks like a lot of numbers. And I know it might move pretty quickly, but don't worry about it. I'm going to simplify it for you, okay? All you need to know that there are buyers that buy stocks and there are sellers, people that are selling stocks. And you're going to see what I'm going to talk about, iceberg orders, which are big block orders. So it gives you a sense of knowing where these, what are they looking to do and what they're trying to accomplish. So let me clear this out. Let me show you how we utilize this data. All right, so we're looking at a stock, Shopify. Okay, Shopify started right around here, around $118, came all the way down, stopped specifically at this price at 115 and went right back to 120. Now, the question is, why did it stop at 115.50? Why didn't it stop at 110, 118? What made 115.50 so special? Okay. Was it a Fibonacci? Was it a MACD? Was it, what was it? Well, when you look here, what makes a stock go up is buyers. And right here, you'll notice that there was a 74,000 share buyer sitting out here at 115. Okay. Now, is it a lot? Well, when you look at all the other buyers down here, they're 200 shares, 500 shares. You're talking 74,000, which is probably about 100 to 200 times more than the average order out there at any given price. So think about that. How do stocks go up and go down? Buyers and sellers. Where's the big buyers and seller? Right there. That's why the stock went up. Now, let's look at the opposite. What drives stocks to go down? Sellers. Now, everybody's always looking for resistance levels. You have to understand something. Resistance levels do not exist unless the seller on the right of the chart is out there selling it. So here you're looking at a stock, Johnson & Johnson, and the stock goes from 162 all the way up to about 168, right around 12 o'clock. And then from that time, I don't know why I didn't want to go to 170 or 165. What made 166 so special to drive it back down to 164? Well, it must have been a lot of sellers at that price. How do we look at it? We can't see in the past. We got to look in the future. And the future is, here's the sell orders. There's your seller and there's a seller of 10 orders that make up 99,000 shares. Once again, is that a lot? Well, that's a 6-digit number. Most sellers at every single price are 3-digit numbers. I don't know about you, but I think that's a lot. Okay. Is it a lot? I don't know. What does that come out to be? About $16 million worth of stock looking to be sold? Do you think you know more than that seller out there? Think about buying a house, right? Anyone here own a house? Give me a yes if you own a house. Anybody own a house? Or how about this? How about a car? Did you buy a car? Anyone buy a car? Okay, John, you have. Okay, wouldn't it be pretty cool if you were able to go into a dealer and know exactly? He said, you know, you want to buy that car, and you see the price, but you know you can negotiate, right? And that's the goal. You want to get a good deal. You don't want to pay too much for it. Would it be nice to know what he really owns that car for, so you don't overpay for it, or you don't want to underpay for it because you might lose it? Well, it's just, this is what you're seeing. You're seeing what the street, what's going actually off at the auction, what the stock is really going for. So you know exactly where all the buyers and sellers are at. Now, did I lose anybody yet? Just give me a yes or no. Did I lose anybody? Kevin, you following along? Perfect. Everyone else? All right. Let's look at a couple of big iceberg orders. Okay, let me show you how we use this strategy, because once again, when I invite you on my trading floor, you're going to see this all day. Let's check out Google. Okay, today's going to have earnings. Google at the open had a big crash, started going back down. Now, I don't know, maybe the news is out there. I don't know, but listen, that's not the point. You have to be, is it panic selling right now? Why is it dropping? Well, regardless of what is going to happen in the future, let's worry about at this point right now. And right now, when you look at NASDAQ book, when you go to the exchange, you'll notice that there's a big buyer of 275,000 shares at 187. Does everybody see that right there? Everybody see that big buyer right there? 65 orders are out there. Now, the stock's trading at 198. People are like, well, I don't know, I think so. That's to buy 198. Why pay 198 when all the big buyers are at 187? Okay. So watch what happens when you change the slide. Look what happened to Google. Did it really get crushed? Did it really panic selling yet, even go into earnings? Well, you know what? It came right to that big buyer, 187.50, and now it's back to 191.50. And you're like, I don't understand. Why is the stock going back up? I saw it just crashing. What you're looking at is the right of the chart. You're seeing all the future orders. Okay? Think about it. How many times have you sold a stock, and as soon as you sold it, the damn thing goes up? Or how many times you bought a stock, and as soon as you bought the stock goes down, and you feel like somebody's watching you? Let me explain something to you, fellow traders. Nobody's watching you. You are not watching them. Think how much smarter and better trading decisions that you would make if you just knew where all the big block orders are. Now, you know what I'm talking about, okay? You know that there are people out there that are buying and selling, but you're always been taught to understand, well, you got to know this special, Fibonacci, you got to know this candle, you got to know the wick, you got to know. Everybody has this great story or strategy, and it might work for them, and it might work for you too. But guess how much better it would be if you just could confirm it, what's going out there on Main Street, on Wall Street. Now, let me show you where we sell. Here's a stock, Alibaba, right? Similar, run up like the stock, like Google. Stock goes from like 118 to 122, right? Now, the game plan is you got to know where the sellers are at all times. And when you look over here on the exchange, you can say, okay, well, do I sell it now? I mean, listen, we're always looking to take a profit, right? And you know for a fact, fellow traders, and you've all been guilty of this, how many times you sell your winners too soon and you hold your losers too long? Well, if you knew where the sellers were, you probably would have got out sooner. And if you knew where the sellers were, you probably wouldn't have sold it out too cheap. You probably wait until that seller got done. And if you look here in Alibaba, you could see that the seller, even though we're at 120, we could probably squeak out another $2. So why sell it at 120 when the big sellers are at 122? What do you think happens when we get to 122? Well, if you sold it here at you could see here at 120, there was your extra $2. And then you had about 30 minutes to get out where you could see it, tested it. You can see it's called a triple top right there. Didn't want to break it. Now it came back to 120. And you're like, you know what? I sold it too cheap, or I didn't get out soon enough, or was impatient enough to wait to where those sellers were. And then now the stock's going down. This is trading at its best. But now let's talk about one other thing. Breakouts. How many of you here owned a stock and then you sold it because you thought you looked at some resistance levels and everything else told you to sell, and the thing just takes off? They're like, oh my God, what just happened? Why didn't I hold on to it? Everything told me to get out. Those are called breakouts. Now, how do you identify a breakout? That's what I'm going to show you right now. Let's look at Bull. Okay. This is Webull. Anyone ever heard of the stock before? Just went public. Another brokerage firm. It's like another. I'm a big fan of Webull. Actually, I own it right now. I own a big position in it. Yeah, I mean, and some of you might look at it like, I don't know, Webull, I don't really trade. It doesn't matter. I can almost guarantee you every stock trades exactly the same. And you all could agree they go up with buyers and sellers. So don't look at a stock because you don't want to trade it because you don't know the company. It's all about risk to reward, okay? You want to risk the least amount of money as possible with the most amount of reward. Remember, this is a business, okay? You might not like what you sell, but if you're making a big profit and a lot of people are buying it, what are you going to do? All right. So here you have Webull, and you could see right here, the stock's been on a big run up lately. Okay. And the first thing you want to look at is, okay, you got to have a game plan. And the game plan is, if I'm making money, I need to know where the sellers are looking to get out. Now, when I look over here, I could see that there's a big seller for 113,000 shares at $16. Now, I'm going to ask everyone this question. What do you do at $16? Do you buy more or do you get out? What do you do? Do you buy or sell? That's really the question. In theory, you want to sell. There's a lot of sellers out there. You want to book a profit, right? You see the big order out there. In theory, that's we're looking at people looking to get out, and that's where you want to sell, all right? Can't go broke taking profits. Well, when you look at this chart, you could see, wow, like it was at $15, at $16, from 12:30 to, 3 o'clock. I mean, let's do the math. 15 minus 16 equals $1, right? If you times that by 1,000 shares, that's $1,000. If you do that 5 days a week, that's $5,000. If you could do that every week, you're talking $250,000 salary. Anybody here have a problem with that? So don't tell me, well, I don't know, Webull. It doesn't matter. The point is, it's all about numbers, okay? But the thing, this is where I'm going with this. Did you ever sell a stock too cheap and like, damn, I wish I held that stock longer, but everything else told me to get out, everything else. So let's look at it this way. Look what happened. Stock hit 16 and it shot up to $18. Now, how pissed off would you be? You've still made your 1,000, right? But like, my God, you could have made an extra 2,000. You could have made 3,000 on that trade. Why did you screw up? What happened? I'll tell you what happened. You had a breakout. That's right, Tufan. Somebody went out there and said, oh, you want to sell? I'm a buyer. I'll buy everything you got. And you know what? That could happen, right? Everyone in a house. Let's go back to the house theory. You ever go out there and bid on a house and you know what it's really worth? And I don't want to pay any more money than this. And all of a sudden be like, wait a minute. That house went up went another 100, 200,000 more than I wanted to pay. What? That's crazy. And then you holy shit, I should have bought that house because it really is worth that much. So everybody has a way of looking at something that's worth it for them. Now, for you in this trading business, it's not what you think the house is worth, because you're not buying the house for yourself. You're buying a house to make money. Remember, you're buying it as an investment. You're not buying it because, I would never buy that house because I don't like the property. I don't like the neighborhood. Who gives a shit? If I had an opportunity to buy a house at $1 million to make 100,000, or I could buy a house at 200,000 to make 100,000, I would rather buy 5 houses at 200,000 than buy one house at $1 million to make the same amount of money. It's not about me personally. It's about what's going to make the most amount of money. And then when you look at this, you want to know how a stock breaks out. This is how stocks break out. It's because resistance are made by big sellers. But somebody went out there and bought that big seller, and that's how you get those big run-ups. Now, I'm going to ask everyone this question again. Did I lose anybody yet? Did that seem hard to kind of understand? Kevin, you got it. Randall, Hakan, you got it. Now, let me ask everyone, who here would like to see this for one whole week and see if this stuff really does work? because I'm going to invite all of you guys to come in the room. You're all going to see this for one full week, all day long. Okay. So remember, we practice what we preach. And you know what? If you can't be there for the whole week, even there for one day, you're there for the first hour, the last hour, don't worry about it. But I know for a fact, a lot of you here, and I hate if I'm going to hit a nerve, and I said it before, you sell things too cheap and you're holding your losers too long. And your problem is you're looking at the right of the chart. You're not looking at, you're looking at the left of the chart. You're looking at what's happening in the past, but you're not seeing what's happening in the future. And the future is, where is everybody looking to get out? So what you're looking at is this. Well, don't worry about Kevin. If you can't make it next week, you could always use it. You can use it for the following week. Okay. And you can still get the alerts. Now, you just got to remember that it's all about following the money. That's it. Follow the orders. You might have a good style that works for you, and that's great. And I want to keep it that way, but think how much better it would be if you just follow orders. Now, I want to talk about one last thing. Now, oh, by the way, when you guys register, I'm going to show you how to go to NASDAQ's website. And by the way, you got that on private. Kevin, you sent to Kevin. So just to let everybody know that everyone here, when you register, I'm going to give you 2 videos that you're going to be able to download and watch so you know how to set it up. So I'm going to send you directly to the exchange. There's not the Fausto software that you hear about. People always try to sell you. This is not something you get on TradeStation or Thinkorswim or, TD Ameritrade Schwab. I'm going to give you full access directly to the exchange. You're going to be able to walk on the floor and you're going to see where all the algorithms are, what's happened to high frequency trades, BlackRock, Goldman Sachs, everybody, all the institutions. You're going to see nothing behind the screens and none of those fancy, indicators and pay extra. You're going to get direct seat, right on the floor of the exchange. Okay. And by the way, one last thing before I go to teach you level 4. When I started, and this is why it was such a big failure rate back 25 years when I got started. And it's still a big failure rate today. And I'm going to teach everyone a very valuable lesson. So listen to me carefully. When I started, only about 2% to 5% of the people continued to take that job. Okay. Because when I started, to get this data, you had to buy a seat on the exchange. I had to pay $1,000 a month to get this data. Today, it costs $15. Okay. And it's a long story why they did it. Okay. Why they dropped from $1,000 to $15. If you think that $15 is expensive to have a seat on the exchange, I'm going to do everyone a big favor who has a problem with that. Go start looking for a stockbroker. Okay. Go work at McDonald's at $15 an hour because they just raised minimum wage. All right. You want to know how to make that 6-figure salary? You're going to have to spend money somewhere. Okay. So just give everyone a heads up. And I'm going to give you one best advice I could ever give anyone here too. If anyone here is getting something for free, there's a catch. Nobody works for free. Okay. You don't work for free. It sounds good, but my argument is always tell everyone, my dad always told me something very valuable. You don't want nothing for free. You just want a good deal. If something's for free, there's a catch. Okay. There's got to be a catch. So you can't get NASDAQ. The exchange doesn't work for free. They didn't build that beautiful building in Times Square. Okay. Let me tell you, I was just there. They just put over $1 billion into it. Believe me, they just renovated. They didn't do it. They didn't do it on their money. Okay. So just give you a heads up on that. All right. Anyway, let's move on to level 4 because if it's free, you can't afford it. James, that's a good one. I like that one. Now, let me show you one last thing, okay, before we get registered, because I know the next speaker is going to come on, and I want to give you guys some time to register. Let's talk about level 4. Level 4 is just more of a heat map. Any stock does anybody want to look at? Any stock out there? Just give me any stock. We'll check out some stocks out here. Coin, Netflix. All right, I have Tesla. Okay, let's look at Tesla because earnings are coming out on Tesla. All right. So you can see Tesla's not really doing too much today, but I want to bring something up here. Okay, I'm going to draw some trend lines. And I'm just going to show you some supports and resistance. Everyone pretty much probably learned this. You can see here, like, where supports, you can see like, resistance levels here, 360, right? We can see that. You can see support levels right here. Right? Does everybody see that? Resistance, support. Everybody see those right there? Looks like a big support level right here, right? What number is that? Right here, right? Does everybody see those orders? All right. So I have a question to everyone. What makes a support and resistance levels? What makes a support and resistance? That's right. Buyers and sellers. Everybody put that in the room. Just put B and S. Buyers and sellers. Okay. So I'm going to bring level 4 over here. And I want to show you all the big block orders. You have a 184,000 share seller here at 360, which kind of makes sense. That's probably him. This. You got a 250,000 share seller at 350, which is right here in the middle. It's probably that guy right there. And then you got another big seller here at 340, all right, which is we're at right here. Here's 340, and you kind of can see that little trend line right there. Hope I'm not confusing everyone here. But you see how the stock has resistance levels, okay, on the chart, and you're like, well, how do we really know that's resistance? Well, now you could see it, all right? Right, buyers run the resistance and sellers run the support. Exactly, very good, Dan. Thanks for sharing that. All right, now let's look at another example. Let's look at, one of you brought NVIDIA because that's another brand name. Yeah, I got NVIDIA up here, okay? So here's NVIDIA. And let me bring up NVIDIA over here really quick. Hold on. NVDA. There we go. All right. So NVIDIA, on the long-term chart, you could see that you got resistance levels here. That was the high. And you can see how the stock had a breakout right here. When it broke out of here at 147. Everybody see that? And it's been really strong. Now the question is, where's resistance levels on NVIDIA? How about this? Can everybody tell me where the next 2 resistance levels are? You got one right now. We're trading right here at 168. And let me zoom in here for a little bit closer for you guys. Makes it a little bit easier for you to read. Everybody see that? Okay. So right now we're trading at 168. So you got resistance levels at what price? 155 is not the right number. We're trading at right now 168. Where's resistance levels? If you don't know the answer, give me a question mark. Hakan says 174, 169, 172. All right. 175. 175, Jim. Dan says 175. Craig has no idea. Well, Craig, let me ask you a question. What makes a resistance levels? Sellers, right? Where was the last time the stock went down? So everybody said 175. Okay, great. All right. If you look right here, we're at 168. Did everybody see that? You see that big red line right there? There's a 775,000 share seller sitting there at 175. And you got a couple other sellers. Look at all these sellers, 144, 143. See these little tan lines? You got to look at all these sellers, 145,000, 175. So, I mean, it looks like the stock goes up. We're going to start hitting resistance levels at 142, 143, but really 145. So, you know what? Congratulations. You guys figured it out. You basically broke, you figured it out. Now you know why the stock hit resistance levels right there, right? Perfect. Now, here's my next question. Can this stock go past 175? Yes or no? You know what? It did here 145. Of course it could. Of course it could. So here's my next question to you. If we get past 140, 175, where's the next resistance levels? Because that's called a breakout, right? Where's the next resistance? Sky's the limit. Well, Prince, where you get 166 from? We're going up. If you get past 175, where's the next resistance? And now my question to ask all you guys this, if you don't know the answer, give me a question mark. Because I know the answer. I'm going to teach you the answer. I'm going to tell you in 2 seconds. Jim says, I need my level 4 now. Look at that. He's already sold. Bill, that's what I'm going to show you. Dan, you got it right. He goes, we need to see where the next sellers are, right? Tony, I don't know where you got 190 from. How'd you get that number 190? I'm just curious. Where'd you get that number from? Where are you guys getting these numbers from? How do you know that that's a resistance levels? You got to look at the right side of the chart. All right. So here's 175. Here's 180. Okay. So next biggest seller is at 725,000 is sitting there to be sold at 180. But look what happens after 180. No one at 85, no one at 90. Next biggest seller is at 200. So if we get past 75 and 80, the next resistance is 200. Now, with that said, did you need a Bollinger Band? A stochastic? A MACD? What else? Anything else in here that looks pretty cool that some people use? A Shankin? Yeah, I know Shankin. I heard about that. An RSI. I heard that's important. Okay. Did that tell you that? What's easier to read? This, all these squiggly lines. Level 4, right? All right. Because to me, this is like a big mess. Well, this is what we're going to do. I want to, because we're running out of time here and we got the next speaker coming in. So I want to get you guys registered really quick. We're going to teach you in the next week. You're going to see all these big block orders. Look at all these big red lines, 100,000, 100,000. You're going to see how long they were out there for, how long they've been trading. So not only are you going to learn how to use level 3, but you're going to learn how to use level 4. Okay. Now, if you want to see more, we're going to do it for you. Don't worry about it. Now, how could you learn more? This is what we're going to do. First of all, is everyone subscribed to our channel? And anyone here use social media, YouTube, Instagram, TikTok, X? We broadcast every day. Just click on that link right now, everybody. And just go there right now. It just take a couple of seconds. Go right here. Click on the subscribe button. Ring the bell. So you can get, look at, we got 4,000 videos up there. Okay. And we got some great shorts that we do. You can see right here, some great shorts. We got some great videos, everything. All right. So definitely get those things posted. All right. But better yet, Cyber Trading University, just give you a heads up. We've been endorsed and I've done speakings for some of the biggest brokerage firms in the industry. MetaStock, Tastyworks, Thinkorswim, TradeStation, you name it. We've been on it. We're also have a 5-star rating on Google, okay, which is unheard of. Very rarely, I don't think anyone here for the scrutiny that we get as in schools. I think that's pretty good. All right. And also, ChatGPT did rank us #1 school in the industry. Okay. Which if you are a big fan of AI, there you go. Now, the big thing is this. I want to teach you guys how to trade. And I'm looking to people to be part of my team. So all I'm asking for, if you want to do a 1-week trial, I am just looking for serious traders. That's it. And all we're asking for is $9. That's it. 1 week. And we're not going to charge you anything more after that week. We just want to make sure you say who you are. There's just a basic application fee for you to get in. $9. I'm going to give you my book, which is a $50 value. I'm going to show you how to download NASDAQ Total View, which is $15, which you can basically pay $9. Okay. And you're going to have access to the trading floor, which is this right here. Okay. All the stuff you're going to get. Now, this is what you're going to get. We do in the week. You're going to get a live audio commentary we do all day. You're going to get full access to our chat board, our trading floor with all our traders in the room. So you're going to see what we're getting in, getting out, what we're watching. We're going to give you alerts that you're going to get. You can use Telegram, you can use X, or you can use our custom alert service that we use. You're going to get weekly educational classes. We get some of the best well-known podcast people out on a podcast. We do workshops over the course of the day. So, people tell me they spend thousands to take a course like this. We're giving it away for $9. Okay. All you need to do is click on that link, take your phone and scan that QR code, one or the other, whatever's easy for you. Now, these are everything that you're going to get. And by the way, if you're not happy, I'll give you $9 back. Okay. Listen, the $9 just tells us that you say who you are. And I feel like, gives you a little skin in the game. We got a few hundred people that are in here right now. So the thing is, remember what I told you, fellow traders, if you can't afford it, if you're paying for free, it's obviously too much. You just want a good deal. So we're giving you the best deal as possible with the money back guaranteed. And I'm going to do one more bonus I'm going to throw in there. If anyone here does register, I will personally give you a free coaching class. So you could talk to me only unless you've been in the room, because there's nothing to talk about if you haven't been in the room. So if you do register, I'm going to do that little interview with you where we're going to go out there. We're going to talk with you. And I'm going to basically, if you have any questions, I'm going to personally answer them for you. Because the thing is this, if I'm out there, if you want to be part of our team, you're obviously going to have some questions, and there's no better person to ask than me, not somebody else. All right. Now, before we go, we bring Anka in here. Does anyone have any questions? Any questions? One of you did ask me, if you can't start next week, don't worry about it. Just buy it now, and you can always do it for the following week. Okay. Do you need a brokerage account to do this? No, you don't. You don't need a brokerage account. We don't want you to trade. We only want you to watch. We don't want you to judge us on our winners. We want you to judge us on our losers, how we control them. That's the big thing. Kyla, what is the price after that? It all depends on, do you want to do classes? You want to be in the trade room? I could tell you this, Kyla, don't worry about don't worry about next week. Let's worry about today, right? Let's worry about today. Worry about the $9. Don't worry about the $10, the $100, $1,000. Just worry about this. Okay. Do you get access to the trading room and classes during your trial, Prince? Yes, you do. Absolutely. Prince says, I'm in a different country. How will I get access to join the room? Just click on that link and you can register online. If you have any problems, you can always call us. What other, anybody have else? Now, before I bring, because like I said, we got just about a couple of minutes left. I want to bring Anka in here, which could be our next guest. Guru is going to be coming on here. But just remember, we're going to ask you, just when you go through it, you're going to book an appointment. You're going to talk to an education advisor. He's going to walk you through, show you what's going on in the trading room, and then you can go from there. But just sit that back and enjoy. All right. So, but very important, I got to go, fellow traders. I want to bring Anka in here. She's a great, great mentor, great teacher, great trader. Had her on for a very long time, many times here at Cyber Trading University. So there's still a lot of training to come along. Listen, we got some great speakers in here. You are going to learn a little bit from everybody. So please go out there, listen to everybody. If you can't pick up for all of them, don't worry, they will be recorded. But you got to learn before you can earn, fellow traders. All right, guys. So I'm going to give you about 5 minutes, and then we're going to bring in Anka in here. She's already standing by, and we'll bring her in the next few minutes. Okay, guys. So don't go anywhere. We'll be right back. All right, traders. I want to bring in Anka now. Before I do, I just want to do a quick little intro, a little bit about her. She's going to be our first guest that is coming in, one of our top gurus. So, listen, I know Anka for a very, very long time. She's been here at Cyber Trading University for many times. She's got over 20 years of experience in stocks and futures. Basically, she's seen almost every market, just as much as I have. And before becoming a full-time trader, she worked as an investment banker and more than a decade, I think, from what I remember. She's highly skilled in technical analysis. She's got a really strong background and, reads charts very, very well because I've been following her for many years. That's why we've been having her. She's also the founder of TradeOutLoud.com, where she teaches traders how to succeed in using a clear, structured system, which is what we all need. She's also leads a live trading room focusing just here on the New York market open, just like how we do here, helps others learn how to trade in real time. She's got a very unique strategy that I find combines what I kind of showed you even when I did, regarding how to use support and resistance, timing, chart patterns, and finding highly probability trades. Now, what makes her stand out that I feel, and that's why I wanted to have her here today, is that she knows how to simplify complex trading concepts so anyone could follow and apply them. She's one of the most respected educators in the trading industry, and we're very lucky to have her here today. So, Anka, thanks for being back here again. I know everyone's very excited to have you. So please
Thanks
share
so
your
much.
screen. You're more than welcome. And look forward to hearing when you have to teach everyone today.
Thank you so much. All right. Good afternoon, everyone, or good evening, or good morning, depending on where you are in the world. Today, we will be talking about swing trading into wealth, whether you want to supplement your income, you would like to generate more income, or if you would just like to build up your retirement account. This is what we're going to be talking about today. So, how many of you guys are really interested in learning how to supplement your income? How not to be worried whether you're going to be laid off, whether something is going to happen, unexpected medical bills, or some life happens. So you need to have a safety net. You need to have a safety cushion. And this is what this presentation is all about. So my name is Anka Metcalf. I'm the CEO and founder of TradeOutLoud.com. I've been trading for over 25 years to be exact, and been trading also on the institutional side for 10 years. I'm a professional independent trader right now that is focused on day trading futures, swing trading stocks, and active investing into the stock market. I run a successful swing trading and stock swing trading room since 2010. And I also run a futures room, which is newer. This is for income generation. And it's designed to trade only the power hour that Fausto was mentioning. And this is since 2017. I also offer education for trading, for swing trading and day trading, and I specialize in high velocity trades. Now, what is a high velocity trade? Is a trade that comes at an inflection point and over delivers and runs into target faster than you can imagine most of the time. Now, did you guys know how much money you need to retire? Well, it's pretty scary because there are a lot of surveys out there. Well, one of the latest ones says that investors fear they need about $2.5 million in retirement to maintain their lifestyle, according to the Legg Mason survey. Did you guys know that that is $2.2 million more than the average balance of $385,000 those individuals actually had in their 401ks or IRAs or similar retirement plans? That is pretty scary. So welcome to the future of wealth creation, and get ready to unlock the fastest and smartest way to grow your money in 2025. I will share with you the hidden secrets of the top 1%, and swing trading is the key to multiplying your money with precision, especially if you have a full-time job or a part-time job, or even you're retired, but without affecting your lifestyle. listen what Warren Buffett said. If you don't find a way to make money while you're sleeping, you'll work until you die. Do you guys consider trading working? Like seriously, do you guys consider trading working? Just let me know. Just type of one. Do you guys consider like looking at charts is a chore? Because I don't consider that. Okay, I absolutely love it, guys. We are so blessed because we're here and we learn about trading and we have this great lineup today that Fausto put together. Exactly, it's fun. Is it fun now to just look at charts, take a charts, and again, learn about making money and having winning trades? Exactly. All right. Okay, we're on the same page. I love you guys. So our objective is to make money, and making money is fun. Making money should not be hard and should not be a chore. If you have a full-time job, we have so many traders that have full-time jobs in our program. Some of them have already retired because of trading. Some of them are just getting ready to retire at the end of this year. But you can trade whether you're on vacation, or anywhere in the world, as long as you have an internet connection and as long as you have a brokerage account and funded, obviously, you can trade. And I mean, even when you're sitting on the beach, you're, instead of, scrolling through TikTok or Facebook, isn't it more fun if you can scroll through charts? Why would you look at what other people are doing and instead of what the market is doing, right? So this is what excites me a lot because you could do it from anywhere in the world. It's not like day trading where you literally need to be in front of the computer, because I am. So that's the reason why I only trade for the first hour in the day. I trade the power hour and I have a system that is designed. I have worked so hard to design this system just to work for the power hour and to make it work for me. And I day trade and swing trade futures and commodities. Okay, in the first hour, but with swing trading, I want to navigate more towards swing trading stocks. I won't even leave that hour behind because guess what? Maybe I want to go to the gym in the first hour. So I'm not going to do that every single year of my life. So you can manage your money better than a professional. First of all, you have huge fees that are charged for your long-term money or 401k. It is a lot of money. Monthly management fees are crazy. They're about $300 a month. Yes, I used to pay $300 a month. I mean, that's crazy, right? Did you know that that is actually $3,600 a year? Now multiply that by 30 years. That's $108,000 in management fees. That's just crazy pants. Okay? So fund managers do not care if you make money or lose money. If you go to Fidelity right now, for example, I don't know why I picked them, but it's crazy. So if you go to Fidelity right now, open an account, or if you, let's say, contact a financial advisor, you know what they do? They take your money and they throw it in an index fund. That's what they do. They don't care. If it's a conservative one, even with the market being up like 20%, 40% in some cases, guess what? Your account is going to be flat. And I had this example. I'm going to this physical therapy and we were talking about trading. We were talking about accounts. And he was telling me, is like, I am so disappointed with my financial advisor. I'm like, what? It was like the market, look at the market, like it went like ballistically, like the Qs went about 40% up from the bottom in April. And then like my index fund is flat. And I'm like, wow, that is bad. And he says that, hey, I've been looking at the market. I've been following the market. I've been looking at stocks like Nvidia and Broadcom and this and that. And like, they're going higher. He said, I think I could do better than him. I'm like, bingo, hallelujah. Exactly, Bill. Exactly. And then I told him about the fees and about this and that. It's like, that's crazy. So he was paying fees for making no money. Isn't it crazy? All right, here's some pitfalls that you can avoid. And these are the 5 mistakes that cost traders thousands of dollars. Now, number 1 mistake is chasing the wrong stocks. You gotta trade the right stocks and not the hyped ones. So stay away from the meme stocks. Stay away from social media stocks. Stay away from everything that is in the media. Those are overcrowded trades. And oftentimes they're going to be a pump and dump. Now, mistake number two, and I could teach you in this presentation today how to scan for stocks and how to build your trading universe. You don't have to watch 6,000 stocks. You have to build your trading universe. What you know, basically look through your credit card statement and just build a list. Are you shopping on Amazon? Well, that should be on your watch list. Are you using Google? That should be on your watch list. Are you going shopping at Target? That should be on your watch list. Are you going to Walmart? That should be on your watch list, and so on. Mistake number two is over trading and burning out. Swing trading is not about over trading. You should not even have like 5 to 10 trades every single month. It's like 1 per week or 3 per week and done, depending on your time horizon and depending on your time frame. Because I typically like setups that are developing on the daily chart and the weekly chart. Now, obviously, the setups that are developing on the daily chart, they probably will have a momentum of about 3 days to 2 weeks. Those that are lined up with a weekly chart, they're probably going to continue for 2 weeks or 3 weeks. So they're going to last a little bit longer. So check your timing horizon, verify your timing horizon, and what is the time interval that you would like to gather these profits. So mistake number two means more trades, more profits, which is totally wrong, because when you have more trades, you're open to more risk, right? You're taking on more risk instead of having a trade and managing that trade. So learn the power of patience. And if you see that, for example, now there is a stock that is into all-time highs, or let's say you liked Meta or Nvidia and the stock just blasted higher, just wait for it to pull back. Put it in your cart, but don't check out, meaning you're not going to press the buy button. Okay, so put everything in your shopping cart that you wish you were in within these past couple of days, couple of months, couple of weeks, whatever it may be. So from the moment it rode higher, because chances are that that stock is going to deliver again. So you don't have to have like a tremendous trading universe. If you have 20 stocks in your trading universe, you're good to go. And that's going to keep you even more focused. Mistake number three is trading without a plan. Now, I know a lot of people out there are telling you like you need to have a trading plan, but actually nobody shows you how to have a trading plan, or they never share their trading plan. So that means that you're going to have random trades. Therefore, you're going to have random results, and you need a proven strategy. So watch what worked for you and translate it into profits. Mistake number four, letting the emotions control your trades. Fear and greed destroy accounts, and a FOMO as well, right? You see something that is moving up, 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 and the moment you jump in, that's the moment when it's going to turn around, right? And here's how to stay disciplined. Have a solid money management plan. So what I do for my account, I used to check my accounts, my swing trading accounts every single day, or my long-term accounts every single day, or every single week, or every other day. It's the wrong way to do it. That is when you have your day trading hat on, and you're more likely to micromanage than to properly trail that. So what I do right now, I don't pay attention to my P&L. So don't trade based on your P&L, trade based on the chart, because the chart is going to tell you how you need to trail it based on the time frame that you have entered to trade on. And mistake number five is not investing in the right education. So most traders fail because they go blind in. Again, they find some gurus on social media and follow them blindly. And don't trust anybody with your money. Do your homework first. So self-directed trading or investing is all about taking control of your financial future and managing your own money, because nobody else can do it better than you. It's your money, so make your money work for you. Swing trading is also generating cash flow. It's also income generating. It's not like day trading where you're in and out the same day, but swing trading, you can close positions like in a week or 2 weeks. So bottom line is that if you need the cash at the end of the month, you could definitely do that. Right? So it offers you that liberty. Well, day trading, if I have a big mega day, I could go, I don't know, to Best Buy and buy myself a TV or something. So income equals wealth, because when you generate income, you're going to allocate, first of all, you're going to grow your account and make more profits, because you're going to increase your risk, you're increasing your R, and therefore your return is going to be bigger. But not only that, but every single time at the end of the month, you're going to cut yourself a paycheck and then you're going to allocate more money to your investing account. Your investing account and your active investing account is going to go towards your wealth. It's going to go towards your retirement, worry-free retirement. Now, the beauty about swing trading and about trading in general, you don't have to be a math whiz and you don't need to have a finance degree. And when I first started trading, especially when I started investing on my own, because I wasn't doing that right from the get-go. And I'm talking about 30 plus years ago. I thought that, oh my God, this is so sophisticated. Only an analyst can do that. Only a financial advisor can do that. Or you need to have a really massive big account in order to start investing. It is not true. And you need to be like a finance guru, a math guru. It's not the case. Actually, the less you know, the better it is. Every year, and this is a big shock to someone, but here's the thing. Every year, stocks will move about 20 to 30%. What? You mean like I could have more money than actually a fund manager actually tells me I can make? Because you know what the norm on Wall Street is right now? 5 to 8%. 5 to 8%. Okay? 5 to 8%, that's crazy. And stocks move 20 to 30% each year. But do you want to know the real truth? Stocks move a couple of times a year, maybe more in cycles, and deliver more than 20 to 30%. That's right. Take a look at this chart right here. I just posted this chart right now. This is today. This is today's action. You can see it right here. This is the Qs. It's trading at 560. And here we have the low that was in March, right? But actually it was in April. Okay. 42%. 42% from here to here. From here to here. Like, this is crazy pants, guys. This is 40%. And you mean Wall Street is not even guaranteeing us, because they never guarantee anything. And they tell us like 5 to 8%. It's crazy pants. Take a look at Meta. From the swing low here in March, right? In March. And this is the April, right? Let's do April. This is actually where I initiated my investing trade here as well on the secondary confirmation. From April to June, you can see here, this is where I exited my active investment, okay? Because I do have 3 types of accounts. I have my swing trading account. I have my active investing account where I don't micromanage and don't take out profits unless the price action violates the pivot on the time frame that I'm trading on, okay? And then I have my investing account. Okay, so from here to here, 58%. That's crazy, 58%, okay? Take a look at last year, okay? So example, because I don't want to show you just this year, I want to show you guys last year as well. 70% plus move in 2024. This is like from November of 2023 until March of 2023, that's 26%. From the low in May all the way to the high here in June, we have another 20%. From the low here in July, and by the way, July is really a hot month towards the end of the month, so we're going to get super busy, and especially as we're going into next week where we have more tech companies that are going to report earnings. And then from this low right here into January of 2025, another 24%. So 24, 20, and 26 right here. That's crazy pants, right? And you can see these swings here. These are swings that you can take advantage of, okay? This is a crazy stock that I posted for my traders, for my investing traders. And we did have, like we always do on the first week of January, we do a forecast where I share a lot of trades free. It's free for everybody to attend. We do it every year and we do it in January. And we do the forecast and we talk about the market and we talk about my favorite stock to hold for the year. And I brought up FNMA. This is the Federal National Mortgage Association. Take a look at where it is right now, okay? So, by the way, this stock, crazy pants stock, very low priced, okay? Because we took it below $4, okay, right here. So, from our entry, from this base breakout, it is up 252%. I don't know, but my IRA account is so super happy right now with this hold with FNMA. And of course, you take some partial profits into here and then you manage the rest. Like money managers and hedge funds live mostly off commissions and fees. You are just an account number to them, whether the stock or fund is performing or not. They get paid. They don't care. So here's an interesting find. Berkeley Hedge reported that over the past 5 years, the average hedge fund in its universe produced an analyzed gain of 7.2%. 7.2%. And you can see here that on this stock alone, I made 252%. Crazy pants, right? All right, so new report finds that almost 80% of the active fund managers are falling behind the major indices. What? This is not good news if you have your money invested with somebody else and you're not managing it yourself. And if you have a 401k that you're not revisiting, you can manage it yourself. You can manage it yourself. So swing trading is the most effortless trading style because it doesn't require everyday work. Basically 5 minutes a day suffice. But you really need to know and respect the rules of the game, and you need to be patient to wait for the proper setup. You don't buy it into the highs and you don't short it right into the lows. It's all about the trade as much, but a good part of the trade, and I would say one of the most important parts of the trades, is the risk and the risk management. Because if you don't know how to manage risk and risk management, the trade, even the best trade, can work against you. If you don't know where to place your entries, where you place your stops, and when to set your targets, when to take partial profits, or know when to take partial profits, when to lift your stops up, that it can work against you if you don't know how to do it. And it's not hard. So why is it important to get started right now with swing trading? If you have never tried swing trading in your life, start doing it in a simulated account. What are you waiting for? Because the money that is sitting in your bank account right now loses value every single day due to inflation. I don't know about you guys, but look at the inflation that is out there. I was reading a report this morning. It was basically the report from last week, and it was like mind-blowing. It was mind-blowing. Like used cars are going up back again. So remember when we had that issue with the pandemic because the environment that we were trading on and the chip and all the chips shortage and all that stuff. Now the used cars market is going back up. Okay, so crazy. So it's inflation. So everything is inflation. Like go to the supermarket, just tell me there's no inflation. I go to the supermarket, like $100 is like spending $10 5-10 years ago. So who's swing trading for? Well, I say it's for everybody, and it's from age 18 all the way to like 199. So it's for busy professionals who want to manage their own long-term money or trading accounts. And by the way, it's a great hobby because it delivers results. Okay. So part-time traders who don't want to sit in front of the computer all day, retirees that want to supplement their pensions or create more income, individuals of all ages who want a better tomorrow and want to secure their future. I mean, you guys are seeing all of the layoffs. Like I have really close friends that have been laid off, and they're in the financial industry and have been laid off. And they're all like, oh, I'm not finding a job. And even if they go to find a job, like this really, really close friend of ours lost their job, and they're like lowballing him because their company went bankrupt. And they're lowballing him. They're offering him half of the salary that he used to have. Now, that's not fun. That's not fun. So he's sitting at a really nice 401k. He has retirement money. And I'm like, what are you waiting for? Just generate your own income. That's what it is. Anyways, investors looking for faster returns, and entrepreneurs and business owners. So if you're a busy individual or an individual that really doesn't want to sit in front of the computer all day, swing trading is for you. Now, there are 5 steps in order to get started. Step number 1 is to open an account. Do your due diligence. I'm not affiliated with anybody in here, but you could do it from Webull. You could do it from TradeStation. You could do it from Schwab, Fidelity, Robinhood, etc. So find a broker that speaks to you, open an account. Number 2, allocate your risk tolerance. Now, if you have a really big account and if you think that 1% is really way too big for you and you cannot stomach if you would lose 1% or 5% on 5 consecutive trades, for example, then that is not your comfort zone. That's not your personal risk tolerance. That's your heat, right? So you can't take the heat. So if you can't take the heat, don't sit in the kitchen. So therefore, you have to lower it even to 0.5% because we're talking about retirement accounts. You could have 300,000 to 3 million or even more. So depending on your own personal risk tolerance, you could go 0.5, you could go 1%. I have a high risk tolerance to swing trading, and I trade around 4% in my swing trades. The norm says around 2% when I'm day trading because it's much riskier than swing trading, and because you're allocating more risk per day. I allocate 5 trades a day. So that means that I'm allocating 5% from my account every single day. So that is riskier. So in swing trading, you may have only 1 trade per week. So that is that you could go with 2%. Determine your risk tolerance first. Step number 3 is to establish your game plan. Again, like I said, put the stocks that you wish you were in a shopping cart and watch those stocks every single day. Or if you don't want to watch them every single day, which literally doesn't take long to go through the patterns, you could definitely set some alerts to the desired areas, or you could set some fib retracements to the desired areas where you would like to see the pullback. Maybe you want it at 68.1% or at 50%. You could put 2 buy limit orders into that area and just buy there. Put your stop underneath that pivot that is going to form into that area and let it ride. I use a different method, so I set alerts and I wait for the price action to pull back, and then I wait for the price action either to base, turn around, and move back up, or I wait for a pivot to form. So I wait for a buy setup to form in that area. So it all depends on your each individual trading plan. So you got to set your entry, you got to set your stop, you got to make sure that you have a good target in sight, and all this homework is done before you actually pull the trigger. So before you get into the trade. And then all you have to do is worry about risk management, see where your target is at. If the difference between the entry and the stop is really wide, you may want to take some additional profits along the way to lock in some profits, and then be very diligent. Don't be complacent. Raise your stop up as soon as you have a good technical level, so you're not going to get stopped out of the trade in case there's going to be a shake into the market. Step number 4 is create your trading universe. Like I said, you don't need to have and you don't need to scan 6,000 stocks every single day. Just create your own risk tolerance. And a good thing is to go through your credit card statement, through your bank account statement, see where you go, where you shop, where you eat, where you dine, whatever you do, and keep on watching those stocks. I, for example, always have Costco on my hot list. Why? Because I shop a lot at Costco. I'm not a big Walmart shopper. I'm not a big Target shopper. I can't remember the last time when I was in these 2 stores, but I'm a big shopper at Costco. I don't want to go shopping every single day. So when I go for, I don't know, napkins or something like that, I go to Costco and grab them because I don't have time to go shopping. And not only that, but they deliver, and it's fast and free delivery. So I absolutely love it. So a lot of the things that I buy from Costco come to my door for free. So I love their services. So depending on where you are you big on a Home Depot? Are you big on Disney? Are you watching Netflix? So these are, I know, me too. I mean, it's like an adventure, it's like, it's like Disney, right? It's like a Disney park. Anyways, so, entertainment park. So basically, do your trading universe. What I do recommend is be diversified. So we talked about, Costco, Target, Walmart. Don't watch all these 3 stocks, just one, right? If you're watching home builders, just watch one, like Pulte or Toll Brothers, or watch the sector, the ETF, because you're very safe in that as well. So make sure that you're diversified. Watch a tech stock or 2 tech stocks. Watch a home builder or 2 home builders, watch some retail shoppers. So be diversified, a semiconductor or 2 semiconductors. So be diversified, but don't have a really large list. And if you're starting out, just have 10 stocks on your list. This is just an example that I have here, but don't go buy this. Just build your own trading universe. And it's not hard to build. All right, step number 5, create your strategy. Strategies don't have to be complicated, because I hear traders all the time, it's like, oh my gosh, I have to do this trading plan and it's going to be like a novel. Okay, it has 3 pages, 5 pages, 20 pages. Like, no, your trading plan should fit on a little post-it and should be on your monitor. So when you wake up, come down to your computer, punch your computer, turn it on, and then the first thing that you're gonna see before your computer goes on is that little piece of paper that is gonna remind you the risk unit. It's gonna remind you the stocks that you have on your watch list, and it's gonna remind you of your strategy. So one of my favorite strategies is stocks that are pulling back on the daily to the 20 simple moving average if they are extended. So for example, if they are, going parabolic, and if they start pulling back, this is what I like. So let me draw a little thing here. So I really didn't plan this. Okay, so let's say this is a 20 simple moving average. Okay, so now you have a stock that is moving, let's say up, 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 up like this, and up like this. And at some point, you could see that it's so extended to the 20 simple moving average. This is the time when I watch it. Okay. So now that I get a sell setup, meaning a rotation, right? I don't short it here because it's in a massive trend, and I don't know whether it's going to have a shallow pullback or a steep pullback. I don't know anything about it. So I go with confirmation. So I wait for the pullback to happen, and it's pulling back, pulling back, pulling back. And I'm like, oh, okay, this is going to be my interest zone, right? So what I do is I basically set an alert on my platform. When the price is here, if I missed it, I don't care how long it goes and how far it goes higher, I place an alert. This is my alert, okay? And set it on your platform, and it's go ding, ding, ding on your smartphone. That's when you come back to the computer and say, oh, the stock is trading right here. So it's time to watch. And by the way, this is, let's say, the daily chart. Now, the next thing that I look for is I look for the price to reverse. This is a reversal. This is my entry point. So my entry point is going to be above the red candle high. My stop is going to be below the red candle low, because at this time it's going to be a pivot, right? And I wait calmly for the price action to go back into the prior high. This is going to be my T1. This is going to be my first target right here, okay? Usually in my T1, if it's extended enough like it is here, I'm probably 2 Rs in here. I typically take half off, right? Because I want to book some of the profits. And what I do is I start trailing, or I raise the stop. Depending on the price action, I may put the stop at break even on the rest to give it a little bit more room in case there's some volatility spikes. And of course, with earnings season, you are going to get a lot of volatility spikes. But other than that, I'm going to wait for the price to continue into the next target. So every single time when I have a trade, and when I plot a trade and plan a trade, I always look for 2 or 3 or 4 targets, because it's easier to do the homework once than to see the price action, get at target 1, and then I'm going like, oh my God, where's it going to go? Where's it going to go? So I figure out all the targets before I get into the trade. So again, step number 5 is create your strategy. I look for trades that are trending. It's easier that way. So this way you can put your alerts, let's say, or if you're getting a steeper pullback, I use the 20 SMA and I use the 50 SMA. Put your alert at 50 SMA, or you can put both. Trade counter trends for bounces. These are very short term, and they require a little bit more active management, but they deliver fast results. You're either, making quick profit, or you're stopping out. Typically in these type of trades, I like to risk half of R. So if I'm risking, let's say, if my risk tolerance is to trade 4% on each and every single trade, on these counter trades, I'm going to use 2%. So I'm going to limit my risk. Why? Because they're going against the trend. Okay. And of course, the strategy calls for what stocks am I going to trade. So we were going back to that trading universe that I'm going to share with you more in this presentation. Now, swing trading is a sweet spot between day trading and position trading. It allows you time to stay away from your computer. It generates high probability trades, and it offers you the best chances of success, best return on your investment, literally without doing anything much. Swing trading positions will be held from 2 days to a couple of weeks, or you can sit in the trades a little bit longer. Why? Because if you're having a sideways market, And if the market is not going anywhere in general, and especially if the Qs, the SPYs, the diamonds, the Russell are sideways, guess what? Your stock may not go anywhere either, not unless it has relative strength or relative weakness. So swing trading positions are not held for a really long time. And the time frames that you need to focus on are the daily charts and the weekly charts. Nothing sophisticated about it. Now, when you're position trading, when you're core trading, so when you're investing, you have a longer time horizon. So that could be from a few months to a few years, right? Or we're talking about generational wealth, like Warren. Why am I saying Warren Robin? Okay. Next thing I'm gonna say is like Baskin Robbins. Okay, Warren Buffett. Okay, Warren Buffett. So, anyways, so position. So I don't know about you guys, but I'm not so much. I mean, don't take me wrong. Like generational wealth, like seems like a good concept. But if you're like me, I like instant gratification. Just show me the money. So I am going for shorter terms into the market. And I agree. I have some positions that I have been holding for a really long time. And if I tell you that I had a position since Nvidia was at $30 it was actually $26 and change in 2016. That is when I started my first investment in Nvidia, and I still hold the position till now. And it went through splits, it went through a lot of things, but I still hold that position, right? So that is almost 9 years. Okay, almost 9 years. But don't get me wrong, I keep on selling a little bit. When the market reverses, I add back in. So it's not like I'm letting it marinate. I'm not Warren Buffett, okay? And of course, I think it's a really great idea to focus again on higher time frames, monthly, quarterly, annual, even if you're just swing trading, because it gives you like a good idea of projections of how it works and how the trade develops within the higher time frame. But definitely when you're taking longer term positions, your zip code should be the monthly chart and the quarterly chart. So swing trading and investing captures positions from swings from low to highs, right? Or from high to lows, because you can take short positions, all based on technical analysis. And this is what's so great about it, because you don't have to think. When you know technical analysis, you're just going to go by what the chart is telling you. That's it. You're not going to say, oh, I wonder if this is going to go higher. I wonder where the target is. I wonder. There is no wondering. It's just technical analysis. So swing trade is not about capturing the entire trend. So nothing is from the very bottom to the very top, because it's impossible to determine. It's about finding the best possible entry opportunities and profiting from the stock's momentum, up move or down move. So it's basically about the core right here, okay? So it's a simple strategy when you enter the trade, when the price breaks above, right? So just like I showed you on that pullback to the 20 SMA or the 50 SMA, and you're waiting for that rotation to happen, right? This is that rotation. This is the pullback. This is the rotation that is happening, right? So this is an example that I showed you earlier on the graph with the 20 SMA. So let's say here you have the 20 SMA. So here you have the price action extended. It's just pulling back and you're waiting to capitalize on this reversal. And if you've seen the stock like just move higher like crazy, you know, you go like, oh my God, I wish I was in that trade. I wish I was. Well, this is your opportunity. The pullback offers you the opportunity to get in, but wait for the confirmation. Wait for that to happen. All right. So here's another company. This was a mega rally in our portfolio. This is the entry right here. This is where we applied the stop. It's basically a base here. And look at the breakout. It's just phenomenal. And this is our exit right here. Okay. Now, how to select winning stocks, because everybody here is going to go like, okay, fine, but how do I select winning stocks? And it takes a proven system to select these high odds day trades or swing trades, or anything that you may want to hold for a little bit longer term. So first of all, the stock needs to be fundamentally sound for long and medium term trading. So what does it mean? It needs to have the fundamentals aligned with the technicals. Simplifying this would mean look at the left-hand side of the chart and see if it's trending or not, or if it's basing. If it's basing, you don't want to have to do anything to it. Put an alert in case it's going to break out. Put an alert in case it's going to break down if it's in a downtrend. Okay. So basically what you need to do is look at the left-hand side of the chart because that is your history. That is your crystal ball. That's your crystal ball. And that's going to show you what the next momentum is likely to be. So buy stocks always that are on sale. Don't buy anything that is hyped, that is ready, trading into all-time highs. Because if you buy stocks on sale, you take the risk out of the investment and you create the best risk to reward and the best return on your investment. But where to buy? So when certain events happen in the market, events like these events create pullbacks. The pullbacks make the shares of the prices go lower to the level that becomes appealing to the buyer. So what are these events? Well, this is the dot-com bubble, or it's the 2008 financial crisis, or was the 2016 election, or was the 2020 pandemic, or was the most recent one this year. Okay, when we had the Liberation Day. Did everybody remember the Liberation Day when everything plummeted into the market? Or raise your hands or type of one. Liberation Day in April, everything went south. Okay, so guess what? That was a buying opportunity. Why? Because all you needed to do is wait for the price to go down and wait for a reversal to happen. That's all you needed to do. So do I need these events really to get in? Because these are not happening every year or every month. Yes and no, but make sure you leave enough room to add on the dip. So focus on companies that have thrived and survived over the years. Be diversified and stay away from high-risk industries. I typically stay away from airlines, hotels, biotechs, etc. Because if there's something that is going to happen, I mean, you saw what happened with that plane that crashed in India, the Boeing. What do you think the shares did the next day? They went down, right? They went down. Okay. Now, luckily, I'm in Boeing and I'm long-term in Boeing. So I'm not going to exit, okay? Because that happened, because that's a very solid company and it has, it's going to do a lot of business in the near future. But I'm telling you that they are riskier. So if you plan on holding these, you may consider, a bit longer time horizon and take profits quickly. All right. So be in sync with the institutional footprints, because if you're in sync with the institutional footprints, you know exactly where the institutions are. Shortcut. Do you guys want to know, is it okay for you to share with you something that is crazy town simple about institutional footprints? Because you're going to remember like, oh, I got to be in sync with institutional footprints. How do I determine, how do I know when institutional footprints are coming into the stock? Would you guys like to know? Type a yes if you like to know. All right, because that's crazy pants. Simple, 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 simple. All right. Do you guys have volume on the bottom of your charts? Do you guys have volume or volume on the right-hand side, left-hand side? It doesn't matter. Volume. I have it on the bottom of my charts. Okay. When you see the volume increasing at the bottom, they're buying a little bit more. They're buying a little bit more. They're buying a little bit more. So these are elephant footprints. Okay. They're called elephant footprints. So they're tapping, 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 tapping. So they're going up, right? Let me see if I have an example here. No, I don't. Let me see if I have an example here. Okay. Let's take a stop. Let's for example, NVIDIA. Okay. NVIDIA. Do you guys see here? Like, look at this. The volume is going up, 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 right? And you can see that the price is moving up. Now the price is sideways. The volume remains sideways, right? And you can see here that we have like this plateau. So this means that there aren't any institutional buyers yet showing up at this point. Anyways, this is, the best example that I could find right now, because I wanted to show you, because a lot of traders are, it's like, how do you find out where these footprints are coming, when these footprints are coming? Okay. Another one. Okay. Okay. Yeah. BULL. 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 Okay. Take a look at this. Institutional footprints. This is an institutional footprint. This is a huge volume spike. Price is going to go up. Okay. Price is going to go up. All right. I'm in this one. All right. So let's continue. Is it hard? Oops. Sorry about that. Okay. Is it hard, guys? Is this like rocket science? Is this something like, oh my God, I can't do it? This is simple common sense. Okay. Simple common sense. So all you have to do is follow the cycles. Let it move up, let it pull back. Let it move up, let it pull back. Okay. This is what it's all about. Okay. Now, different kinds of stocks. As you know, there are growth stocks, value stocks, income stocks, blue chip stocks, penny stocks. I stay away from penny stocks, but I trade growth stocks, value stocks, income stocks, and blue chip. My favorite are blue chip stocks and income stocks. These are my two absolute favorite. Of course, value stocks are wonderful. Those are the ones that are providing you with dividend, you know, like Broadcom. I love Broadcom. I swing trade Broadcom. I invest. I think like in one account, 80% of my account is Broadcom. And I'm kidding you not. Okay. So how to select winning stocks. So when it becomes to trading, no one has a crystal ball. It's just 99% work. Is it hard work? Heck no. Are you kidding me? No, it's not. And it's 1% fundamental. Do you guys know what the fundamental side is? Okay. Fundamental side is basically you have to know when earnings are coming out. Okay. So for example, Tesla earnings are coming up today. So do you think I want to buy Tesla right now? No, because for a swing trade or a day trade, yes, I can day trade it. But for a swing trade, can I swing trade it now? It wouldn't be wise, not unless you want to do options. Okay. But it wouldn't be wise to swing trade this stock now. You would have to, exactly, Bill, you would have to wait until it reports earnings and let that earnings day close and then take a decision afterwards. Because if it's going to pop up, so let's say, okay, Tesla is going to report earnings after the close. Tomorrow, it's going to open. Let's say it's going to have great earnings. It's going to gap up, right? Wait until tomorrow closes. And then usually a lot of time, exactly, absolutely, Bill. Stay away from it. You love your capital. If you love your money, that's called capital preservation. Don't trade anything that reports earnings the next day or within the same week. So tomorrow, if the stock closes green, buy it above the high, place your stop below the low, and take it for a swing for a couple of days. Easy peasy strategy. Okay. All right. We don't have much time, so we're going to rush through this. Trade out loud. Selection criteria. You have to have a good history of earnings, 3 years minimum, with at least 3 prior quarterly earnings beat. Is that hard to determine? Heck no. Let me show you how you do it. Okay. So you go on this stock, right? Let's go to a different stock. Let's go NVIDIA, for example. Let's go to the Max 7. Okay. This is the ex-dividend date and this is the earnings, this horizontal line, right? So what I'm going to do is I'm going to squish it up right now and I'm going to look at these orange lines and I'll look, okay, so it reported earnings here, it pulled back and then it rallied. Okay. So what did it do here in February? So in February, it pulled back and it started moving down. So one calibrated and started moving higher. One really missed and it's moving lower. The other one missed and it's moving lower. This one missed and it's moving lower. Okay. So you can see here that it's not a great idea to have an investment or a swing trading strategy based on earnings, right? Or to buy it before earnings just because it's NVIDIA. So it really doesn't matter. Okay. What stock, it could be Broadcom. So you have to have a history of good earnings, 3 years minimum, or at least 3 prior early quarterly earnings beat. You just look at a chart. It's no big deal. Okay. Look for companies that make a splash, have new products, services, launches, etc. You know, like Facebook or Netflix. Technical charts, trade with the trend. Look for those volume, right? Remember the elephant footprints, spikes in the volume ranges, near all-time highs, fib locations. Look for volatility contraction. You know what that is? Really tiny, narrow bars. Okay, not narrow bars. When you have a pullback and when you have big bars, let's say into a moving average, and all of a sudden you see these really tiny bars, oh, that's volume contraction. Remember, the biggest moves come from these really tiny small bars that are going to offer you really tiny risk where you can load up on tons of shares. And also positioning with sector or index leaders, laggers, or relative strength or relative weakness, leaders or laggers. So pick strength for maximum momentum to higher and weakness for maximum momentum to lower. What do I mean by that? If the cues are strong, you're going to pick stocks that are blasting higher, that are on fire. And if the market is weak, choose the weakest stocks because those have the tendency to go faster, lower than their index, than the SPYs or the Qs and the diamonds or Russell. And the same with the strength. The strength, if you have strong Qs, pick a stock that is stronger than the Qs because that's going to over deliver for you. And number 6, institutional participation accounts for 85% of the market volume. So you have to trade with the institutional money flow. Pay attention to block trades, dark pools, etc. Those are a really good idea as well. So when to enter a trade, focus on the cycle. I told you about the pullbacks. I told you about the entries. I told you about the rotations or the breakouts. These are key. Also, a quick set of rules, trade stocks that have relative strength and relative good volume. Stocks that have a pattern of beating earnings, there's always a good, like PLTR, like Palantir, right? Like look for stocks that are super strong. Ideally trade stocks that are above the 20 SMA and the 50 SMA, because if they're below, they're going to find the 20 SMA and the 50 SMA as roadblocks, and they potentially can get rejected at that zone and continue lower. Look for confluence zones, overlapping of key locations from multiple time frames that will generate the velocity of the move, meaning it will propel the price faster into the targets. So you're not a sitting duck in a stock. Stocks ETFs must have at least 1 million shares traded every single day. I don't trade stocks that are not trading 1 million on a daily basis. Look for sharp pivots sharp pivots typically have increased risk of failure than rounded bottoms or consolidations. Those are really steady. So I'm here to invite you to my stock swing trader. We have this is basically the oldest service that we have. It was created 10 years ago. Let's make 2025 our most profitable year. This is what Robert was saying. He said, Anka, you're the real deal. Thank you for the hard work you do. And by the way, the stock just literally blasted higher. We made like a killing in the stock. You could see our portfolio with this. So thank you for your hard work. He had 100 shares of Palantir that paid for his early membership. He's in it for life. Here's another trader, Nate, that he was able to take his family on vacation, and he's able to make his money work for you right now. And here today, I have a special offer for you. So you're going to get the Stock Swing Trader, which is the oldest service that we have here at TradeOutLoud. We have a lot of members into this service. You're going to get an email that is delivered every Monday night where you're going to get comprehensive market analysis, macro to micro. You're going to get the market focus and themes. You're going to get sector performance. You're going to get market performance, technical market overview and trades for the week video, which is included. You're going to get your earnings calendar. You're going to get your economic calendar and the impact for the week. You're going to get access to a real-time performance portfolio in real time. You're going to get a pre-launch access to my investment picks. This is a service that is going to launch later this year. You're going to get a private X feed that is going to deliver you information as we go for the market in general, for the stocks that we're in. You're going to get the platform layout in case you're trading with Thinkorswim. I can share with you the platform. You're going to get personal support if you have a question about a stock or a stock that you find and that you're interested in, not necessarily that we are in, but you can actually go in there. You're going to get the risk sheet, risk calculator, money management cheat sheet, so you know what to do when you hit targets. So this is a Stock Swing Trader. Usual regular price is $299 a month. Now, for this presentation alone, for the next 24 hours, it's $97 a month when you sign up, and then it goes back after a month to $299. And thank you so much for posting the link already in the room. And when you follow the link, you're going to get to this page right here where you're going to find more information about the program and what you get. So make sure you visit that. This is the sample newsletter that we're sending out to our traders. This is the video. This is the link to the performance portfolio. This is the performance portfolio right here. And these are all the trades that we have been posting. And by the way, and these are the latest trades that we have here. This is July. And if you are interested in seeing our performance since 2020 to 2015, wow. Okay, you could go to our website, but remember here you go under services, the stock swing trader. You have to scroll all the way to the very, very bottom where you see here view swing trading performance. You just click on this and look at the tabs right here. Oh my gosh, 2012. Since 2012, 12, 13, 14, 15, all the way to 2025. This is crazy pants. Anyways, so bottom line, you have access to this X feed, which is for members only. We have over 400 traders into the program. Some of them are following X, some of them don't like X and just follow this. You don't have to follow both, but if you want that extra hand holding for you, you could you have this information right here. So you can see that we update here, closing Google at 190, another choppy day, blah blah blah. I added to my LNT trade queues out here, and here are a lot of information. Here you can find a lot of information only about trading. You can see here tons of information of charts, of market knowledge, etc. All right, so this is it, guys. Thank you so much, everybody. All right, I'm ready. Thank you. Thanks so much, everybody.
Anka, thanks so much for being here, and it's always great to hear all the content that you had regarding about all the trades going on. It's been really fun. Everyone, take up our offer. I mean, like I said, it's a good deal, and like anything else, you got to learn before you can earn. But thank you so much for being here today, and look forward to having you back here again at Cyber Trading University.
Thank you so much.
No problem, Anka. And everyone, let me just go out there and just share the screen really quick. And hold on 1 second. There we go. Let Rich just take over. All right. Go. All right. So we have about 2-3 minutes as we were sharing the screen. Oh, hold on. Oh, there we go. Okay. All right. Sorry about that. So, yeah. So everyone, we're going to have our next speaker just coming up here, just about a minute or two, but just kind of a quick little recap of the market. Today's actually going to be a pretty big day. A lot of earnings coming out going into this afternoon for some of you. And so we always love doing these events during these times of the year. But today we got Google that's coming out. We have Tesla, AT&T, IBM, Chipotle, and then tomorrow we're going to have a pretty exciting day. NASDAQ is going to come out with earnings, Intel, Honeywood, American Airlines, and a lot of those industries should get affected by it. But today I'm really looking forward to see what happens regarding about these certain stocks that are moving like Tesla and Google. But what's great about these understanding what's going to happen with the market, there's no better way of learning how to trade the market than having the right platform out there to use. So what I like to do is I like to do a quick little intro and bring a very, very good friend of mine that I know for several years. He's been doing I'm saying several years. It's got to be at least, 20 years maybe, I would probably say. So Jeff Gibby is, basically a very, very great presenter, great educator over there at MetaStock. Been there for almost 30 years. Jeff, I known him at all these events that I've done. I originally met him a while ago at the Money Show. And what was great about having Jeff there is that we kind of hit it off. I played around his platform, and there's so many platforms out there, but there's nothing better than using the MetaStock platform out there. But what's nice about it, he's director of sales. He, basically oversees all the business development, helped develop that platform there. He's also runs a big staff at MetaStock, basically covering, their own products with third-party tools and managing relations with the U.S. and all education around the world. He's traveled all over the world. I mean, every time I talk to him, he's in another country. Just really, really well known on that platform. Internationally, he's recognized as a speaker, regularly presenting an insight on the stock trading and the latest trends like in cryptocurrency. Recently, some highlights that he's done. He basically some hidden gems that MetaStock has done. He shared how to leverage advanced systems, how to customize scanners. He basically has key features sessions that he's been, trading traders worldwide. Jeff has also made some really good strategic, clear, engaging tools, whether to walk through, with real-time market applications, working with other programmers on building tools on that MetaStock platform. But it's been around for a very, very long time. One of probably the oldest in the industry, I'll be honest with you. But he's a great presenter, great speaker. He's a great educator, loves doing these events. And we just love to have him here again and over again, being a great mentor. So, Jeff, did I really blow up your head, Jeff? I was like,
hey, it's good to be here.
It's always good to have you, Jeff. You always look great. So, but thanks for coming here again. And Jeff, I'm going to pass the mic over to you. So I don't know what more I could say about you other than, you're the best.
All right. I'm going to go ahead and share my screen. You can let me know that you can see it. That would help.
Now we see it clear as day.
All right. Cool. And you should be able to see GEV. And Fausto, thank you. It's always great to be here. I appreciate it. Hello, everybody. I'm Jeff Gibby. It's good to have. Thank you for being here. I hope you're enjoying the show today. Today, I'm going to talk a little bit about creating a trading strategy and all that kind of stuff. But before we get going, I make it a habit to make the legal team happy. Let me go ahead and start with this. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse a purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So hope you enjoyed that. Let me make sure I can get my chat open real quick. And it's open. So if you have questions, let me know. I should be able to see them over here. My name is Jeff Gibby. And very, very quickly, I'm not going to read through this slide. You can if you want to. I just want to let you know I started here at MetaStock. It was in 1997. So it's been 28 years now, almost 30 years. And I can't believe it's been that much time. When I started, I would talk to a lot of traders. I started in inside sales. I'd talk to a lot of traders about what they're doing, kind of how their trading is going, and what they were doing, and kind of what they felt like they needed to improve. And that was a really good strategy because what MetaStock is, we'll kind of talk a little bit today, is a huge toolbox that can help traders in a lot of different ways. But I don't want to just talk about MetaStock today. My goal is to help you learn a little bit more about technical analysis. So when I started back in 97, we were owned by Thomson Reuters. Thomson Reuters ended up selling that to Blackstone. Blackstone sold it to the London Stock Exchange Group. And we actually bought MetaStock back from Thomson Reuters back in 2013. So it's been about 12 years. And we made a lot of changes since then. It's been a lot of fun to kind of just be, back kind of working on really what we wanted to work on all along. So from that perspective, the other thing I want to tell you about MetaStock before we get started, we're really, really proud of a few things. One, it's our support metrics. Like if you ever have questions about the software, you can call, you can chat, you can text, well, not text, but you can email, whatever is best for you. They always get really good ratings. The other thing that I like to talk about with MetaStock, when it comes to MetaStock, is the fact that for 32 years in a row, this year, MetaStock's been rated the best software in its price category for technical analysis by the readers of Stocks and Commodities Magazine, or technical analysis of Stocks and Commodities Magazine. So we're pretty proud of that. So you might be wondering what we're going to talk about today. So, and let's go ahead and kind of get into that. I want to basically kind of dive into a little bit about here's kind of what I'm planning on talking about. I think trading plans are important. To me, a lot of people come into the market, they don't have any idea of what they're going to do. They might be in a chat room listening to advice. They might be just listening to what their uncle has to say, listen to the talking heads on TV. I think it's important that when you go into trading, you have a completely clear business plan or trading plan around that. To help you understand a little bit of a trading plan, we're going to talk about Gerald Appel's classic indicator, the MACD indicator. I'm going to talk about how it's calculated, how you use it. I'm going to help you understand that. If you're not familiar with that indicator, hopefully that'll be really helpful for you. If you are familiar with MACD, hopefully it'll be a good refresher for you. But we're going to talk a little bit about testing MACD, compare it to some other methodologies, talk about scanning for trades, and then I've got, of course, a special offers. Michael, I believe the answer to your question about presentations recorded and available for viewing is yes. But I'll let admin actually do that. I did notice that it is being simulcast to YouTube, so I assume that is a yes. And you will receive an email later to the email that you were registered with. Thank you, CTU admin. All right, cool. All right. Little question for you to kind of kick things off. What is the best profession for trading? So actually was kind of going through this, and performer, artist, musician kind of seems like a lot of the same thing. But I'm kind of curious to know what your opinion is for profession. What's a good profession to have before you start trading? Okay, based on a study, is it an A teacher and an educator, a B, an engineer or an architect, C, psychologist, psychiatrist, a pilot, D, or a performer, artist, musician would be E and F. What do you think? And Hacken says B. I'm gonna kind of, over the years, I've kind of worked with, I don't consider myself a trading expert by any stretch of the imagination, but I have been, and I've learned a lot of things from a lot of people. With just the business that we do here, we partner with a lot of really, really good educators. And a lot of the people that I've worked with that I have a lot of respect for kind of fall into a couple of these categories. The first one would be psychologist or psychiatrist. Jake Bernstein's a really good friend of mine. And he started as a clinical psychiatrist. And he has some really, really interesting stories about that. So I think there might be some truth there. Dr. Alexander Elder, also somebody that I have a lot of respect for, wrote Come Into My Trading Room, which is, I think, should be required reading. But he started as a psychiatrist as well. Pilots, there's Greg Morris. I should be able to think of these guys a little bit easier. There's Greg Morris. He was actually a literal Top Gun. He wrote a book called Candlestick Charting Explained, I believe is the title of it. Did a lot of statistics around it. He started as a Top Gun, a literal Top Gun. And he just retired from a few years ago from studying money management, where he managed about $19 billion in assets. Did a lot of really good work in technical analysis. And another pilot that I know is Chuck Hughes. Chuck Hughes actually was a Top Gun as well. So, but in any case, Kara says, I'd love to see that study. Send it, if you want to send me an email, I'll see if I can dig it up. It's jeffrey.gibby@gmail, or sorry, at metastock.com. Don't send me an email at Gmail. I never check it. But jeffrey.gibby@metastock.com, and I'll see if I can find it for you. So do you have some answers? Thanks for all the answers too, by the way. We've got BB, Joe says C, Damon says F, Gabriel says all of them, and the answer, according to the study, was actually a pilot. Okay. And I think that's interesting. Hopefully you think it's interesting too. But I've kind of thought about that over the years in terms of why that might be. And I have some opinions. And I believe most of all, it has to do with discipline and consistency. Okay. With discipline and consistency, as a pilot, obviously, every time you take off, you have a specific checklist. There's a number of things that you go through very, very specifically when you're getting ready to take off, and when you're getting ready to land, and when there's an emergency. A very, very specific list of things that you do. And I think that boils down to discipline and also consistency. And I think consistency is important a little bit as well. And but I think that is the reason that Pilot was the best one on that list. So from a perspective of that, that's kind of the result of that study. If you know this guy, this is a gentleman by the name of Dennis Peterson. And I have some notes on Dennis Peterson here, and I'm just going to cheat a little bit just so I get my numbers right. But if I come into the speaker's notes, we can kind of see what I have here. Usually I print these off, but it's been a busy morning. Richard Dennis was labeled the Prince of the Pit in the futures markets. He borrowed $1,600 from friends and family and reportedly made it into about $350 million in the course of about 6 years. So very famous trader in the 1980s. And he believed that trading was teachable. He believed it was something that you could put together, that you could teach people how to trade. And as long as they would follow the rules, then they could trade with consistency and they could make money. He actually had a friend. The name of the friend was Bill Eckhart. Bill Eckhart totally disagreed with him. He felt that there was a lot of genetic components, that there was risk components, that there were things that you just couldn't teach, that certain people could not trade. And that might be true. But Richard Dennis was like, we could teach anybody our rules. And as long as they followed them, they'd be successful. And if you've heard of the turtle traders, that's what started the turtle traders. They decided that they were going to test it out. And so they hired, or they put some ads in Wall Street Journal. They put some ads in Barron's. They put some ads out there, and they recruited a group of 23 traders. The makeup of those traders, 21 of them were men, and 2 of them were women. But they funded this group of traders. They funded them with their own money. And over the course of about 5 years, you can see the number there, they made about $175 million in aggregate profits. Wasn't just successful, it was super successful. And you've heard of the turtle system or the turtle traders. That's really the story behind that. One of the things that he said, there was a couple of interesting quotes. This, I believe, was in an interview that he did with Barron's. But he's always said, I always say you can publish my rules in a newspaper and no one would follow them. The key is trading with consistency and discipline. So that was Richard Dennis. And there you go. What I want to talk a little bit about today is I think it's important when you trade that you have your business plan in place. I think it's important for you to understand why you're trading, why you're buying any specific instrument, when you're buying it, what price you're going to try and buy it at, what price you're going to sell it at, why you're going to sell it. Are you going to be selling it because of a stop loss? I want to talk a little bit about have a trading plan in place to help you trade with consistency and discipline. Okay, because every trader that's out there, sometimes you're going to make money and sometimes you're going to lose money. And a lot of the little rules, so like when do I get out, are those things that you want to have decided in advance. Because you don't want to be in a trade going, okay, well, I lost X percent today. Should I get out? I've lost X percent again. What we want to do is have a framework. It's so surprising to me. I've been talking to traders for 30 years. And one of the things that surprises me still to this day is how many people just go, okay, I've worked all my life to save this money that I'm going to now trade. And they go in with no understanding of what they're going to do. And they're just going to follow advice. They're going to sit in chat rooms all day, all that kind of stuff. So consistency and discipline. Let's talk a little bit about that. And I think one of the things that's very, very helpful for discipline is technical analysis. And so what we're going to do is we're going to talk about, in very specific terms, the MACD indicator. The MACD is a trend following indicator. It also does a really good job of helping you. KP would guess Bill Eckhart. Good job. Did I say it wrong? I might have. I might have. Anyway, I think I said it right. I lost my train of thought. I'm going to talk about MACD. The reason I like to talk about MACD is it's a very popular indicator. When I decided to kind of focus on MACD, this was one of our most popular videos on the YouTube channel. I understood a lot of people actually were familiar with MACD, but really didn't understand kind of the mechanics of how it worked. And so today I'm going to talk really very specifically about how it's calculated, how you put it together, and that kind of stuff. Damon says the choice for F for musician is because the artist musician is a web thinker and extremely disciplined in knowing how to flow the rhythm and rhyme of the market, or anything that moves even with a broken ribbon as well. I like that. Thank you. Okay, KP said I got it right. Yes, I'm winning today. All right. Gerald Appel, he died a couple years ago, but he was a fantastic technician. He developed the MACD system about 40 years ago and wrote about 17 books on investments. In addition to that, he published a newsletter that was called Systems of Forecast, and he published it for 46 years straight. He also, and I thought this was interesting, so I included in like his bio blurb, he published 5 books on photography, which I thought was cool. So let's talk a little bit about the MACD. Like I said, it's a trend following system. I think it has some advantages. It's objective. Okay. So in other words, we're not trying to make decisions about what we think the chart is going to do. We're not making decisions about what we think or is going to happen to the market, whether it's like the tariffs or quantitative easing or the housing crisis, or you name the emergency of the day. And I've been around to know that there's always emergencies that come and they go. And I love the saying, don't let a good emergency go to waste. But what we want to do is we want to figure out an objective way to look at the market, whether that's with MACD or not. We want to be objective about our analysis. Another really good friend of mine, Steve Bigelow, would always say the fundamentals of the market don't matter. It's always the perception of those fundamentals that matter. It's how investors perceive that fundamental is the biggest thing that matters. So it's objective, it's easy to interpret, and it helps with the overall trend and momentum of a stock. So in any case, let me go to the next one. With the MACD, you're going to find that it's a little bit prone to whipsaw. It's also a lagging indicator because of the way that it's calculated and the way that it's constructed. So let's go ahead and talk a little bit about how it's constructed. I'm going to talk specifically about how it's constructed, and then I'm going to talk about the 3 major ways that you can use MACD in your trading, or the 3 main ways people use MACD in their trading. So when Gerald Appel developed the MACD indicator 40 years ago, I just had the number. He didn't use those whole numbers. He used a 0.075 exponential moving average, and he subtracted it from a 0.15 period moving average. And for the purposes of kind of simplifying a little bit, the closest whole numbers that actually works out to is a 26 period exponential moving average and a 12 exponential moving average. By the way, I usually say this a little bit earlier, but if there's a stock you want to look at, type it in real quick, because I generally don't kind of pick a perfect stock, or I don't generally cherry pick. If you have a stock you want to look at, I'll teach you MACD with your stock. Just let me know what that stock is. And you want to do it real quick because I'm going to jump into the charts right now. So if I want to figure out, I'm just going to give a few minutes to answer. I'm going to kind of stall a little bit, but talk about what other things. If you wanted to figure out what an exponential moving or a MACD is, the MACD line, what you're going to do is you're going to basically take a shorter term moving average and subtract it from a longer term moving average. And to get close to the MACD value, 26 and 12 would give you the built-in value. CARE was first with TSLA. Okay, let's look at Tesla. What about it? I haven't looked at it yet today. Okay, I'm just going to open it up. We're going to have a pretty clean chart, just candlesticks, and we're going to add some moving averages to this. I just want to kind of go through, specifically talk about the calculation method of this. Let's go ahead and do a moving average. Okay. Oh, right here. I'm going to kind of walk a little bit through what we're doing, because I do also want to kind of talk about how easy it is to use MetaStock as a charting platform. Right here, we've got Tesla. I just opened up the stock of Tesla. Got a pretty blank chart, which is candlesticks. I prefer candlesticks, but you can use bars. You can use point and figure if you want. You can use Kagi, Renko. There's plenty of different charting styles that you can go with. What I'm going to do is right here, this is my indicator quick list, and there's like hundreds of indicators. This is something we've been working on for a while. Hundreds of indicators you can use. For the purpose of what we're talking about today, I'm going to do the moving averages. So we're going to go ahead and move a moving average onto this chart. To do that, I just drag and drop. We'll go with a 26-period exponential moving average. And I'm going to go ahead, let's make it blue, and I'll make it a little bit thicker. Go ahead and put that on a chart. And there we go. I'm going to do that the same thing, but I'm going to make it a 12-period exponential moving average. Okay, we'll click OK. And then I'm, of course, going to add MACD. And I'm going to go ahead and kind of just find MACD on here. I can just find any indicator I want just by searching it, typing it up here. We'll go ahead and add the MACD to the chart. I'll automatically put it on the top. And just so I don't have to come back into these in a minute while I'm in here, I'm just going to make the lines a little bit thicker so you can see them. I think seeing them is important. Also, there's, oh, I didn't want it. Actually, let me back up a little bit. I want to do MACD histogram instead of just MACD. So let me grab it. I was wondering why there wasn't a histogram line in there. Okay. And let's just make these all a little bit thicker. Okay. And there we go. I want to move this up top. So I'm going to grab the whole thing. We'll drop it up here at the top. That's not what I meant to do. All right. All right. Let's do it this way. Okay. First try. Okay, I'll go ahead and close out some of these extra windows I opened on accident. So the main line that we're talking about right now is this MACD value. This is called the MACD line. Okay. And to get that line, I would take this shorter term moving average and subtract it from the longer term moving average. And so if you're familiar with moving average type systems like moving average crossovers, a lot of the things that you intuitively know from that system you can apply to a MACD. So, but let me be specific about that, okay? If Tesla is kind of climbing up, if it's getting stronger, what is going to happen is the shorter term moving average, this red line, which I'm going to make a little bit thicker real quick. This red line is going to be moving closer to price. It's going to be moving above the lower line. And since this is a subtraction, when we start to move up, we're going to start to get MACD, a positive MACD value. Okay. When it starts to move back down, MACD will fall, et cetera, et cetera. Now, because you're comparing the two moving averages, the faster that it's moving, like if we have a really big dynamic movement here, the bigger you're going to have your MACD peak. Okay. If you have a very dramatic movement downside, you're going to have a very dramatic fall of the MACD. Okay. So you can look at it, and that's the way you kind of measure momentum. If you're in I'm going to call this a somewhat sideways period that we've had, I don't know, since about May or so, what's going to happen is your MACD is going to be a lot shallower. It's not going to be quite as dynamic. Okay. That's it. Okay. So that's a MACD line. This is a daily chart. Okay. Thank you for asking. Damon says, investor sentiment is what moves the market more of less actually in addition to how the economy looks, which actually is a reflection of market orders. Okay. Let's talk about the second line. So that's the first line, this red line. You've got a dotted blue line, and Gerald Appel called that the signal line. That's the MACD signal line. And if I wanted to tell you how to calculate that, it's super easy. All I'm going to take is I'm going to take the value of this MACD and I'm going to apply a 9-period exponential moving average to that. So right now, when we're looking at MACD, we're looking at 3 moving averages, a shorter term, a longer term, and then a smooth one on the MACD. And that's why it's a lagging system, okay, or a lagging indicator. It reacts to what the price is doing. It doesn't try to anticipate it, except for when we're looking at overbought, oversold, which we'll talk a little bit more about. The reason Gerald Appel called it a signal line is when we cross down below, like let's say right here, we're in a bull. Well, okay, let me back up a little bit. When the MACD is above its signal line, the MACD is bullish, okay? When the MACD is trading down below its signal line, the MACD will be bearish. The crossover at where the MACD crosses from above or below to above in this case, that would be a bullish signal. That'd be a classic MACD buy signal. Okay, so we could see right here, if we look at where that crossover happens, that would be where our bullish point is. Okay, we had a crossover back right here. That would be a bearish crossover. That would be a signal to exit your position and get short. Okay, I like this because it's objective. I'm going to actually attach a different tool to this chart. At MetaStock, we call it the Expert Advisor, but it's going to kind of help me just kind of help you visualize this. So what I'm going to come in here, this guy in the bolo hat, we call it the Expert Advisor. I'm going to go ahead and attach the MACD. So I just type in MACD here. There's a couple hundred different systems. I love the Expert Advisor. There's stuff in there that'll identify classic candlestick patterns for you included. There's an Expert Advisor that'll show you the Ichimoku. There's one that'll talk a lot about gaps, momentum indicators. There's one that are based on John Eller systems. There's systems that have been tested from a lot of publicly available sources. There's a couple hundred methods that are in here that are ready for you just to apply to the chart so you can start getting signals. I'm going to go ahead and attach MACD though. So I'm going to, we'll do MACD and go ahead and click on attach right here. We'll go ahead and click on close. And then we'll kind of just reiterate what I was just talking about with MACD and the signal line. Okay, right here, you had a crossover of the MACD and the signal line that generated the buy. Here you're in a bullish phase. For a few bars here, you had a cross back down. You can see it right here, then a cross back up. Here you got a buy signal and a sell signal. And so it just tells you when the MACD is bearish and bullish, and it'll also tell you where that cross happens or where that buy signal happens. Before I forget, because I'm jumping ahead, right here, we've talked about the MACD. We've talked about the signal line. The MACD histogram was developed by Tom Asprey. Okay, it wasn't developed by Gerald Appel, but the only thing it is it's a subtraction of the MACD and a signal line. So you can tell when it goes down below zero that you had a cross. You can tell what the difference in the separation of spaces by looking at the MACD histogram. But it basically, just if I wanted to tell you how to calculate that, it's this minus this. It'll give you this. Okay. And if we're looking at that, we can know where the crosses are because the MACD histogram will go from positive to negative. Okay. All right. Got back to where I was. Okay. So that's the first, to just recap where we're at, that's the first way you can look at MACD. The first common way people use MACD is with a signal line. Is the MACD bullish or bearish? If it's bullish, we anticipate the stock will go up. It doesn't all the time, but if we expect the price to go up, our natural reaction would be to buy it. If it's bearish, we expect it to go down and we'd get out of a position and go short. Okay, very, very straightforward, very simple. Hacken, thanks for the compliment. I appreciate it. Do you see a crossover as a breakout confirmation? You can interpret this any way that you want. My goal is to kind of help you explain how it is, but the crossover would be a classic buy signal. So that's the first method as how we would look at it. The second method is as an overbought, oversold indicator. And I think it's important when you start to talk about overbought, oversold. The saying that comes to my mind whenever I think about overbought, oversold is that the market can stay irrational for longer than you can stay solvent. Just because something is overbought or oversold doesn't mean that it's going to turn around. And these blue areas on the chart, you see right here where we have blue areas on the chart, that's when the MACD is giving us an overbought, oversold reading. So we can kind of look at the chart here. Now, the way that we word this in the commentary, I think is important because I always think with an overbought, oversold type of an indication, you should wait for confirmation. Because again, just because something is in a trend and has gone pretty fast doesn't mean it's going to reverse. You want to wait for confirmation. And I thought, I didn't write this, but it was written before I got here. But the way that they word it is very, I think, important here. So this right here, what I just opened up, this window over here is the MACD. Okay, we talked about the signal line. I want to point out this arrow at the far right hand of the chart. This is the day that this commentary is looking at. Okay, and what it's going to say is point to my screen like you can see it. Currently, the MACD is bullish since it's trading above its signal line. Since it went bullish, it's increased about 4%. Okay, so from right here to right here is about a 4% move. What I want to do is move this commentary back so that we can kind of see what it said when the market started to get a little bit overbought, oversold. So let me move this over. I'm going to move the arrow here. And now this arrow right here at the top of Tesla. This is the post-election rally. Let me be careful with my alliteration there. This is the post-election rally. And what it says, the MACD is in an overbought range, but prices may continue to move higher for some time, wait for prices to move lower before making any decisions to go short. So if you're looking at something and something starts to get overbought, oversold, my general rule of thumb, I'd say my advice, but my general rule of thumb is to kind of maybe get a little bit more protective, but I always want to wait for confirmation. And that would be either by prices moving lower, which they started to do, or waiting until you get that MACD crossover before you totally get out of the trade. And then that's the second way. That's the second way we look at MACD is as momentum, trend and momentum. The third way is MACD divergence. And I wanted to go back to the slides for just a second. And I kind of don't stay too much in the slides, but I wanted to get this quote exactly. In his book, The New Trading for a Living, Dr. Alexander Elder states divergences are the most powerful signals in technical analysis. When prices make new highs, actually, this isn't part of the quote. When prices make new highs and MACD fails to make new highs, this is called a bearish divergence signal. Dr. Elder has a couple words for that. He calls it the most powerful signal in all of technical analysis, as you can see in the quote that I just read. But he also calls it a breaking of back of the bulls. And you can have a bullish divergence or a bearish divergence. I'm going to draw it on the chart, and we'll kind of see if we have one on Tesla. And I'm going to be very specific about doing it the way that Dr. Elder teaches how to do it. Hacken asks, are certain timeframes better suited to MACD, given that it's a lagging indicator, like a 5-minute time frame would be more helpful than a daily time frame, especially for day trading? That's a really, really good question. And you can actually test that. So like you could go in and say, how does it work on daily? And you could look at we'll get into this a little bit more. I personally like to trade on dailies. That's just the way that I trade. I do a lot of work as part of my real job, and then I do a lot of trading too. But I call it research when I'm trading. But one of the things that you should do with any methodology is test it and see how it works. And we'll talk a lot more about that. I do think that if you're looking to find smaller moves, you would look at a smaller time frame if you're looking to hold shorter times. But I also find that there's a more inherent difficulty when you're looking to try to find those shorter moves. So for somebody that's scalping, yeah, and absolutely a lower time frame would make sense, but test it. Okay, let's get back to divergence real quick. Wayne says, could overbought in an uptrend be an indication of strong buying instead? Okay, so let's look at this chart again. And I'll let the chart kind of answer that. Actually, this might not be, well, actually, it is a pretty good example. And actually, it called the overbought, oversold conditions a little bit. When we're looking at overbought, oversold, what we're looking for is a mean, like an extension from the mean, right? And so generally, we start to expect a pullback. Okay, so if we start to look at this right here, where we had this little bit of a mean reversion, it called it pretty well right here, and it came back, settled down, and continued to go up. Okay, here we stayed overbought for 1, 2, 3, 4, 5 bars. So, and then it pulled back a little bit. In this case, it eventually reversed. But on the short scenario, here we had a bit of an extension from the mean. We had a reversion to the mean, and then it pulled back down lower. So for me, it's just an early warning signal. And it might mean, and you see stocks like this all the time. Roblox is a great example. I think somebody was looking at Roblox earlier. Roblox is actually one of my favorite stocks, but it's gone completely wacky for a while, right? Another person I respect is a gentleman by the name of Bryce Headley. He's speaking here at the show as well. He talks about stocks that go into orbit. And once they start to really move, more people get excited, they get more news coverage, all that kind of stuff happens. The bottom line, in my opinion, in my humble opinion, is that stocks can stay overbought for a really, really long time. And it just doesn't mean that they're necessarily going to pull back. It is an indication of strong buying. So in this case, though, if you're looking at overbought, oversold, I'd say it did a pretty good job of calling it. But like even here, it was overbought until it started to pull back. And there was kind of quite a bit of gains to be still had in that. All right. Tangent complete. Let's talk a little bit about how Dr. Alexander Elder would find divergence on a chart. And he likes to look at it from a perspective of where the histogram is. Okay. And I see it perfect. Well, actually, I'm going to do this example here, and you'll see why. I'm going to close this commentary for now. I'm going to go ahead and zoom in just to this area of the chart. So when he's looking at the histogram, let me do the zoom box here. I want to get these two peaks of MACD. I'm going to zoom out just a little bit here. Okay. And now what I'm going to look for, there's a couple components. He wants it to kind of have a MACD histogram peak, which I'd say is right here. He wants it to cross down below 0 and set another peak. So that meets all of the criteria for what Dr. Elder would want in terms of looking at the peaks. I'm going to draw we have a little bit of a measurement tool in MetaStock. And I'm just going to draw a line from this peak to this peak. Okay. If I was going to tell you, there's about a 20% downward movement from this peak to this peak. Okay. From this price to this price, it goes down 20%. Okay. Let's look at what the price does in addition to that, or at about those same things. So if I'm looking at the peaks here, let me grab my measuring tool again. I'm going to drag it from this high to this high. And they usually, sometimes they're not always on the same day. These highs are on the same day. If this was higher, and maybe it is just by a little bit, it's not going to be too terribly important. But if this high is higher, it doesn't necessarily have to be the same bar, just in the same area. So what I can see from this is from this peak to this peak, this arrow, this line is obviously going down, okay? While price is going up. You've got this peak to this peak, okay? Price is rising. That price is not supported by the MACD. When that happens, that's exactly what Dr. Alexander Elder calls the breaking of the backs of the bulls. It's exactly what he calls the most powerful signal in all of technical analysis. And when this MACD divergence happened, that was the very top of what Tesla. And Tesla, this was a dramatic move down. It certainly was. How much should we drop there? About 55%. Okay. So there you go. Those are the three methods for MACD. Divergence, overbought, oversold, and how the MACD is trading in relationship to a signal line. I had to hurry a little bit. I'm getting a little bit too wordy. The things that I really like about this, I hope you learned something too, by the way. The things I really like about this is, did you notice that when we were talking, we were just looking at price? We're looking at the MACD. We're looking at what the price was actually doing. At no point did I say, okay, well, yeah, it had to run up because there was an election. And then it had to run down because of the stuff that happened after. Never were we looking at this because this is Tesla, right? Never were we looking at, okay, yeah, the markets kind of got scared about the tariffs. Everything that we looked at, if I did a decent job, should be duplicatable. It's objective, okay? Are there signals on here that look great? Yeah, that's this one that we looked at with a drop of about 55% looks great. If we would have bought at this signal and sold here, we would have been okay. If we would have sold here and bought again here, that's a losing trade. But everything is objective, which means, how does this work, right? Like it's something that I can actually go in and do. And it's something, because it's objective, I think it's easier to maintain that discipline around it. Because I know if we go down too much, I'm going to hit a stop. The signal line is going to cross over. You know, I know why I'm getting out. I'm not trying to make those decisions. And another thing that I learned from Steve Bigelow back in the day was you can always buy back in if you're wrong, but you can never go back and sell earlier. And I think that was some sage advice. He said it a lot more eloquently than I just did. So because this is objective, I can understand what the performance looks like. Okay. And because it's objective, I can actually test that. And to do that, I'm going to go into MetaStock. So let's do that real quick. I am running a little bit over on time, so I'm going to go a little bit quicker. What I've done already, though, is I've come in here, and there are several hundred systems. There's some stuff that's created by John Ehlers. There's a Turtle Trader system. There's performance systems. There's stuff that's based on the work of the Turtles, Dr. Elder, all kinds of stuff in here. I've actually went through and selected about 105 of these systems. And yesterday we did have a optimized system. I'm going to try and pull that out here real quick if I can just find. I'm trying to remember. Okay, yeah, it was this SCI system because it goes a little bit faster if it's not optimizing variables. I'm just going to test this. I'm going to test it on Tesla. And somebody else said a stock earlier. Roblox has been a great stock. I actually I think it might be Roblox is RBLX. It's had a really good run. I think it might be over though. Tesla and AG. Okay. Okay. So AG was the stock Bill said, and I'm going to throw it in there for fun. All right. What we're going to do is, because this objective, what I want to understand before I kind of we just spent 40 minutes talking about MACD, and admittedly, I blabbed a little. But what I want to understand before I learn about the indicators is, if I'm trading Tesla, how well does the indicators work? Because what's my drawdowns look like? How many times does it win versus how many times does it lose? All those kind of things. And because it's objective, I could go back and I could say, okay, I bought here, I sold. I bought here, for example, and sold here. But I can also have the software do that to me. And in fact, for me. And in fact, I can have it test as many methodologies as I want. And you can create your own. But I've taken about 104 out of these that I know are included in MetaStock. And I'm going to just test them. I'm going to go back 2 years, about 500, exactly 500 bars, or about 2 years. I'm going to say, take every buy signal from these indicators, take every sell signal, and tell me which ones work on Tesla and AG. Okay, I'm going to go ahead and start that system test so that it'll go ahead and run. I believe I have it set to, there's a bunch of different options that you can set. You want to make it as realistic as you can. Some of the options that I've set, and I usually show these options, but again, we want to kind of move a little bit quicker. I always stay within my time. What I have it doing is I have it starting either with $10,000 or $100,000. I don't remember what the setting is in here. I have it trading 75% of its available equity. I have it taking both long and short trades, and I have it executing on the open of the next bar. Okay, so if I get a MACD buy signal here, my entry would be the next day. Okay, because that ensures that MACD buy signal existed at the end of the bar. Okay, you can also do it on the close if you want, all those kind of things. It's customizable, but that's the way that I've got my settings. We just ran about 4,000 different tests. I'm going to go to the reports. I'm going to kind of explain to you what they look like and what they're doing. So these green lines are systems that if you would have traded these indicators and these methodologies over the last 2 years, these would be profitable. The red lines would be unprofitable. I'm going to sort them based on their profit. And we're going to kind of just look at some fairly quickly. Now, there's a lot of stuff that we could dive into, but again, time management for me was not my strong point today. But however, like, okay, if I'm looking at a few of these, we're looking at this is the dynamic momentum index. On the 2 stocks that we traded, it had an average profit of 113%. Our best profit, there's only 2 stocks, so one's going to be best. It was 19,968, and our worst profit was 5. Okay, that's pretty good. There are systems that trade a lot. This one, the MACD expert system, traded 110 times. That's what we talked about. And so a little bit of this has to do with fine tuning. For me, I don't know, I'd rather make a little bit more money, but trade a little bit less. 5 trades in about 2 years per stock. That's not too bad. That's not hardly anything at all. And 7 is okay too, right? So we kind of look at the average percent gain. We kind of look at, you can look at it, like the wins lost, the amount of trades, and say, hey, does this fit the schedule that I have allotted to trading? Because realistically, I'm not the only one that's working and also trading. I'm not, there's plenty out of you that have a lot more time that you want to devote to trading. You need to find something that matches for you. And to see these numbers, it helps you match. Okay. If I click on view, I can see first Majestic S, which was AG. It made about 182%. On Tesla, it made about 43%. So I could also test like off the entire S&P 500. And then I have all 500 individual bars. However, I only did 2 just for the purposes of demos. But I do want to just stress that I think that MetaStock's system tester is very, very capable. And in my totally 100% unbiased opinion, one of the best out there, just because of the amount of data you can throw at it and the amount of results that you get. Okay. If I drill a little bit deeper, and this is where I'm going to kind of skip a little bit, I can see exactly what my win rate was, what my performance, it was about 91% annualized. If I would have bought and held, I would have made 22%. So we outperformed buy and hold by about 700%. Profit loss compares your open position, your profits versus your losses, closed position. That was 99%. 100 is perfect. Minus 100 is catastrophic. And then our risk reward is open position measurement, 92%. Okay. We can look at, this one only had one loser. It was my $130. But we can look at kind of our average gains, our biggest gains, how many losses we had in a row. We can get a feeling for how this worked. We can also look at our equity curve, okay? Kind of see how that worked over time. On AJ, it looks really good. Like we don't have a big roller coaster. There are some ups, there are some downs. This was probably our loser, right? Like, but we can kind of see how consistent that is over time, okay? If I wanted to learn this, I'm just going to throw it on the chart real quick, and then I'm really going to have to just grab. But I'm going to throw this on the chart. If I wanted to learn the rules that fed this, it was the dynamic momentum system. Out of those 100, that was the best for AG. I would say that it's important to learn the rules for it. So I'm going to attach that expert advisor. I'm going to come back up here to the expert advisor. I'm going to go to the dynamic momentum system. And we were on 3. So go ahead and attach that to the chart. And if I just open, it'll show us when we're long and when we're short and when we bought and when we sold. If I come to the commentary, though, it's going to tell us how this is kind of getting to its buy and sell signals. And this one was developed by Tushar Shanley and Stanley Kroll. It's based on the Dynamic Momentum Index, which is an RSI that automatically adjusts its own time period. It's an auto-adjusting RSI. It enters along when this happens and a short when this happens. So I know what indicators are feeding it. I know exactly what the criteria is. And then I can kind of go in and I could look at the help files for DMI. I could go in and Google DMI and kind of get it, or even ask ChatGPT what it was. But the point is, I don't think you should use system testing as a way to excuse yourself from learning. I think the fact that you understand why that indicator is giving you the signal and how it's getting to that will help you with your confidence, will also help you with your discipline. But by testing, we knew that this would work well. And so we can focus our learning on what actually works instead of learning about a whole bunch of stuff that isn't going to be applicable to us. And I think that's very, very important. Time. All right. The last thing I want to talk about, and then we'll kind of talk a little bit about the offer, is scanning. And I think above testing, the ability to go through, like let's say we like that dynamic momentum system, right? And let's say on this chart, there wasn't an opportunity today, and I think that's true. Obviously, we would have got our short signal back here. We exited. There's not a signal for us to go long or short right now. But if we want to find something, let's say we find something that we really like, or we want to be able to scan for stocks that are going up or down. The thing is with the MetaStock scanning engine, you can scan anything you want to. And I mean that in a fairly literal sense. There are a couple of exchanges globally that we don't have, but if we have a few hundred. If you wanted to scan this on the NSE in India, you can, London, coins, futures, equities. If you want to scan all the optional stocks, you can. And one of the things I really like, Price might talk about this today, is like, as a trader that's also trying to kind of maintain a professional work balance, what I want to be able to do is very quickly go in and identify those stocks that have an opportunity and ignore those ones that don't. And so I could set up a scan right now and have it run against the S&P 500 and tell me exactly what the opportunities are. And I think that's one of the things MetaStock does absolutely best. And again, my completely unbiased view. Okay, let's kind of go in though. Let me start to wrap up. I need to. I did talk a little bit about how MetaStock's been rated 32 years in a row the best software in its price category. I love it. I trade very actively. I don't think I could trade without it. Literally. I would recommend that you try it. And we have some pretty good offers that are available for you. Very good offers for something that's been rated. One of the things I like to talk about with MetaStock is I don't think it's a software you're going to ever grow out of. There's so many different things you can do with it. You can create your own systems. It will grow with you as a trader. We have two versions. We have the MetaStock real-time version, which is a full real-time version. The pricing on it starts at about $210 per month. And it does everything we kind of showed today. Okay. It also offers a institutional quality news service as part of it. The news service that it offers is literally the same news that you would subscribe to if you're an institution, a bank, or hedge fund. It's literally a competitor to Bloomberg. Okay. And that's all included in that price. There are some exchange fees that you can pay if you want full real time instead of delays. Those are fees that you pay through the exchange. And they're like taxes. You have to pay them if you want the real time data. So the pricing on that starts at about $210 a month. The other option doesn't include that really good news service, but it does include everything I showed you today. It's what we call our delayed charts. It gives you a 15-minute delay bar. It'll show you daily, weekly, monthly, quarterly, daily and higher, basically, right? You can do all the testing. You can look at the indicators. You can go in, run a scan in the middle of the day to see if there's anything firing. It doesn't have the intraday capabilities, but it is like it is intraday. It doesn't. You can't look at 60 minutes and 5 minutes and stuff like that, but it does stream all day, and it is only $75 a month. So $74.95 per month. So there's a couple of bonuses I'm going to talk about real quick. We just added a really cool Ichimoku system. I do another class that just talks about Goichi Hisada and the way that he developed for 60 years. In the 1930s, he started. He released it to the public. I think it was in the 60s. That's in my other speaker notes. But a very popular method called Ichimoku, which is I've seen courses that sell for thousands of dollars to just teach you how to use Ichimoku. This will teach it to you. But Ichimoku is a great indicator to help you find buy and sell opportunities, determine bullishness or bearishness on a chart, show future price trends and current price trends. A lot of stuff that you can Ichimoku stands for one chart at a glance. And this was a $400 add-on to MetaStock. When MetaStock, our latest version came out, we just decided to include it as a bonus. So it's a $400 value. We also put in a new gap identification system with the last version, and it identifies scans. It helps you find gaps. It includes volume verification and a simple commentary to help you understand how to trade it. We included ETS, which is a $2.99 value. We included Jake Bernstein's new expansion contraction indicator, which I call the Swiss Army knife of all tools. Yeah, we do a lot of stuff with Jake, but it helps you do like all of the things listed here. And that's just for free as well. We do understand MetaStock's a toolbox. We've been waking up for decades. And I think that's an advantage because when you get into a new toolbox, you're going to kind of want something that you don't grow out of after you learn how to use it, right? Like you're going to want something that grows with you as a trader. But as a toolbox, we want to make sure it works well for you. So we're going to include 14 videos, a workbook to help you get up to speed. And in addition to that, we're also going to have somebody work with you in our support desk to help you make sure everything's set up. They'll walk you through how to run all the scans and set up your charts and do really whatever it is that you want with the software. And of course, you're going to have unlimited access to our support desk. So anytime you have a question, you can reach them by phone, email, chat. And I do think one of the advantages you have with MetaStock, I don't know if you've ever called and tried to get an answer about how your broker platform worked. I wonder how that worked for you. But I really like the fact that we keep more people on our support desk, so we keep in sales and marketing. I like the fact that they're rated so highly so often, and I do think they do a great job. And I think that's one of the things you get when you invest in MetaStock is you get a great platform, but you also get a great support infrastructure that can help you get started. So the offer that we're going to do is going to include all of that and a whole bunch more. If you pay for a month, we'll give you the second and third month for free. That'll give you MetaStock DC. At 75 bucks. You can do this with real time as well. You'll get the delayed market global data. That's everything in the world. You're probably only a market that you're interested in or two. If you're here in the US, it's probably the US. If you're not, it might be Singapore or Hong Kong. We cover all the major markets and you get the data for them. You get that white glove installation support. You'll get Unleash the Power of MetaStock. You'll get the expansion contractions, the other 300 systems that are in there. You get Michael Murmer's ETS, gap identifier, the Ichimoku Master. Just those bonuses alone are about $1,300 in value. We just include them. We want to make sure it's working for you. It helps you identify better trades on a consistent basis, you'll be more than happy to pay $75 a month. And I believe that's why I still use it after 27 years every single day. But I believe that's why we've had customers that have been with us for literally decades. There's people that I talked to from 20 years ago that I helped get set up with MetaStock back then. So what we're going to do, 75 bucks a month. Today is July 23rd. I can't believe we're this far into the year already. It doesn't seem like we should be that far. But for $75, you can use this tool that's been rated #1 to almost Halloween. October 23rd. So, and then if you like it, keep using it, keep getting those trade ideas from it. If you don't like it, you can cancel. And there's no commitment. To do this, you can give us a call, 800-882-3040. We'd be happy to send you more information, talk to you, answer any questions you've got. You go to metastock.com/salesphat. And you can also go to metastock.com/CTU. 3 for 1. And I can't believe I'm almost getting done a little bit early. There are 3 new messages here. I actually might be just on time. I might need to. Yes, Hacken, you can absolutely do the real-time version. When you go to the checkout page, it'll be DC or RT. You just pick the one that you want and just get it up configured that way. So thank you for that question. Thank you for your interest. Fausto, I'm going to turn it back over to you if you're ready. If not, I can tell a joke.
I'm here, Jeff. And you know what? Thanks for being here. It's always been a pleasure having you on. You know what? Everyone, make sure you take up on an offer because, I've known MetaStock for, like I said, it's got to be over 10 years, 20 years, actually. And they got some great features. And obviously, that's a pretty good deal. So, Jeff, thanks for coming again. And always looking forward to have you back here again. Students love you. We love you here. And the market loves you.
I love you too, Fausto. I can feel the love too. Thank you for having me.
Thanks for coming.
All right.
So in the meantime, let me take over the. Let me take over the screen here. I'm going to bring our next guest, Doug, in here really quick. But I just like to just bring you guys up to the market and show you what's going on a little bit before we bring in our next presenter. So a lot of stuff that's been going on in the market. Obviously it's up about 380 points to Dow. S&P is up about 30. And, here at Cyber Trading University, I was just checking in the cyber group room. I know a lot of you guys did sign up to come and join in the trading floor. We're just looking at a couple of stocks right now. One of them is moving up pretty nicely is the UAVS. Stock's up 36%. It's been on a really, really nice tear. Something a little bit more on the less expensive, affordable side for some of you there. We're posting a couple of images here in the trading floor. We're just showing some people, some iceberg orders, a couple of 72,000 share orders out there trying to get out and stuff like that, which is, if you watched my presentation earlier this morning, I was talking about breakouts and everything else. And right here, I just want to bring this up really quick so you guys could see this. This is the NASDAQ book viewer. And remember, if you did sign up for my trial, and we'll post a link up there again for you. But that's basically, we're looking at the order book. Everyone here is going to be able to get that book. This is directly through the exchange itself. It's not the Fausto indicator. And, what's nice about it is you can see the big orders out here. Hold on, let me get my crayons out here, which are kind of hiding. Where are my crayons? Where are you? Oh, there we go. There you go. So guys can see okay. So you can see how there's like a big order has been sitting here for 13,000. Everybody see it right there? Right there, $3. Yeah, he's been out there. 18 orders been out there that whole time. You can see how the numbers ticking down on the NASDAQ book viewer. But yeah, I mean, listen, the big thing about trading in today's markets is just kind of seeing where the orders are. And you could apply this towards options, swing trading, day trading, everything else. But you can see right here on the chart, just want to show you something really quick. You see how the high is right there? See how we just got close to that $3 right there? The reason for that is that big order was out there hovering right there. That's the reason why. All right. So, we're going to keep, and as we bring other speakers in, we'll keep checking out the markets. If any of you here want to look at a specific stock while we're taking a little break, you know, and the new speakers getting ready, we're more than happy to share that with you. But let me bring up our next presenter. All right. So hold on one second here. Let me just get a couple things over here. There we go. All right. So, let me see what I got over here. There we go. That. All right. So I want to bring Doug Campbell in here really quick. And now Doug is a new presenter here at Cyber Trading University, and look forward to having on here. He's been over 30 years of training. In the last 13 years, he's been a full-time supporting of his family and trading profits. He's been running, you know, a company called Right Way Options in a partnership with Hit and Run Candlesticks, where he shares his proven swing trading strategies. And, you know, here at Cyber Trading University, we do a lot of swing trading, do a lot of day trading, and we always like to have, you know, I'm actually doing a lot more swing trading. So I'm really looking forward to hearing what Doug has to say, because great traders never stop learning, especially you've seen what's happened to the market. It's been a good, you know, swing market also. But he has a passion to trade. He's been teaching others and helping traders avoid common mistakes and reaching their success a lot faster than most people do. And he likes to kind of do the KISS method that I like, you know, keep it super simple, you know, and that's a necessary thing, because when you start getting overwhelmed with all these indicators and everything else, all you do is you trade less, and then you obviously don't do any trade. So let me pass the mic over to you, Doug. Doug, could you hear me loud and clear? Just turn on your mic, Doug. Let's get your mic. There we go. Let me up. Just try to get Doug here.
Hello.
Oh, there you are. All right, Doug. Doug, could you share your screen?
Give me just a second. And, well, that's interesting. Here we go. How's that?
There you are. All right, good. All right, well, thanks, Doug, for being here. And everyone, he'll be talking and then for about next 45, 50 minutes, and then we'll bring our next speaker. But Doug, thank you very much for being here. Appreciate it. And the stage is all yours.
Now, I'm not exactly sure how to share my camera. You guys can see me, but I'm new to Zoom. What you're looking at here is just my charting platform here, and nothing fancy or special about what I am or what I do. Just to let you guys know a little bit about me. I am probably the simplest trader that you're going to find. I am a very, very simple trader in what I do. I'm a swing and position trader, but at the same time, I do trade intraday futures on a 333 tick. But what I'm going to show you here today is the simple strategy that I use, and how I've been able to support my family the way I have for so many years. Now, and there's nothing special about me. I am a former Army officer. I built houses for many years in Everett, Washington, in the Seattle area. I was councilman for the city of Everett for 4 terms. So, and I'm telling you this because I'm just like everyone else. I just happened to find a way to make it simple and make some really good profits in the market. Now, if you have any questions from me, because I do this every day, I present in Right Way Options every single day. I share pretty much my entire life with the membership. And you get to see exactly what I do on any given day. So one of the things that I want you to understand that I did a lot of trading in the past with massive number of indicators. Just because I don't show you any indicators here doesn't mean I don't understand them. I even wrote custom indicators, did things like that for a long, long time. But what I found is all that complication wasn't really making me any money, because what I was really wanting to do is I wanted to find consistency. Consistency was more important to me than pretty much anything else, because if I was going to be able to do this full time, if I was going to be able to support my family, I needed to make consistent money in the market. And so that's where this came from. And I want to explain exactly this simple thing that I do, and I just repeat it over and over. So first, a little bit of context. I am a trend trader, and we all know that there's trends all over the market. But when we have been moving in a downtrend, when the stock has been moving into any kind of a downtrend, we can see this pattern over and over and over. We move to the downside here, and it's always this first higher low right there that begins the upside trend. So, and if you're looking for a downtrend, it's always the lower high that sets up the downside trend. So I learned to really become a student of price action, and price action is by far the most important thing to me. And like I said, by the way, guys, I do have the chat up. If you have any questions, please feel free to ask questions as we go along. So with that in mind, I identified just some very simple patterns that repeat themselves over and over and over. So if I have an upside trend, I'm looking for a stock that's moved up, pulled back. I call this a pullback opportunity trade. Pull back, and I'm waiting for the buy signal to occur. One thing that you're going to find with me, what I do doesn't require any predicting. It requires patience. It requires discipline. And if you can maintain some patience and discipline, there's trades all over the place. And you don't have to predict. You don't have to chase. You don't have to rush to a trade. And then the second trade pattern is we've moved up and we've consolidated. So what you're looking at here is Boeing, and you can see the patterns show up here in Boeing, just like I was talking about. We move up, we hold a higher low. I'm looking to get into that trade. I'm looking to get into this trade, following along that upside trend. When that trend starts to shake out here a little bit, I'm going to wait on this until we can make the next higher low, and I'm going to try to get into that trade. And I'm going to try to get into this trade because we're resuming upside trend in here on Boeing. And I just repeat those same processes over and over and over. And I call this the 3-8 trap. Now, the 3-8 trap is just using a 3 exponential moving average and an 8 exponential moving average. And by the way, I'd use the same thing. If you look at my futures chart here, it's a 3 and an 8 exponential moving average. And all I'm doing is looking for those repeatable patterns that repeat over and over in the chart. Now, to give you an idea in this, my win-loss ratio has maintained better than a 70% win-loss ratio for more than 20 years. I have people in my trading room that have learned the 3-8 trap from me. We've got one member that's running an 85% win-loss ratio right now. He only follows 10 stocks. Doesn't require you to be any kind of, you can shape this to whatever you want to do in the time frame that you have. If you want to intraday trade, you can do that, because the same price action, and it doesn't matter, price action is fractal, it's over every time frame. And you can do the exact same thing and repeat it over and over and over in the market. And that's what I've done. I have been able to, in my trading, I have been able to just get really, really good at a couple of things. and repeat those trades over and over and over. So the 3-8 trap is designed like this, and anybody can do this. And by the way, you can do any 2 moving averages and do the same thing. So there, it really doesn't depend on the 3 and the 8, but the 3 and the 8 is the aid to help you see that this pattern is setting up. So first thing, we want trades that are somewhere near trend. So when we follow through on this trend, we want that trade to be occurring somewhere near trend, and we want that trade to be occurring somewhere near support, price action support in the trade. And then what I do is I place a price alert in the chart, and I literally, after I place the price alert, I literally make the trade come to me. I don't predict it. I don't anticipate it. As a matter of fact, I can prove in all of my stats that when I anticipated trades, my win-loss ratio declined. By making the trade follow through here, because I personally believe that price is the most important indicator you will ever have. Price tells us, something I learned long ago from Steve Bigelow, is when you study price action, when you look at price action, price is a reflection of everybody trading that stock. Moving averages, most everything else is lagging. I don't need those anymore because I'm just trading the price action of the chart and the basic patterns that repeat themselves over and over in the market. Okay. INSM. Take a look at that. INSM, trying to create you can see this little cup in here, possible handle coming out here in the chart. If you place a price alert in here, you may have an opportunity here to pick that up. This could create that higher low in here on that chart. The one thing that you do have a challenge in here with is this extra resistance up here. So you'd want to make sure that this trade would qualify for you on the risk reward situation in here. But if it could pop through that resistance, then I say upside. And right now, the market is so bullish. There's so many charts like this that may be just somewhat questionable on the resistance side that play out very, very well in the chart. Okay, so let me give you an explanation of the 3-8 trap. Now, when you look at the 3-8, all it is a representation of price. Now, price action in here to me is the 2 moving averages are trying to give me clues of momentum. Excuse me, momentum. First off, the trend is up, right? We've got an upside trend here in the chart. And what I'm looking for is that momentum follow through on the swing trade. And by the way, doesn't matter if you use a weekly chart, it works exactly the same. Long term, I do a lot of position trading as well. Works exactly the same. One of my biggest trades right now on the weekly is right here in AT&T, and I'm up over 500% on this trade. Whoa. Are you guys still there? I seem to have lost everything. Can you guys see my screen? Well, that's interesting because I can't see anything that I'm presenting now. Yeah, I've got an entirely white screen as well. Okay. Let me see if I can fix this. I apologize, guys. If you can still hear me, I should be back up here in just a second. I don't know what created that. Are you guys able to see my screen now?
Yeah, we're able to see you, Doug. We see you got the right way options coming up with the 3 little folders on the right.
Okay. I am not sharing the right screen.
Do you want to share your whole screen and then just bring up what you want to show on that screen? Try not to show just a platform.
There we go. Back up.
Yep, there you go.
Okay. Sorry about that. So what you just saw there that just popped up, I guess it doesn't get any more real than that. Boeing just alerted for me on the daily chart. There's my price alert on the chart. Boeing is setting up that pattern. You can see the last trade here on Boeing was right here. This trade we closed here recently for a beautiful profit. Doesn't matter if you trade stock or option. I do both. And I do complex option positions as well. But you can see it's just setting up the same trade again that you repeat over and over in the chart. Now, the 3 and the 8 are designed in here to help you see the momentum of the move. First, the price has to be above the 8 exponential moving average. That gives us that indication that we are moving, at least in a short-term trend. If price is above that, then what I'm waiting for to see is that the price can hold the 3 above the 8. The 3 is the momentum of the move. If the 3 can hold above the 8 and then we see buyers follow through, just like I showed you here, the price alert went off, buyers following through in that pattern, I have a trade that I can jump in on and have a high probability of that trade winning. Now, it's really important to me that I only take trades with risk tolerant, risk that's relatively low. Stop would go underneath this price pattern on that trade to keep me in the position. And then I'm always looking for that upside target as well. But the 3 helps me maintain that momentum to the upside. Going to see if I can get everyone's chat back up here as well so I can see what everyone's saying. Okay. So looking at any chart with a simple 3 and the 8, it's really easy to teach people how to do this and repeat it over and over and over. And I will ask you guys, does it make sense to you that if the 3, the short-term moving average, maintains itself above the 8, and then we see buyers following through on there, that you would have pretty good opportunity to make money in that trade? And it's really simple to do. Okay. Noise or a particular pullback. Like I said, the pullback has to stay. I want it to stay in an upside trend. So take a look at Oracle here. I've got an alert on Oracle here as well. I'm waiting for Oracle to pull back. What I want is a controlled pullback. I don't want lots and lots of volatility in the trade. I don't want high risk to the stop loss. And I want that trade to be as close as it can be to the upside trend. So here's my upside trend drawn in here and price support of the trade. So we want to see this hold in this area, and I'm looking for that trade to come up. When you see lots of wide price action, big swinging price action in there, it increases the risk of the trade. And I don't need to take those. I don't even want to take those because most of the time, there are great, simple, low-risk trades to take. And I just repeat the same things over and over and over. When I trade the futures contracts here, guys, I use the exact same thing. You can see when we broke through this resistance in here, first thing we did is pop through and we held in here. Now that 3 did cross below the 8 right in there, which lowers the odds of a win on that trade. Okay. And you can see when that occurs, you often get more volatility. So to answer that question in here, the 3 maintaining above the 8 is one of those key elements to reduce that volatility, improve your odds of a winning trade. And you can see right here, there's your entry into the trade, 333 tick, boom, you're in and out. And you can use it on any time frame you want. I've got a friend that I taught the 3-8 trap that trades a 5-minute chart. Pretty much just trades the NASDAQ and Tesla on a 5-minute chart. And you can see the same patterns repeat themselves in every time frame. And it just repeats the same trade over and over and over again, no matter what time frame it is that you trade in a position. So to give you even further example here, get rid of some of all of my drawings in here, but further example, BTU, this is a recent trade. We took an entry right there and we closed the option portion of this trade. I'm actually holding stock position that I bought back here, trying to nibble into this trade for a longer term position. But we took a stock option trade on this, closed it yesterday for 53% gain. And we just do the same thing over and over and over again in the market. It doesn't matter what time frame that you're trading. It's always the same pattern. It's always the same setup. And you can see in here the key elements is close to support, close to trend. And you just repeat the trade over and over and over again. And anybody can do this. I have trained thousands of people, literally thousands of people, to trade the 3/8 trap. And it doesn't... so many people have seen great results from the trading, and it doesn't require all your efforts. You don't have to be an indicator guru. You can just calmly place price alerts and make the trade come to you. And you can repeat them over and over and over again. GE is another setup that I've got an alert on in here. And I'm watching that very close to support, very close to trend. I'm looking for the next entry into that trade. And you guys can see when you look in the past how those trades will play out. One of the things I challenge everyone that takes my 3/8 trap class to do is try to prove me wrong. And I usually say, put a 3 and the 8 on the chart and try to prove me wrong that it doesn't work. Because the more stocks you look at, the more you're going to find, well, it just continues to work. It just works over and over and over. And it doesn't matter if the stock is moving up. It doesn't matter if the stock has been moving down. It's going to work exactly the same way. You can see over here in the down move, there's an easy short trade right there for a swing. It works just the same. When you turn it over to the upside, we break through up here, we hold, swing trade to the upside, wash, rinse, and repeat, do it over and over again. Now, an area that you want to stay out of, a lot of times people mistake in the 3/8 trap that it's the crossover that makes the trade. When the 3 crosses over the 8, that is not the trade. That's not the 3/8 trap strategy. As a matter of fact, I can show you with lots and lots of trading proof that if you trade the crossover here, you're only going to win about half the time. Okay. 50-50 win-loss ratio makes it really difficult to make much money in the market. However, if you wait for the trap pattern to show up, 70% win-loss ratio, and I don't care how many charts you go through, you can go through thousands of charts. In fact, I challenge you to, when you see these patterns, there's money to be made in those charts. When you get a lot of chop back and forth, here's an example why we don't trade the cross up. You try to cross up and try to jump into that trade or predict the bottom, you're likely going to get stopped out. So anytime you see a chart that's crossing up, crossing down, crossing up, crossing down. Good example of that would be this futures chart here. This pattern right in here, you want to stay absolutely out of that. That's chop. That's going to eat your account up. And all you have to do is wait for the pattern to develop. And you win more trades. You don't have to chase. You don't have to work too hard at it in the sense of being all stressed out, reading 14 different indicators and, whether or not something is jumping over the moon or whatever. You just wait for the trade to occur. And by waiting for that trade to occur, we find these price patterns that just pay off over and over and over. You can see them everywhere. And this is what I do all day long in front of the members of Right Way Options, showing these patterns set up, showing these patterns coming together. Right here is a list of things that I've alerted. Some of these are past their alerts, but everyone gets to see exactly what I'm looking at. And honestly, guys, you don't need every trade out there. You don't need every stock out there. You can kind of pick and choose. I've got a member of the room that trades a very small account, has made some really good money trading Plug Power here just recently, very small stock, cranking in the profits on that, trading Plug Power, and just following the same pattern over and over and over and building his account with a very simple, repeatable trade, whether it be upside or downside in the market. So making sure that you're following some basic rules is really important in here. First, no crossover trades. We want every trade to be very near a price support and a price trend, whether it's up or down. We want those to be in place. And remember, a trend doesn't begin until the first higher low is created. If we come out of a downtrend, it's a first higher low that begins an upside trend. We come out of a downtrend, it's the first lower high that creates the downtrend. And your better trades will always be waiting for those patterns to occur and getting a higher win-loss ratio in your trading by doing that. Okay. Second is try to avoid the chop when we're crossing up and crossing down. It doesn't matter the ticker that you look at. Don't fall in love with the stock. They won't love you back. We've all proven that, haven't we, over the years, that they will not love us back if we think it has to do something. It's almost always going to do something other than what we want. And I just follow these patterns and repeat it over and over and over. What I try to tell people, that there's nothing special about me. As you guys, hopefully you can see that I'm just your average everyday guy that's been able to make a career out of trading, because I've discovered that I don't have to be an expert at everything. I just have to be really good at a couple things. And that's what I do here. I just teach something very simple, and I can prove to you over and over and over again. And you can prove to yourself, put a 3 and 8 on a chart, take the price action off, and just go back and look at charts. Some other rules that you're going to want to avoid. One of the things that plagued me for a long, long time when looking at trades, because we've all done this as well. If you've traded very long, you watch a trade and you think, hey, this is going to be a pretty good trade. And by the time the trade moves, it's already moved so much that now your risk in the trade is high. Okay. You're chasing. Okay. So when I try to avoid that chase, and I do that just simply with the very simple price alerts. And if you're in my trading room or anywhere, you'll see that all of my price alerts, when we flash through a chart, they're always painted bright pink here so everyone can see them. Oh, there was an alert there, and I don't take them off as a general rule. You go back as far as you want into my charts, and you'll see price action trades that have been set up in those trades. I can also show you that once the pattern starts in the trend, let me give you a really good example that was just incredible here in McDonald's for quite a period of time. It just repeated the same pattern over and over and over. Did it there to the upside. And what you're going to find is charts will oftentimes, when they start to begin a trend, this entire line here is an alert. When they start to begin a trend, they go into what I call a stepper pattern, where they just kind of step up. You know, it's like building a staircase, and that's why I call it that, being a builder for most of my life. You're just creating a staircase, and we're just moving up. Now, after they move up an awful lot, if they come in contact with a major resistance area, be careful with those trades. You don't want to be buying a stock directly at a major resistance area in the chart. because that can cause you a little bit more of challenges, a few more losses in there. It usually doesn't hurt you too much as long as your stop loss is close, but you want to try and look at every trade and make sure that you've got a low risk entry and a good move that can come into that trade to push us to profit. So when I take a look at Oracle here, if I were laying this trade out, if this alerts in here, and by the way, I don't care if it alerts today. I don't care if it alerts tomorrow, the next day, the next day, the next day. The closer it gets to trend, the better it is. And I will wait for it. The reason I do that, guys, is because then I don't get caught. I don't get caught in these trades that give us these head fakes. We pop up in here, okay, and then completely reverse. Or those trades that are setting up nicely and then just end up falling out of bed. And I've got some of those in here that just didn't perform. Actually, I'm looking for a short here on APPS that didn't perform. GLW, here's another trade. There's a trade. And you can see if I'd have caught it earlier here, I could have had one there. There's another one right here. And notice here on this trade, if you didn't have a price alert in this trade, you could have caught it right here and taken advantage of that move with a very small stop loss. But without that price alert in here, you're chasing this trade and you take much more risk in the trade. If that trade pulls back, the trade loss gets pretty big. And with the volatility of the market today, if you're trading options, well, you know what that can do to your trading. Okay. Would I consider a bounce entry on price closing above or below the 3 rather than a break above the previous high? Well, in the pullback opportunity, okay, when we get more of that that resting pullback in a trade, I still need that 3 to stay up above the 8. And I still want to base it off the price action. So price crossing above the 3 is not a trigger for me. I'm not saying it wouldn't work. I'm just telling you my price patterns pay off about 70% of the time. And I've become disciplined enough. That's all I want to do. If I can win 70+% of the time by following something this simple, whether it be a daily chart, an intraday chart, a longer term chart, that's all I want to do. There's more trades that I can potentially have money for. And I just repeat the same thing over and over and over. And I know for some folks, this is just going to seem too simple, but you can see right here, this is a list I pull from the CBOE. This is the June list. These are the highest option, volume option stocks on the CBOE. And all I do is sort them by those trending, and I look for my trap setup. And there's another potential trade that could be setting up. There's a potential trade that could be setting up. Showed you GE. I've already set an alert on that. Everywhere you go in the market, it's easy to find them. And it doesn't matter if you say, hey, Doug, what's happening in energy? I can quickly go over to XLE, pull up everything that's in the list of XLE, really quickly change to my sort in here, and it won't take me long, and I will find charts that could be setting up or trying to move up in a pattern. They're all over the place. Okay. You can pick any industry, any group. I'll find trades that are setting up. You may have to wait for them to pull back like this one. You wouldn't want to chase that. You might have to wait for it to pull back. But a lot of times I just find those trades that are setting up, getting ready to go. There's an example of a trade that failed right there. Set the alert. Well, it didn't happen, right? So I don't care. I don't have any money in it. Don't care. But you can see we're moving back up here, and there's a potential trade setting up right there in Disney right now. Okay. So I repeat these things over and over and over, both upside and downside. You can use long calls. You can use bull put credit spreads. You can use bear call credit spreads. I trade a lot of ratio spread trades. I do all kinds of things, just straight long calls, covered calls. I do all of those strategies here and just repeat these patterns over and over and over. And you'll see them all over my charts. Now, the other thing is, if you want to slow down, there's a lot of folks that we've kind of been geared today to only intraday trading is the only way to make money in the market, this high frequency trading. I will put my results against a lot of people out there in intraday trading. I don't have to trade all that much. I don't have to trade every single day or constantly be pressing for a trade because I'm making money. Yesterday was about a $9,000 day for me. And I didn't make a single trade yesterday. I'm just managing the trades that I'm already in. Okay. And I do this over and over and over, and just work to be the best at it I can. Let's see, Mike. When you speak of higher highs and higher lows, do you base that on the closing price or the wick? Good question. Wicks and tails. Wicks and tails can be a little bit challenging. Remember, wicks and tails are showing us possible tops, possible bottoms. One of the things, again, Stephen Bigelow would, I think, agree with this, is that when you see a bunch of wicks on a pattern in here, I call it a fuzzy top. It's like, got a flat top haircut up here, or those are spiking all over the place in there. That shows me that there is a lot of uncertainty and a lot of volatility in that. But if all of those kind of line up in here, if we get kind of that consensus of support and resistance in the price action, because I do truly believe, and you can disagree with me, which is fine, that price action is the perfect reflection of everyone trading that stock. And all I have to do is study that price action and wait for that trade to set up and come to me. And then I move with that move. Now, if you're getting lots of wicks and tails, with there being so many stocks to choose from out there, do you have to play in that arena? You don't have to. You see right in here where we did push this tail down below this support, but now we're following through. There's a 3/8 trap long setting right up there on PLTR right now. I would, with a tail like this, my stop loss would have to be below here. So that plays into the rules that you would trade. We see that buyers stepped up here, so my stop needs to be under that, just in case this pops, has to pull back and rest a little bit, but still go higher. Okay. And by the way, it doesn't matter if it's a weekly. I do all of my position trades off of weekly charts. Doesn't mean if it's the same if it's an intraday. So when you get all of those wicks and tails in there, sometimes it can be a warning. It's just really volatile. Go find a better chart. Just wait for the next trade. General Motors in here, example, really big gap. We're seeing a lot of this earnings season where we're getting these amazing whips on those earnings. So here again, there's no trade here, even with this big white candle. I find this to be true in a lot of folks in trading. We're chasing these big candles around, and we're spending way too much time and giving them way too much attention, when what you really need to be doing is looking for the pattern that sets up a move. So you can see in here the rules on the 3/8 trap. There's no trade here. 3 cross down, we're bouncing back up. So what has to happen? If this is going to recover, fine, recover. Show me that hold, and then I'll look for the entry into the trade. Not going to chase, not going to play that game here in the market. If I wait for that pattern to develop, I get better trades. TSM setting up beautifully, and you can see how it's set up trying to set up right in here, how it's set up here, how it's set up here, how it's set up here, and it's basically the same trade every time. If you choose to go to a longer term chart, I'm going to use a weekly. This weekly, if you go all the way to the weekly, that's not setting up very well, but you do have a little bit of rest right in here where you could have entered that trade right here on a weekly basis, holding that trade up. It doesn't matter if I go to a 2-day chart, it's the same. It doesn't matter if I go to an hourly chart. The price patterns are the same. Now, we're a very gappy market, but you can see right here, we've got a 3-8 trap that could be setting up on the hourly. There's our higher low. There's our trend. There's our price support. Set alert, wait for the trade. You can do it with every time frame. Okay. Any questions, any charts that you guys would like me to look at? I'm very comfortable with this because I do this all day long, every day in front of Right Way Options members. I will warn you that if you give me a chart, I don't sugarcoat things. If I don't like the chart, I'll tell you why. I'm not trying to do anything. I'm not trying to be mean at all. I'm just following trades and trade patterns. Netflix had a problem here on its earnings report, and you can see right in here, this is moving in a downtrend. Okay, there was your 3-8 trap short. Stop loss was right above here. 3 was below the 8. It ran out of upside momentum. Put your trade in here, wait for that to fill, and follow that trade down. So Netflix is still in a short pattern, stretching lower. I wouldn't get into this here. It's too late. Don't chase it. Let it rally back or consolidate. If it rallies back up, pullback opportunity for the short, where we're going to be watching that in here. We'd set a price alert below that price pattern, wait for that next move lower. If it chooses to hold in here, we need to see that 3 come above the 8, hold, and then look for your entry into the trade for a resumption of upside. And it just, well, you can see we come out of this downtrend in here. Okay. This just zoomed like crazy. This would have been hard to get into. I can tell you honestly, probably wouldn't have been in it. If I caught this the rest right here, maybe, but likely not. Volatility tosses these trades out. And oftentimes these flavor of the day stocks, meaning it's the high flyers tend to be very, very dangerous. They're good for intraday trading. Some of them not so good on longer term trading or swing trading because they're so energized that the pullbacks can be really substantial in some of those charts. NVIDIA is a set up the next trap long. Now, I wouldn't go so far as to say it's a no-brainer, Wayne, because this is extremely elevated. Very high valuation stock at the moment, and we're coming in on earnings. If NVIDIA were to stub its toe at all, this could move sharply lower. But if you could trade this pattern prior to the earnings event, place that alert in there and that pops, there's every reason that could run several days to the upside and continue to follow along this upside trend. Yeah, no problem there. Okay. Here's something that you want to also be careful of. If you see a stock that is moving in an upside trend and then separates itself from that trend quite a ways, just know that if it pulls back, they do this an awful lot anymore, where they'll pop a trade up really steep. It'll pull back 2 or 3 days and show a buy signal that pops up there, and people will jump on that, and then it just fades back into the trend. So be careful when you get an amplitude of a move way that really stretches away from a trend. It'll either spend more time resting or consolidating, coming back to trend. In that trade, you don't have to rush right back into that position. Okay. NVIDIA on the weekly. NVIDIA on the weekly, stretch straight up here. This needs a rest if you're trying to get into the longer term. Look right here. There's your perfect 3/8 trap long on the weekly. Here's the second. The only problem with this, the volatility in here would have put a lot of risk until that pushed through. Okay, but it just repeats itself over and over and over. And I've become so disciplined in what I do that I don't even, it doesn't even affect me. Just because it's NVIDIA, I don't care. Yeah, I have to have the pattern to trade. And I do that because it maintains me. Removing myself from my emotion of my trading and make it very mechanical puts me into this place where I just follow the rules. And when I follow the rules, I make more money. Okay. It's not what I think. Market doesn't care what I think. And market doesn't care anything about what I know. Okay. It will show me where it wants to go if I let it. If I stop trying to predict it, it will show me where I want to go, where it wants to go. I don't have to predict it. I don't have to inject my emotion into it. I never trade anything where I have this, where I invest my ego into the trade, that it has to be a winner because I saw it. Because again, the market doesn't care. It doesn't care about what I know. It doesn't care about what I think. I'm just trying to follow the price pattern of the chart. And I just, again, do it over and over and over. Coin has been a big mover here in the market. You can see the trap trades have been easy to identify in here. Coin now breaking down here a little bit. 3 is starting to come beneath that 8. So when I get a 3 that comes beneath the 8, and particularly if it comes beneath the 8 and breaks a support in the chart, then it has to recover before that becomes a potential trade. Okay. But coin right now drifting a little bit lower here. I don't know if it's going to stay that way. It could pop right back up, but that 3 has to maintain itself in here. And by the way, you guys can see on coin, you can see the short trades. There's your stop. There's your entry. This is a cross up. Don't trade that trade. Stay out of it. High probability that that could fail. And you can see where the trades, when we started turning around, crossed up and held. There's an entry. Crossed up and held. There's an entry. And you just repeat the same thing. If you look at Robinhood, you can see the patterns. It's very easy on that trade. And this is also starting to just show a little bit of extra weakness. It could come right back, but just starting to show just a little bit extra weakness because the elevation of that move. It's run a long time. No one would be too surprised if this has to rest or go through a protracted pullback for a little bit on a trade. You'll see that after long runs, we'll go through these protracted little pullbacks. It doesn't hurt the bigger upside trend. It just needs to rest a little bit. Okay. Bull, beautiful. This is a new issue stock in the daily chart coming up in that pattern. This also has a pattern. You won't see this in a candlestick book. This is something that I identified studying price action the way I do, is when you have a pattern, big white candle, dark center, big white candle in here. I call that a fig Newton. It's a fig Newton cookie. And those often play out to an upside as well. That's showing us that rejection here in the middle. We've rejected that selling and pushed it back up. The momentum of that is moving to the upside there on bull. Nice chart. And let's go to a 15-minute chart. Does it work on 15-minute? You can see we had a cross down here. That would have been a questionable trade. Beautiful short here. It's crossing back up. So this cross up, let it cross up, proves to hold, 15-minute trade. If we look at a 5-minute, it's the same. We finish this little protracted pullback in here, cross up and hold. There's your first entry, second, third, fourth. Just repeat that pattern to the upside. Here right now, the current price action, we had this short right here. Now we're crossing that back up and hold. Look for that next entry into the trade if it holds that high or low. Okay. Yeah, he would. I used to present in Steve Bigelow's class. He used to give me a hard time. He said, I think I'm a simple trader. You are really simple trader. And it's true. I just take a look at AMD in here. Beautiful trap trade setting up here. They are literally everywhere, guys. You can pick and choose the best quality trades that fit you. You don't have to be any superhero. And the thing is, guys, anybody can do it. Anybody can do it. I had a person in the trading room. Actually, she was in the trading room today. Haven't seen her for a while. Still a member, just doing a lot of traveling. And she was struggling with swing trading on the daily and struggling with micromanagement. So I switched her. I do a lot of individual coaching. She went to a 3-day chart and she used the Heikin-Ashi candles in here. You can see I've got a Heikin-Ashi. By the way, the 3-8 trap works just exactly the same way. The person I told you in my trading room that only follows 10 stocks and has a win-loss ratio this month of 85% uses a Heikin-Ashi chart and the 3-8 trap. But I switched her to a 3-day and hasn't looked back. The patterns are still the same. Push up, hold, follow through, winning trade. And you can stay in those trades a lot longer. You can see right over in here, what a beautiful little short right there. And they just continued to produce in this trade all the way down for the short side of the trade as well. So this works because it's just price action, guys. There's nothing fancy in here on these trades. By the way, yeah, I do too. Steve Bigelow was a great guy, and he was a major mentor of my partner, Rick Sadler, Hit Run Candlesticks. And I learned a lot from him as well. Have his candlestick books and that kind of thing. I learned a lot from him. There's another pattern that he would like just as much. It's called the Oreo cookie. And that's where you have just the opposite of the fig Newton. You have a big black, you have a big black candle that shows up. You have some kind of a white candle that shows up in between. Okay. And then the big black candle on the other side. That one plays out by and large to the downside. And if you can find it in the right pattern, it can be a very powerful trade indicator to get you into a trade. Okay. So guys, I hope you got something out of this. And we've got just a couple of minutes left. If you have any questions in here, what I would like you to do is consider jumping over. If you want more information on the 3-8 trap, I have tons of videos on YouTube on this, and I keep it very, very simple on these things. But and I also do every single day I do what I call the morning market prep, and it's just the way that I started doing years and years ago, and now I just share it with everyone. And that prep is free, doesn't cost you anything. That's my YouTube channel. I post an awful lot of content over there, and actually there's a daily video that goes out in the mornings before the market opens. That's the preparation of the day, some of the things that you want to think about, price action, that kind of stuff here in the market. And then of course, what we're doing here for members is we have a 30-day trial for you to come over. Cost you $7. I mean, can you even get a meal at McDonald's for $7 anymore? Cost you $7, and you can spend 30 days to find out whether or not Right Way Options is for you. And you can ask me anything. What I do is I'm just an open book with my folks. They're the folks in the room are family to me. I just work with them. You can ask me anything. I'll do my best to help you on trade setups, trade management, all those different kinds of things. And every single trade I take, I share. If I don't put money in the trade, I don't put it up as a trade alert, because I've been part of those trading services where they toss out all kinds of alerts, but their money's not actually in it. They have no skin in the game. For me, I put skin in the game, and you will know it because I don't post anything that I'm not in. Win, lose, or draw, everything is posted, and it's posted in an app that is on our trading platform, and you don't even have to be there in the room to get the alerts on your phone. And you guys can participate in that for 30 days for $7. Any other questions about the trap trade? And by the way, do you actually need the 3 and the 8? I talk about the naked chart here all the time. But the majority of the time when I'm looking at charts, I just look at this chart. I don't need anything else. And after a period of time, the 3 and the 8 is kind of a crutch to help you learn it, to help you see it. It won't take you long. You won't even need that. Okay, because we can see trend, we can see momentum in the market, in the charts that we're looking at, and we just look for those next entries into trades. Okay, we just look for them and repeat those over and over and over. Beautiful trap trade there in IWM. Snap was a beautiful trade right here. Set an alert. When you find the pattern, set an alert, wait for the trade. And here's an example, guys, of a trade that had a pretty good upside opportunity. Entry into here, stop underneath here. You've got a good stretch in this move up here past that area to this next area, major resistance in the chart. So you've got a good price potential move, and you can see we hit resistance and we get an Oreo cookie. High likelihood this is either going to go sideways or pull back a little bit in that price pattern. So if you like plain talk, if you like to have someone that's putting their actual money in a trade, nothing fancy here. You guys are more than welcome. We'd love to have you as part of the team. What I really like doing is having a bunch of educated folks in the trading room, because we all get to take advantage of that, including me. I have people that all these eyes trained on the market, they see something that I didn't get a chance to see, and then we have another opportunity for a potential trade. Okay. So with that, I think I will let Fausto take back over. Just a second. So what options do you choose for the trade when you enter? If I'm doing a quick swing trade, I'm usually picking up, for a swing trade, I'm usually going to pick up an option that's somewhere around 60 days to expiration, just in case that trade wants to continue on higher. And I'm usually, I never post anything that doesn't have the delta somewhere between about 70 and 80 deltas in the trade, because I would be willing to trade the stock. I'm just replacing it with an option. Okay. All right. Hope that answers your question. Thanks everyone for listening. Thanks for inviting me here. I really, really appreciate it. Maybe next time I'll know how to get the camera turned on so y'all can see me. Not that, oh, that'd probably chase y'all away.
That's all right, Doug. It was right next to your microphone if you just clicked on it, but you could probably do a little flash hello if you want to still try.
Right next to my microphone. Right next to the microphone.
Go right down to the bottom to the left.
To the oh,
there you go.
There we are.
We see you. All right. Next time we have you, we'll have to do it again.
All right. Thanks a lot. I hope everyone learned something here and is able to get something out of it. Thanks for inviting me. Y'all take care.
We'll see you. Make sure everybody take everyone up on his offer. All right. Because Doug's been a great contributor. And you could see one thing I really liked about Doug is that we were all very close with Bigelow, and Bigelow had a great following, wrote a lot of great books and so on. And you see that his style still lives out there, and it's always great. But just want to kind of just talk about something really quick before we bring my next guest, which I'm also looking forward to have, Price Headley. I just want to bring up Webull. When I was asking Doug to talk about Webull a little bit more, it's nice is that we all have kind of the same style of trading, but we don't want to trade that much style. And, he was talking about that. It's been on a nice little big run. Now, I personally own it, and that's why I was asking him about it. But I wanted to point out something really quick on Webull so you guys could see what's happening. You could see that the stock here lately, it's been having a really tough time getting past the $17. And, everyone here, if you remember, I was telling you about NASDAQ Book Viewer, which you could see it right here. And I just want to show you, this is pretty cool. But when you look, when I did my presentation, I was telling you about how to use level 4 and level 3. You could see right here on the sell side, there's a 75,000 share seller right there. And that obviously would explain why that big resistance level is there. And also, when I bring up level 4, you can see right here, there's that big red line right there. So this seller showed up around 12 o'clock. So what time is it now? Right now, we're talking, what time is it now? 2 o'clock. So he's been out there for about 2 hours. He's been holding it there pretty strong, about 90,000 shares. So, these are the big things that you could do, and one of the big things I'm really focusing on is that when you have a big seller that causes a lot of big resistance, well, listen, we could break 1710. You heard Doug talk about it. And one of the big things that how we're going to know it's going to break out, like I showed you on my presentation earlier, is you got to see if those big block or if that order gets filled. Now, one other stock I just want to point out before we bring Price in here really quick. I don't want to take too much of his time because I know he's coming up next. One stock we're actually focusing on right now on the trading floor is right here is HIMS. HIMS is making a nice little run right now. You can see it's the trading floor right here at Cyber Trading University. And they've been trading the stock HIMS really quick. So I want to bring up HIMS really quick and just show you what's going on. HIMS been a really, really fun stock. So HIMS right now starting around $50. It's already at $57 just in the last couple of minutes. Stock's been having a really, really good run. And HIMS, just to let you know, where are we on HIMS? Here we are. So HIMS right here on level 4. There's a pretty decent size block order. This guy just got filled right here at 57. So it looks like it's probably going to get close to the $60 price range. You can see there's a little seller right here at 58, but the real big one, 45, is right there. All right. And once again, everyone, you're all more than welcome to come join the trading room after you're done doing these great presentations. We'll just post a link up there really quick for you if you guys haven't registered yet. Now, in the meantime, let me stop sharing because I got to bring up my good friend here, Price Headley, right here. So, looks like Price is here. All right. So let me just share this really quick. And there we go. All right. So let me bring our next guest in here really quick. So Price Headley, for some of you who don't know, he's been a great contributor in the trading community. He's been around, I think, as long as I've been around. I think it's over 30, 35 years. I know Price at all the trade shows. We always get to meet. He lives down there in Kentucky. I always like to call him Louisville when the Kentucky Derby's around and get his picks. He's not right all the time, but he's right a lot most of the time. So I've done really well with him. He's an extremely smart individual. He graduated from Duke University. He's got his CFA. He's got a CMT. He got honors, highest honors in all those classes. So he's a very, very smart person, very thorough. You'll like how the way he analyzes things. He's extremely smart, very well respected. #1 bestseller book on Amazon that he wrote, Big Trends in Trading. So, make sure you go out there and check it out. But Price, it's always great to have you back here, and always look forward to have you speaking on behalf of here at Cyber Trading University. Like I said, the stage is all yours, buddy.
Thank you, Fausto. It's such a pleasure to be with you. I'm actually on my old school 4-monitor setup where I don't have my video cam, so I'm sorry about not having the video to go with it on my face, but actually I'd rather you all see my charts rather than my face. So appreciate you having me, Fausto. It's always a pleasure to connect. Like Fausto said, we've been doing this both for a long time, 3.5 decades on my side as well. Let me share my screen here. So we'll talk about kind of what's become really one of our favorite approaches here. Share screen too. There we go. If it's not working, let me know, Fausto. I think it's working. So basically what we're looking for here, folks, is we're looking for getting the best of both worlds. Okay. Everybody comes to me and says, I want high win rate in options trading and I want to win big. Okay. So, usually those two things do not go together, right? Usually if you're doing like say credit spreads where you're taking in a consistent, steady premium, but it's not going to be a big score, 20 or 25% gains at a time. There's nothing wrong with that. But then, if you're going for the big home runs, making multiple hundreds of percent, usually you've got a much lower win rate, right? Because those are out of the money options where you've got to, deal with the fact that a number of those don't hit, right? So how do we get to the best of both worlds? How can we do this? We call it a hybrid option strategy, kind of just like you talk about a car that's got both the power of gas and electric. We're trying to do the same kind of double power twin turbo action here, looking for cheap options that give us a lot of bang for the buck, theoretically unlimited upside. But the reality is, of course, we're going to hold these for no more than a week. So we're going to not be around for that long on a given trade. So I'm going to walk you through that, folks. And then if you've got questions, pop them in the chat box. I'll seek to come back and pick up some questions at the end of my hour here. But basically, just a reminder, everything that we share with you today, of course, is intended for illustrative purposes only, not considered specific recommendations here. As you know, stock and options trading have large rewards potentially, but they also have large potential risk. We got to manage both sides. We're going to talk about how we manage the risk, not just talk about winners, but also talk about when you lose, what it looks like. So you always want to kind of, and whenever a new subscriber comes in, I always say, please start small. It's about looking at it as a longer term program that you can actually have confidence in, right? It's not a get rich quick. We're talking options, we're talking leverage, but it's about, you got to know you got the stomach for it, right? You got the comfort level. And that's why I think this hybrid has become so popular with our Big Trends community. So see our terms of service on our bigtrends.com homepage if you want more information about kind of how we operate and how we want. I don't want you to have any surprises. I want you to know exactly how we do business. 26 years and counting at Big Trends. Now, bottom line is, okay, so it's about how do you get that value component? And value component can be in the form of cheap options, but I don't want to buy just any old 10-cent cheapie, right? It's got to have something that shows me a probability is improving for a trend trade. Fausto was talking to you. It's funny he mentioned HIMS as we were getting going, and that was another one that popped up on our screens too, Fausto, with a morning breakout in the first hour close. We didn't catch it all the way, but basically you can see that our system's going to pick up that kind of momentum trend too, right? Because this is the kind of market we live in. I call it the manic depressive market, right? Back in April, you thought the world was ending, right? When you had the Trump tariffs, a quote, Liberation Day, not so liberating for the markets, right? With the tanking that it had. But then with all the delays and all the, backtracking and whatnot, that basically the market has ripped back up here. And what's to say that it can't do the flip side again, right? You got to stay flexible, right? Volatility index just hit near 15 today. It was at 60 on that fear spike. Now it's been cut by 3/4 down to where now almost nobody's fearful. That's something that gets me a little concerned. So anyway, point being, we want to let the system drive it. No opinions drive our trades, right? You can have all the concerns in the world, but if we're getting buy signal after buy signal, we're going to keep on taking those buy signals. When we get sell signals, then we'll take those. So, but the principle here is hybrid. We've got to be able to split it out into two different approaches. One part of our position, we want to get our risk money back. The next part of a position, once you get your risk money back, you should feel free, both financially free and psychologically free to let the rest of your trade run. We think this can dramatically amplify your results. And frankly, I see too many traders who have what I would call too much scar tissue, where you've given up gains on winners before. You've seen those winners to go back to break even or worse. And you're like, I won't let that happen again. I'll grab that first quick profit on my whole trade. And then you will see times where you leave a lot of money on the table, right? So we're going to walk you through when it works, when it doesn't. Like Fausto was talking about, I've also been in the game for 3.5 years now on my 36-year trading stocks and options. Launched BigTrends in November '99. It's always been about a systematic approach, right? Anything that anybody talks to you about, it should be very clear what's driving the entries and the exits. You shouldn't have any subjectivity, any, oh, I felt like it or I didn't feel like it. Feelings need to be put basically far behind you when you're making your trades. You need to be very mechanical, and it's almost where it's not even your ego is basically your biggest enemy in trading. Your ego is out there wanting to be proven right, saying, "See how smart I am." And that's what has gotten me into in my early couple of years of trading. It got me into trouble because what it did is it gave me this perfectionism thing where I wanted to be right all the time. The markets are not that way. It's not set up that way. If you're on the wrong side, never double down on a loser, never basically get stuck too long holding losers. When you get focused on the next opportunity by getting rid of your dogs quickly and then moving on to your next opportunity, it'll get you back into an opportunity mindset, not dealing with constant problems. Okay, so that's where all this psychology stuff comes in. Like Fausto said, blessed to be inducted here into the Traders Hall of Fame, sponsored by Traders Library back in 2007. Hard to believe it's that long ago. But basically, it's one of those where I just have always devoured information. I love reading Fausto's books and all kinds of other fellow traders' books here, where you basically are learning something new all the time. And that should be your constant objective. One of your lifelong principles is constant learning for constant improvements, right? We want that steady improvement, and we want to share with you some lessons that I've learned in 3.5 decades of trading. So we call this strategy bargain options trader, for this element that you're buying some cheapies relatively, but you're still things that we think have the potential to bloom, basically like the seeds just sprouting, right? Have the potential to bloom into something much bigger. And it won't always happen, of course. We're going to have winners, we're going to have losers. But the thought is, let's plant these seeds. When they grow, let's really nurture those. Let's really let them keep growing. Let's not cut off our opportunity and not harvest the crop. If we harvest a crop too early, right, you don't get the proper yield on that crop, right? So it's all about making sure timing is evident and letting you keep running. So let's go into the charts. I'll explain a lot more than my words here. And this is a trade that we had on semiconductor ON. And so let me talk about the setup here. Okay, so we have some moving averages here, and again, our last speaker had some great moving averages up as well, and basically we've got actually not two but actually three moving averages happening here. And the irony of this is that we actually want to see a close with having been in an uptrend. We want to see this close here. Get my markup happening here. This close happening over here underneath our short-term average. Okay, we want to see that. And you say, why would you want to see a close under any moving average? Because what we find is that that's kind of like a short-term flush of the very shortest term, the traders that have the least staying power, the least willingness to stick around. And then what we want is, we don't buy that. We want to see that then we go to a positive close. You can see that next little candle there, the second one there that I'm marking up. You see that we're trading below the prior day's low. I often call those the flush, especially when they happen in the morning and then you get those big reversals back up. You've had it happen if you put a stop under the prior bar's low and then it flips on you, right? And so the thought is, okay, we want to make sure that we don't get flushed. We want to make sure that we're rather kind of waiting for some of the shakeout action to kind of be behind us and say that, hey, the longer term trends here are still great, right? So we've got a short term, an intermediate term, and then a longer term, right? So you've got the very shortest term here in the pink line. You've got the intermediate term or middle term, I guess I call it, in the middle, and then you say you get the longer term, LT, long term there, versus the other one, short and medium term. So the idea is that, look, the longer term trends are still intact. So we want to see that this medium line here, this midterm line, does stay intact through that whole process, right? We want to know that we've got the support, if you will, of the market behind us. Once we get the positive reversal, our system will typically say we want to get in right at the start of that very next bar. Now, in this case, you can see it was from a Monday's close. We actually broke the day up into two different candles. We'll talk about that in a minute on time frames. But you see, we bought the gap up there at the start of the next day. You say, hold on, you missed it. You bought the gap up. Why didn't you buy it at the part of day's close? Don't sweat that. In fact, we're kind of glad to see that kind of momentum kicking off at the start of the day, right? I typically want to buy gaps up and sell gaps down. I mean, it's not a guarantee that that's the general bias, but you got to remember your job as a trader is to get yourself in tune with what's happening in the markets, right? So that's why we're not trying to be too early, buy the red candle, but rather waiting for the positive close above the open, that bar. So we waited for that next bar to get that support, to get that sort of stability, and then buying the next bar on the open, gap up, no problem. You can see we open around 55, maybe 55 and a quarter on semi. ON's a symbol. Now, what are we buying? That's on a Tuesday, start of the day on a Tuesday. We're going out to the, in this case, you can see the July week 2 58 strike calls. Okay, so you can see we're not giving ourselves a ton of time here. When you trade weekly options, the less time that you're buying, obviously, the more leverage you've got. But obviously, you've got to have enough time to make sure that you're actually going to have a runway where there's some takeoff, right? If you try to get the plane in the air at the very end of the runway with no momentum, you're going to have a real hard time, right? So we got to have some time to have that momentum build. So we're usually going to have several days of action here where we can kind of let that momentum build. You can see we got in, it starts to immediately pop. And so what's our first objective here? Now notice we're using $1,000 per trade as say the typical what a starter account might normally commit per trade. And we're not recommending scaling that up or down. We're saying whatever you decide to start with, stick with it for a while. Don't try to scale it up. So you can see in this case, we're buying 12 contracts at 82 cents. That's $82 to control each 100 shares, right? So we're controlling 1,200 shares of on semi, which would have cost you something like 66 grand, right? And you're saying, okay, you're controlling 66 grand for under $1,000, 12 times 82. So you can see in this case, you're pushing into the, 900 and whatever, $80 range. And you're saying, okay, we're in there just under $1,000 maximum commitment on 12 contracts. In the old days, I would have said, you know what? If we can double it, let's sell half of those 12 at the double. But what we started to do is started to say, you know what? There's a lot of trades that get up, but don't get up to 100%. And how can we get our risk capital back even more quickly? So if I bought 12 and if in the old days shooting for a double and half, that's the proverbial free trade, I can actually do something different, which is to say, do some math. And guess what? If you sell 2/3 of your position up 50%, that also gets you all of your original risk capital back, right? So you can see we vested just under $1,000 on the 12 contracts at 82 cents. Now we've gone up 50% to $1.23. As it pops, you can see there by that following morning, and on a Tuesday morning, by that first part of the day on Wednesday, we've peaked out, crested close to 58, right? We've gone up maybe 2.5 to 3 points, maybe about 5% on the stock. And so we're getting about 10 to 1 leverage. It's not the greatest leverage, but it's saying, you know what, that's still healthy. But here's the key is that we went ahead and said, look, we booked the 50% on 2/3. You only have 1/3 or 4 of your original 12 contracts in this example left. And you say, well, that's not going to be meaningful, is it? Well, check it out. You say, okay, that was in on the 8th, out on the 9th. We're going to the Friday expiration in this case, right? So when we start on Tuesday morning, we've got 4 trading days left in this example. And that can vary, can be a little bit less or more. But the idea is that, look, what you're looking at here is that those last 4, look, the stock, after it did pause at first, after we got out near 58, it came back down towards about 57 and a quarter. So you're starting to think, oh man, maybe I missed the opportunity to get out of the whole thing. Stop the all or none thinking. Stop the it's all black or it's all white thinking. Trading is many shades of gray, right? Like life, right? And the idea is that we want to say, let's take that first piece, get your risk capital back on the first piece. Remember, 8 contracts out at $123 a piece. We're right there within a few dollars of our initial investment. Basically, we've essentially got no risk in this trade with now 4 contracts left. So those 4 contracts, some people call that free trade the market's money. I've never said that. It's your money, and you've still got to manage it well. And so what we're trying to do here is say, let's see if we can take it on out to the day before the expiration here on that Thursday afternoon, and we can sometimes take them even to the expiration day in this system. If we do take it to an expiration day, the latest we would get out is 1:30, about 2.5 hours before the market closes. So we don't want subscribers to miss an exit and say, "Oh, I missed that. What do I do now?" Right? We're not in the game of trying to acquire stock and exercising options. We're in the game of taking the profit and then rolling in the option, rolling it into the next new trade, right? And so that's the idea. So those last four contracts, you see, $58 strike price. We got to about 60, right? It makes sense that we stopped about 60, and that's what gave us the concern that maybe we ought to just go ahead and say, "Thanks very much. Let's book the rest of the trade here ahead of the expiration," because 60 looks like a big round number, and why round numbers tend to be resistance or support because of option strike prices, right? You get tons of open interest built up sometimes, and what that means is that there's incentives for things to kind of be capped at big round numbers, at least in the short term, from time to time or more than time to time. So you can see though, those last four contracts, whereas if you measured how much money do we make on the first 2/3, the first 8 contracts made us from 82 cents to $1.23. That's $41 a contract, right? 41 times 8, you're at $328 profit. These examples are all before commissions, but as you know, commissions have come way down, and options now $1 a side at most. And I'm seeing a lot of brokers with now no closing commissions rates. So basically, definitely a good time to talk to your broker or consider moving, or if you need to get even better commission rates somewhere else, because the broker price wars continue to bring option commissions down. So point being, look, we made 41 times 8. We made $328. Okay, that's nice, but when you invested almost 1,000, we still want to get more out of those last four contracts. The last four contracts are closed at 210 a piece, right? Up near 60, we might have had 10 cents a time with a day or so to go before expiration. So most of it's intrinsic value, right? You got a right to own the stock at 58. It's at 60, so it's worth at least the $2 intrinsically. In the money, we would call that, but it's got another 10 cents a time. We sell it at 210. That's not only triple what our first target was, 156% rather than 50, but in dollar terms, right, that 210 compared to the $82 invested is making you roughly 128 bucks or something like that. So 128 bucks times 4, we're pushing just over 500 bucks on the last four contracts. So even though it's just the last third of your position, it actually made you more profit than the first 2/3 of your position. And we see that a lot, especially with the runners, right? We call this concept the runner, where and we're not the first ones to call it that, right? You want to let that rest of that trade run as much as you can within reason, unless you see something logical like a big round number or a big point of concern, or maybe there's a big news item coming up after the close or the next morning. Those things can all make you say maybe there's a good risk off kind of mentality at some point. But guess what? You got no risk in the trade once you sold the first 2/3 out here at the 50% target. So this is a way to get your risk money back even faster than waiting for half out of the double. Say take 2/3 out at 50%. Guess what? This one would have gotten to the double, but you know what? The point being that, I don't want to play the woulda, coulda, shoulda game. We all want more contracts when it's working and less or no contracts when it's not working, right? But the reality is you have to follow a system through both the good and the bad trades to help you get more out of your good trades and then offset and more than offset the occasional stop outs, right? So in total, that trade generated 840 bucks in gross profit when you take the two halves added up. So the beauty of that is that that's only happening from a Tuesday to a late Thursday, right? So you're in that trade for, maybe, you can see basically 3 full trading days at most, right? So that's a beautiful situation. So this 2/3 first target is a part of the objective to say, get you to your risk-free trade that much faster. That, of course, means that you will boost your win rate, even if the other part of your position flips on you. Because once you've gotten to a risk-free position where all of your risk money is back in the safety of cash in your account, whatever you close the last piece of your position out is your profit dollar, right? If you think of it that way, right? So if you invest 1,000, you sell 2/3 out to get 1,000 back, and then the next third you only get like a couple $100 back. Well, you still made money in the whole trade, even if you gave some back from where that first 50% target was hit. So the beauty is you will boost your win rate that way with the hybrid approach compared to the all-in. I'm going to ride it out to the bitter end and hope for a big winner, or oftentimes not get the big winner and then end up watching the decay eat you up, right? We want to minimize that decay risk. So selling 2/3 out is another way to get a lot of your risk exposure back totally off the trade when you get a 50% gain. So holding period here, is typically 3 trading days or less. Okay, so at the third day, we say, okay, we've given it a nice quick window on these final week options, and we're going to say we're going to focus on that. Now we do use the DMI lines to go with those exponential moving averages or EMAs. So the DMI line is just another confirmation that we're on the right side of the bigger trend, right? So we look for positive DMI above negative for a bull trend or vice versa for a bear trend. Now, as I said, we're looking at the same week expiration. So this is not a widows and orphans strategy here, right? All options have risk, but we're dealing with the final 5 days or less of an option's life. And so we want to make sure that we get that sweet spot of that setup and that we haven't been buying the dip and then getting caught in a deeper dip and getting underwater too quickly. We're trying to catch that reversal and then hop on the wagon. So we can actually, this is interesting. We've got two different time frames here and using a 4-hour chart. We've experimented with a lot of different time frames. Of course, a lot of people talk about hourlies or 30 minutes, 15 minutes, 5 minutes, whatever, when you're looking at intraday timeframes. We've looked at splitting the trading day, which is 6.5 hours, into 2. We've done some of that. But in this case, ironically, we found that the 4-hour chart gave us even better results. So that means that we get it close at the end of a day. That means we're going to get it in right off of the open. We say by 9:40 a.m. that following morning, you should expect a trade when we've got a new signal at the prior day's close, because sometimes we want to make sure the options might take a minute or two to kind of clearly get open, and then we get our quotes and we fire out a real-time email alert. You can also get it as a smartphone update on your text message there as well. And then 4 hours later is basically the 1:30 close. So we say, okay, give us a few minutes to type it up and verify what's the best option and send it out to traders by 1:40 p.m., if not a little bit earlier, right after that 1:30 close. So the irony is the second bar of a trading day, thus, is only going from 1:30 or 1:31 to 4 o'clock, right? So that second bar of that is only 2.5 hours, whereas the first bar is 4 hours. So actually slightly uneven, which is not unheard of, because even if you use an hourly chart, remember 6.5 hours, your last bar of each day is the 30 minutes between 3:30 and 4. If you're an hourly chart follower, that's only a 30-minute bar. Just FYI, if this seems foreign to you, even if you're using an hourly, you're still getting some differences in the time frame with that extra half hour of the trading day. Point being that, it's all about having a defined mechanical approach that gets rid of a lot of noise. Also, it allows us to scan basically 2 times a day, right near the close, getting ready for the next morning, and then also there at that 1:30 point to say, do we have new trades that can go out in the next few minutes for existing bargain options trader subscribers. So it really is time efficient. You don't have to screen watch all day. You look at those bigger trends and catch it using the same week options. Of course, it's something where same week options, of course, there's risk. So what we're going to do in terms of a risk management is we're going to say, look, we don't want to lose 50%. If we lose 50%, we will cry uncle. We will say, okay, fine, lose half, and it's not going to fit our typical winning profile. You say, well, why not lose 20 or 25%? Because you can get that kind of noise with these short-term options. You've got to give yourself some wiggle room, some rope, but not just ride it out to the bitter end with a total wipeout, right? So at 50% down, we say enough, moving on. We will stop those trades out if they're not holding up well enough. But the point being that, we think that this is a way, compared to straight options buying, to definitely boost your win rate and still give yourself that chance for those runners that can make up even more of your profits, right? So the idea here is that you're going to stick with the same week options. Every Friday, there's tons of weekly options on most all the big name stocks. I can remember back when I was lobbying these changes in the 90s to say, man, it'd be great if we had daily options or at least weekly options. And it was like, whatever you're talking about, guy, so not the interest there. But obviously things have greatly evolved. As you know, now a lot of people are trading 0 DTE, 0 days expiration. We're not recommending that, because that really, we think, is cutting it very close. You're not giving yourself much runway for that trend component to play out. And I can see where maybe if there's some time-based strategies where you're trying to sell some premium and it gets a little complex, some of the things you can do there, and you can both really help yourself or really hurt yourself with that kind of last moment leverage there. So we're giving ourselves a little more runway than that, typically anywhere 3, 4, 5 days out before expiration. So, but we will get out no later than a Friday expiration day at 1:30 p.m. Eastern if we haven't already gotten a stop or a target. So we're not going to worry about taking it into the close or they're going to be done. Sometimes we can get in for less than $100 or $100 per 100 shares on each options contract. So, but it's not just about low pricing. It's also about an option that has a chance to really heat up in a super strong trend mode here. So let's talk about the setup a little bit more. We're going to look for that moving average pattern. And it's a little bit different for bear trades than it is for the bull trade. So I'll get into bears in a little bit. But with the 3 EMAs on the bull side, we want to see that little quick flush down on the shortest term, kind of the noisier average, which a lot of times the shorter term you put your moving average, the more noise you're going to see around it, right? It's not as stable. And so we want to see that quick flush down. Maybe some other trades get flushed out. Then we want to see the reversal in the price action. That's the pairing of the price action, getting the positive momentum coming back up. And then we get the DMI plus above the DMI minus for a bull trade, or minus above plus for a bear trade. We do look at history. History is never a guarantee of the future, right? As they often say, like the past won't necessarily, the future won't match the past, but sometimes it'll rhyme, right? It'll have similarities. We're looking for these similar patterns based on many years of past data. So when I talk about a profit factor, look at the historical profit factor, we're typically looking at 10 years or more of data where we have it. And we're saying, okay, how is this system done for this particular stock across many years, many different types of markets? And certain stocks really have that kind of consistency that we have a lot of confidence in. Others are all over the board like Jekyll and Hyde, and I don't want to trade those. I don't know about you, but I've had my share of stocks in my early days when I wasn't tracking it as closely as I do now, where I was like, why is cat always a dog for me? For example, Caterpillar. It was one that I basically could not get right. And instead of trying to beat a game that you can't get right, I think it's much more valuable to weed out, to delete the symbols that don't show up as names that are going to give you that kind of sleep well at night consistency. Okay. Even though we're trading short term, I still sleep very well at night because we're not committing too much capital in one trade, and we have confidence in the names that we're trading and then the edge that we have with these kind of names. So a name that does check the boxes for us is Uber. And actually, Uber, as you've seen lately, has continued to roll to the upside. Obviously, it was hit a lot by the COVID pandemic, but it's trading now at 91, right? This is previously on an Uber trade that we had where you see this long consolidation. And this was kind of a little bit of an exception here where we'd been below. Okay, so we'd basically been holding those short and intermediate term averages, right? And you see that we're kind of going through what looks like a nothing kind of a couple of prior weeks, right? But it checks the boxes here and it doesn't have to be an immediate reversal after we had that close underneath the short-term average. You see, we would not trade it that next day, even though it's holding long-term support. We're waiting until we get the positive reversal back up. And you see that reversal back up coming in that first big bullish white open body candle, right? The close well above the open after the upside gap. So we're not early here. We're hopping in at the start of the next bar, which you can see this is on a midday Wednesday. There's our 130 to 140 entry area. And you see the Uber's trading close to 67. Now, in this case, that's a Wednesday afternoon. We're heading into a Friday expiration. We've only got basically 2 more days to go in this one officially, but it's really with a third day if you count the partial day on Wednesday, right? But obviously we know that Wednesday final 2.5 hours is kind of a limited third day, if you will. But it still checks the boxes for our rules to say that, look, we're buying the at-the-money calls. The at-the-money calls are trading at about 70 cents or $70 to control each 100 shares. Just about 1% of the stock cost is 67. 100 shares would cost you $6,700, right? So you can see that you're able to buy 14 of these if you're putting in up to $1,000 and no more. 14 contracts in at $70 a piece, that's $980 invested. And you can see the very next day on Thursday morning, it gaps up. And we know we're limited on time here. So in this case, we say, look, we get past our 50% target. And look, this isn't an exact divide by 3 kind of number here, right? So if it was 15 contracts, it would be 10. But at 14, it's still 10 because we'd have to get down to a little bit lower to do 9. So the point being that, okay, 10 was what we wanted to sell. We got out at the 71% gain on the first, just over 2/3, almost 70% of the position. And now you've got a guaranteed winner, right? Because you invested 980. If you sell 10 at $120 a piece, you're at $1,200. You already got $220 of profit gross, and you give it a chance to keep running. It keeps running that same day. And we say, you know what? We're not going to complain with the run that's had from the open there. It opened about what, 67 3/4, but it goes all the way here to about 69.5. at 69.5, what's a 67 call worth? What's got to be worth about 2.5. We actually took it down at 245 and said that's good enough for us. We'll take the 250% on the last 4 contracts. And you can do the math on how that stacks up, but you can see here that obviously from $70 to 245, you're taking down $175 times 4, $700 of profit on just the last 4 of your original 14 contracts, right? The first 10 made you $500, right? So you can see that stacks up to like a $1,200 profit on that whole trade, and that's how we got there, right? So the point being that, okay, we're waiting though. We're not trying to be heroes. We're waiting until we kind of check the boxes here across our indicators. Another one here, General Motors, right? And you can see GM had been through a long kind of protracted down phase, even though you could say, well, what's interesting about this is you say, well, you said you wanted to see it hold your medium term average. Yes, that's at the point of the signal. But you can see what happens is when it does reverse here, it's holding back above the middle average, but it's still kind of hanging right around our short-term average, not quite pushing through there. We see it does get that big reversal back up on this big flip to the upside, right? It was below there during the day. You talk about patterns and candles, right? We love to see that little flush here. What we were talking about our friend Steve Bigelow, rest in peace. Steve alerted me to this whole J-hook concept. I used to look for the same kind of thing. Some people might call it kind of like a key reversal where you do open lower, you trade lower at least, and then you get that reversal back way up, and that's that J looking pattern, which is exactly what you want to see to say, okay, there's others that have been flushed. Let's not be part of the flush group, right? Let's not be a fleshy, but basically, let's say let's get in here after we've determined the market, in this case on GM, really wants to go a lot higher. You can see the stock there was trading by the end of the day 37.40. I think in the final hour or whenever it was that we got this trade, it was actually in this case it would have been probably at the midday point here, but we were getting in there and it was maybe 37.25. So it's like a $0.25 in the money. We paid 40 cents for these options, right? This is about as cheap as we will go, about a $0.50 or so. We're not trying to buy the 10-cent cheapies usually. But you see 40 cents, that's $40 a contract. On $1,000, you can buy 25 contracts, control 2,500 shares for $1,000, right? 40 cents, $40 a piece times 25. So you say, okay, well, it doesn't have to do that much, does it, to get you up to 50% and then hopefully a lot more, right? And it doesn't. And this is why a lot of times, folks, I actually love trading non-tech options and buying non-tech options when you start to get trend work saying that the trend is your friend here, because the techs, as you know, you pay for the privilege of trading tech options, and they can still be very profitable. But the reality is that, you know, you're paying a premium for that. So it kind of hurts your leverage on a tech name, and it takes a little more time, a little more of a move usually to get the tech one right. Whereas here, it takes a very small move, right? From 37.25, we just needed to go to like 37.6 with no time to say, look, that'll get us there. And you can see we're getting it in just basically the next trading day, right? We're up to 37.8, and you can see we're basically saying lock it down. And now you're just letting it run. So that we just let this thing run into a Friday afternoon. And you can see here a 37 strike call at 38.5. It's going to be worth a buck and a half. We got out. The high was 38.86. $1.86 would have been the highest intrinsically, but we got out of our 130 exit and went ahead and popped it out of there. And you can see that I'm closing about 38.5. But happy to just lock it down. You see that last piece, 297%. So, and you still had 8 of those contracts, right? So on 8 contracts, you make $119 a piece, or roughly $950-ish for the final roughly third of your position, right? The first 17 made you $20 a piece, or $340 total on the first 2/3-ish. So you can see, again, the bigger opportunity is in the runner. Don't cut yourself and your profits short. Take that risk capital off. That's the first objective, and then let the rest run. Give it a chance. Okay, here's another one here on Alibaba. And it's kind of interesting because you can see that we had a situation where Alibaba had been kind of dancing around its intermediate term average here, right? Or short term average even. So you can see it was holding nicely off that medium term average. And our system said to buy it as of the close here, when it just closed back above this line here. And ironically, we ended up buying it, you can see right here on an initial gap against us. So we got a better than expected entry, right? The stock had closed the prior day about 137. It opens under 135, and we're buying 136 calls on a Thursday, right? We don't have a lot of time in this one, but we catch the flip very quickly. By the next candle before that day's close, we locked down 3 of our 4 contracts at the 50% gain, right? So this was a day trade, right? We're not in the game to technically try to day trade, but when you have 2 days left before expiration, then, you know, we're not going to hang around that long. And you can see coming off of that it snapped on up there to as high as about 141 and a half, almost 142. We booked that final contract out at 390. Not that much bigger than our 50%, made 85% on the second piece. So that's not anything to brag about there, but it's like saying, look, that's actually where it shows you that even if it opens lower, if our system says to follow the trade and follow the signal, we're going to buy that lower open and bet that it's probably going to reverse, and bet that our risk reward's pretty good at that point, even if in this case it did gap against us. And I said, hey, I prefer up gaps to down ones, but we still follow the system. The system said get in, be a part of this, and caught the flip from 135-ish to 141 or so. So that was about $495 in profit on your 4 contracts in 210, $840 invested. So pretty healthy. Now here's where we really get excited. Again, remember I mentioned non-techs. Some of my favorites lately have been the bank and other financial services stocks like Capital One, COF, just bought out Discover, credit card business, big profitability. Obviously, there were concerns at one point about, hey, if we're going into another kind of a tough period with tariffs and whatever, then, is that going to mean that they're going to deal with higher delinquencies or less interest in spending? And so that concern was out there. But this is before some of that, but saying, look, here's a pattern where if you missed it before, you say, look, we're holding nicely. You can see we've been holding that intermediate term line. It's well above the long-term line. We got that little reversal there. You can see, though, we're still waiting for it to go back above its short-term average here and get a nice positive close. So we don't trade on that next bar. We trade as it then flips up and finishes well above it here. So you see clearing that prior resistance into the start of the next bar. We're trading roughly just a few pennies under 109, call it 108 and 2/3. But the point is, we're dealing with a near the money option here, slightly out of the money, but not by much. And so you can see, think about it. If you bought 100 shares of stock, it would cost you $10,900, right? Almost 11K. We're controlling that $11,000 worth of stock for just $85, right? That's happening on a Tuesday afternoon. And you can see here that the very next day on that Wednesday, first 4 hours of the day, it rips. It opens higher and keeps trading higher. Even goes, remember, we got a 109 strike, and it goes up to 111. Now, we didn't even need 111, right? We just needed $85 to turn into $130. On 11 contracts we bought, did the math, and we figure out that we got to sell 8 of those 11, which is just over 70% of the whole position at the just over 50% gain, 52.9% in this case. It goes on up to about $2 intrinsically on that same half day. And it pulls back that next last part of that day back to about 110 and a quarter at the low. And we're still fine because we've got a risk-free trade, right? You've got your risk money out of the trade. Give it a chance to run. You'd say, well, I don't have that much time left, right? I only got a couple more days. But look at what those last 4 bars do. Thursday, it grinds a little higher, but look at the Friday morning, right? That's a Friday AM right here. Put an F on it. A lot of people would not trade that last day. And I'm saying, hey, you've got a free trade. You've got a chance to see that it closed the prior day here about 111 and a half. It rips to 115 in the next 4 hours of the final expiration day, right? That's where you get massive leverage, right? If you close out at 111, maybe it's worth 2 or 2 and a quarter. We close it out at 5 the next day. And that's with finishing the day around 114 here, right? You see it closed officially 113.93. We got out at 130 on that Friday afternoon, took down the 488% gainer. And even those last 3 contracts, right? Each of those contracts made from $85 entry to $500 exit, $415 a piece profit times 3, $1,245 of profit on just the final 3 contracts, right? The first 8 made you something just about $450 or so. So anyway, point being that, this is the kind of stuff, maybe not that much, 45 times 8, 360. But point is that, look, let the runner happen, give it a chance to happen, I should say. They won't always happen. We're still going to have to deal with when they don't and take the 50% losses when they stop us out when we get whipped. They will happen that way. But the power of those winners is so much greater, right? So that's what you're looking for, is that power of the trend. That's why I called my website 26 years ago BigTrends.com, because I'm like, I throw away the little fish. I'm not interested in scalping for nickels and dimes. My friend Tom Dorsey used to say, don't pick up nickels and dimes in front of a bulldozer. And I think that's a great analogy to say, yes, let's be riding the bulldozer. Let's ride the big trend and not worry about the little blips in between. Okay. So that's where you can really get massive leverage and really take advantage of the true power of options leverage. So those are call trades. Let's talk about the downside. It's a little bit different on the downside. So a couple triggers are, two things have to happen. We have to get a short-term average close or move cross underneath the intermediate term average. We see the purple crosses under that teal color line there. That's the short term under the intermediate. And in that same bar, we have to close underneath the long-term line there, right? That blue line there. So we got both there on AMAT, Applied Materials Chip Stock, right? Not cheap options, right? You see it's trading in the neighborhood of 225, and we're buying this 1% out of the money, 222.5 puts, and they're not cheap, right? They're 315 bucks a piece. So on $1,000, that gets you in for 3 contracts, 945 bucks total. We're doing the same kind of targeting here, though. First objective, especially with a put, especially you know how the market's been, and you can see by the way our DMI line's a negative, crossed over to the upside of the positive, went down. So that's a definition of a bear trend right there in motion now. So look, we sell out 2 of our 3 when it pops the next bar from you can see from we got in that midday, kind of at the close of that first 4 hours on that Wednesday. We don't have a lot of time here, right? We're going to the Friday expiration. You feel a lot better though on Thursday morning when it pops down to about 215 and you got a 222.5. It's got to be worth like 7.5 at that point. I don't sweat it if we leave some money on the table, because my first objective has been met to sell 2 of our 3 contracts, 2/3 of our position at the 50% gain. We've gotten our risk money back, right? You put in 945, you got out 950, right? You're not sweating it. Even if you had a couple bucks in for commissions, don't worry about that. That's more of a just a nuisance factor calculation. We don't sweat that in our calculations, but saying, look, they've come down so much. Just focus on the general principle, which is get your risk money back and then let that rest run. Now, look at what it did by Friday afternoon. You know, you could have been nervous here and said, oh, look, it's holding, it's starting to bounce. You put a big question mark. Should I get out there? With that close, it was like 217.50. Maybe those things are worth $5. The final day, it drops from 217.50 to as low as about 210. Those things were worth 12.5 at their peak. We got out at 1075 at our 130 exit on that Friday expiration day for 241%. So you've seen now a couple of examples where it paid to hold into the expiration day, and not just mildly paid, but paid in a big way, right? Where you basically more than doubled your endpoint money. If you know we would have gotten out at 5 if we were getting worried there on that Thursday afternoon, now you get out at 1075, right? So instead of making something like 50 or 60%, you make 241%. That's like game changer kind of money there, right? So that's the differential, that when you're freed up to now have no risk in the trade, you should free your mind to opening up to say, I'm going to give myself the staying power to stick with this and give it a chance. They won't all go, but basically, you know what? When they do, they're a lot of fun, and that's why we do what we do, right? So you see, here's another one with Square. Now they've renamed themselves. Don't ask me why. XYZ. It's also called Block now. This is showing you a little bit more dated example, right? But go figure, Block and now XYZ is a symbol, and it did have a big pop here the other day. But point being, this is a while back where the pressure was on Square, and you can see that we were picking it up as we had our cross unders as of the close of this prior partial day bar, right? So we're getting in right off of that open. You see by the end of that first bar, it's flipped back up to about where we got in. Not much is happening. By the following bar, we're slightly to the good, but the big money's made as we go from about 87. You see we bought the 87 puts, maybe when we're closer to 87.5 or 88, but it's about 87 into that close, and then it gaps down to 85, trades all the way here to 82, right? So we got 10 contracts in at 99 cents, 99 bucks a contract, $909 invested. We saw 7 of our 10, 70% at the 149, 50% target. And that's done before the gap, right? Then on the gap, look at how 50% turns into 273% And that was probably with like a Thanksgiving holiday shortened day there because there's no Thursday showing up there. So the idea is that, hey, I take it back. Maybe it's no, I'm taking it back. Maybe it's some other kind of a holiday. But point being that, look, it was a January option, so that wouldn't be Thanksgiving. But point being that, look, it goes from 50 to 273, right? And just one more trading day, right? How many times have you taken a profit and then one trading day later gone, oh man, look at how much money I left on the table? And so the beauty of this is that we're not doing the all or nothing. We're taking something off, and then we want it to keep going. But if it doesn't, we've got the relief of saying, look, we've gotten our risk money back. 7 contracts exited at almost a buck, $150 a piece, give or take. And you say, okay, well, that gets you back your risk money and a little extra. So we want it to keep going. It does. And we say, thanks very much. Let's take it on that and be done with it into that big gap down, big candle there. So that trade generated $1,163 in profit on the two halves, or two pieces, 2/3 and 1/3, 70%, 30% added up together. So point, and that's gross before commissions. But again, commission shouldn't cost you more than $10 in and $10 out on a 10 contract trade. So really dramatically keeping the vast majority of what you earn for your efforts. So your job really becomes a lot easier here, where you're not having to pick being right, being a hero. You're saying, look, just follow the system. Just your job becomes to consistently execute whatever your capital allocation that you've determined is appropriate for you. And again, I always encourage new subscribers to say, just start small and steady and just keep applying that same steady amount to each new trade. Some more examples real quick. You can see Capital One. We talked about it earlier. It wasn't the only time we hit Capital One. We had it again where you see we're not on this prior wave here. So we did not get this wave, which would have been a good, at least first kickoff. But then this is the nice thing about this strategy. Have you ever missed a trade and then felt like you're just on the outside looking in the whole way because you're remembering, man, I wish I'd bought it back here in this area. And now I'm saying I'm buying it because of this close below and then this flip back above right here. So there's our buy signal. You can see the first bar we're in the trade, we're actually slightly negative. We got in about 141.5. It trades down about a half point to a buck. That's okay. We're not worried that it came back underneath that. We're saying, look, we got a 50% stop loss. We're targeting 50% gain on our 2/3 of our position. Got 12 contracts in at $80 a piece, 960 invested. Couple bars later, by that following day, look, it's ripped all the way up here to like 145. Those things are worth almost $3. We got out at 120 on that first piece, and now we don't sweat it on the rest. We say give it a chance to keep running. And here you go into the end of that holiday shortened week, and you see this is one where we get out closer to 148 and change. We got out at 630. It went to about 149 and change, but we're not complaining. 687% gain on that trade, right? So those are the kind of trades that will quickly and dramatically boost your bottom line, right? They're not going to happen all the time, but they happen with enough frequency, in our opinion, that we think it's well worth trading. Again, the key is look at the difference, right? The people who sold that whole trade out at 50% thinking, what can 4 more contracts do? And see how it becomes more than tenfold on the second piece what their first profit target was, right? 50% turns into on the rest, 687%. You're really kicking yourself if you're not giving that a chance to run, right? So this is where the leverage, the power of the options that you bought, the trend working in your favor can really stack up very quickly. Talk about losers. What do losers look like? Hey, sometimes we get caught with a surprise here too. This is actually a bearish one on GE where we thought it looked like it checked the boxes here at the close of this first big shot down here bar. Thinking, okay, well, this thing's we're getting in right off that next open there, thinking and it's starting to work for us. And then it has one of those flips, right? That's one of those engulfing patterns, right? It opens a little bit lower, flips way up there. And we end up the next bar getting our stop hit 51.2%, right? And at 123 a contract, out at 60 cents a contract. So that's going to happen, right? And so the point is that just because it's look like it's worked really well when it works, if it doesn't work, we don't want to hang around. We don't want to wait to find out, because part of the problem here, remember, is you're buying somewhat out of the money options in most of these cases. So you do need that time element to be quelled by a trend working in your favor. If the trend is not working the way you thought, then you've got a problem, right? It's like that, what was it, Will Rogers quote where he says, I only buy stocks that go up. If they ain't going up, I ain't buying them, right? It's in the same way on the downside. They're not going down, I'm not buying them, right? So if it's getting the wrong direction, reversal, hitting our stop and just basically telling you we're on the wrong side, better to admit it, take that first loss and not compound it by putting more money into it or hanging on and hoping and turning it into a total loss. Right. So there's always risk of loss in options trading. You could lose what you invest in a trade if you get some massive gap against you. It can happen. So that's why I just say better to trade small and steady across all the signals than trying to pick and choose and getting stung on one where you loaded up too much. So, and the gaps can happen too. A gap past your first target, larger than expected winner. Here's a really big one on Meta. So this is one of those where we really liked the action, how Meta had caught its intermediate average and then reversed back up. And this is, but it's because we had pulled back and then we'd had this prior reverse bar. So this is another one of those where we reverse. That check mark is actually where we're saying it doesn't have to close back above the short-term average, but it does have to close positive and show that powerful reversal back up after the breakage of the short-term average. So we're buying on the next dip of this next bar right here and happen to get a nice hold and a nice intermediate term trend holds, longer term trends up as well. Meta just about a day later on that Thursday morning rips. When we got in, it was about 467. You see, we're buying a bit out of the money, about 1.5% out of the money, buying the 475 calls. And when it gaps open to something like 480 plus, that means intrinsically the options were 5 plus the time value, we get out at 650. So our 50% target was obliterated. We got 149% on the 2 contracts we sold in the first 2/3 of our original 3 contract entry at just $261 a piece on the way in. But look at what the last one did, right? We took it all the way up here to 1320. Stock got all the way up to 494, worth about 19. We weren't complaining at 13 though, because 1320, because that still made us a 5-bagger, 405% on our initial 261 investment, now worth 1320. So even that last contract in this case makes you over $1,000 just on one single contract on Meta, right? So it's powerful how this can work for you. I've only got a few minutes left, so I'm going to kind of move along and show you how you can get access. But of course, the idea is that yes, it's not conservative, right? We're talking about aggressive growth here, but we think with this trade management style, it can really reduce your stress. It can get you to a risk-free position that much faster and still allow you to run on the rest of your trades. Even it's like that old phrase of like people say, well, instead of having 100% of nothing, I'd rather have even a third of something good, right? If you had a third of Meta, a third of any of these other examples I've showed you, right? It's like even if you said the other 2/3 was just ends up being kind of a wash, kind of a break-even proposition. It's by getting the other 2/3 out to get you the risk-free last third or so. That's what makes your stress go down, and it really sets you up for potential big home runs from enough time to time that it can really carry your portfolio in a pretty dramatic ways. How do you get access to these trade alerts? We call it bargain options trader. And what we're looking for here is typically people say, oh, let me try it for a month. Well, what I find is that the short-term trials, usually people aren't that committed to, especially if you don't pay much for it or anything. And so I'd rather have you have a little bit of skin in the game and start to build a pattern of success over a reasonable amount of time. I think 3 months is a great starter trial period, believe it or not. I'm not talking about 1 week, 2 weeks, or a month. I don't think that's enough time to really see enough out of any given methodology for a variety of different market conditions. So try it for the next 3 months, and I'm going to give you a super savings offer to get started here. So in addition, I give you what even longer term subscribers get in terms of settings and rules. So we just ask that you keep it for your own benefit as part of our terms of service, and you get to learn the system. It's not a black box. You get all the parameters of exactly what those moving averages are, exactly what our rules are, and you can follow along that way. Yeah, I do weekly video training for all subscribers and bargain option traders to know what we did last week, good win or lose, and what we're expecting for the next week. You also can reach me and my analyst team directly via dedicated email. If you bought it off my website at BigTrends.com, you'd paid $297 a month times 3 months. That'd be $891 you'd be investing in the service. I'm going to make it much more attractive, as Fausto and the CTU team have been so good to me. Appreciate y'all including me today, and always a pleasure to come back and share what's working for our Big Trends community and what can work for you all as well. Bottom line is that you get not just trade alerts here, you're getting a lot of education, a lot of trading resources and rationale that goes behind this And we're taking something like 80% off here. We're taking it from $891 that you pay off the website down to just $177 for the next 3 months. That's the next 90 days access for just under $2 a day, $177 overall. No future auto bills, nothing else to worry about there. And what we did is we set it up for you as a special web page here. And we typed in BigTrends.com as CTU. Usually, let me just double check if that's actually set up as our member site here. 1 second. If you go to, it is set up for BigTrends.com/CTU. Even simpler. I love how my team loves to the KISS principle as much as I do, keeping it simple. BigTrends.com/CTU will take you to the order page, and our order pages are incredibly simple. Again, the KISS principle at work, right? Do as much as required and no more, per Einstein's quote there, right? That keeps it as simple as possible and no simpler. But the idea is that, look, you've already seen the power of this. And so really we've already taken all the promo code discounts and no other discounts apply. We're taking it down some 80%, $700 plus off the normal $891 retail price, just $177 for the next 90 days or 3 months access. You get access to me and my team. And of course, anytime you got a question, you can call us toll free on our 800 Big Trends line up here in the top right, or email us clientcare@bigtrends.com to get to my customer service team. Now, you can pay on this site. It's a secure page. So you can put in your payment info, put in all your other billing info, whatever. If you do that, put in your email, make sure your email is correct. That's the first way we're going to communicate with you. We'll send you follow-up instructions on how you can set up for text alerts, etc. And I'm running out of time. So basically, let me just say, okay, do it that way or go to PayPal. I love going to PayPal. That's my preferred way to do it. A few clicks and you're locked in. So like I said, that's really phenomenal value. And like we said here, it's simple buying of calls and puts. We've averaged $1.65 a contract going back over the past year or so. And then you see Tuesdays through Thursdays is our preferred entry window, taking it out to the Friday afternoon at the latest. So this is on the cutting edge, right before expiration, but where the leverage potential is really the greatest. Real-time email and text alerts, no more than 4 open trades, out by Friday at 1:30. You get all the bonuses, weekly videos, settings and rules, and access to me and my team. That's why the support has been so valuable in our 26 years and counting here at Big Trends. Like we said, even the first one we showed you on, it wasn't even the biggest example on back earlier this past month, in 50, then out at 156% on the last piece. So again, go there right now. 3 months, you get all these bonuses. $891 value takes it down to only $177. But you got to act quickly, lock it in before it's gone. Thank you to Fausto and the team for including me, and that's my way of saying thanks back with this bonus savings offer to get folks started. And folks, the one thing when you get started, just start small and be steady. Make your number one goal that you will be consistent in whatever you're putting in per trade and consistent in your execution. Don't pick and choose. That really is a way to truly follow a system and let that system show you how powerful it is. Don't take my word for it. Let the system prove it to you over the next 90 days. Back to you, Fausto. Thank you, sir.
Price, thanks for coming on again. And yeah, like everything else, I mean, this is one reason why Price have been around for so long. You could see very smart guy in a way, knows his stuff. And when he gets going, I mean, he really wants to teach you guys how to market work. So definitely take him up on his offer. But that's right. We're going to come up to our last guest. And by the way, we are going to finish up once Silas is done. Big announcement at the end. So you definitely want to stick around because earnings are coming out on Tesla, and we'll check out Google, a couple of, especially Tesla. I own Tesla. So we're going to check out level 4 and level 3, how it works. So you definitely want to stick around to the end. But let me pass the mic over to Silas. Just really quick, let me just tell you a little bit about Silas Peters. I known him for over 10 years, maybe even longer than that, I would say. But he's, basically has a very similar style the way I do it. Does a little bit more stocks, options, futures, commodities. He started his career right out of college, going out in global trading desk in Chicago Board of Trade. He executed trades to hedge funds, banks, high net worth clients. So you could see like he was really in the depth of, in the pit, just like I've been in trading in the market. He basically discovered his passion eventually after browsing with everything around with the commodities trading, and he got hooked over since. So his background gives us a deep insight on how the market really works, especially for professional traders like yourself. So Silas has a sharp market insight. He brings a real world, no fluff approach to trading education, and we are always excited to have him back here on Cyber Trading University. So get ready to take some notes, everyone. So Silas, thanks for coming back. I'll pass the mic over to you.
What's going on, Fausto? Thank you for that awesome introduction. How you doing?
I'm doing great, Silas. How's everything going with you? I know it's been a while. I haven't seen you in a while, but I always hear from you all the time.
I know, man. It's been a while. Look forward to catching up with you soon. I appreciate you having me on.
Always a pleasure, my man.
All right, so I'm going to go ahead and share my screen. Fausto, are we good to go?
Yeah, go ahead. The stage all yours. Take the screen.
All right, man. Thanks a lot. Thank you, Fausto, and the CTU team. I really appreciate the opportunity to be back here. Thanks for the introduction. Let me find the chat window. What I want to do, I want to keep everybody here on point. I know, as Fausto said, we've got big earnings coming out. So we're going to try to take this into the cash close here. And again, very excited to be here. So again, my name is Silas Peters. I'm founder and head trader of Trades Trading. Looks like the audio visuals are good for everybody. And I'm really excited about sharing this unique strategy with you today. It's what I call my 15-minute trading blueprint. I've been using this for around the last 20 years or so, and it's still absolutely crushes it. Now, I want you to think about that for a second. If I'm still talking about this 20 years later down the road, and you think of all of the advancements in technology and all the tools and widgets that we've been able to come across, I'm still using this bread and butter strategy. So I just want you to think about that. There would be no reason for me to waste my time, blow hot air to you if this is something that still wasn't working, okay? In fact, I've used this multiple times today, trading futures markets. And so let's get started. And the best thing about it is simplicity, okay? So this is a mechanical, stress-free, emotion-free trading method, can be applied literally on any market or time frame. So let's get right to it. We must take a quick moment to read all this from our friends from the regulatory governing bodies. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade, i.e., you guys and gals know you can't lose money in trading, so make sure you manage your risk appropriately. Now, what I want to do is I'm going to be a little bit interactive with you guys today is what does everybody trade? You guys trade stocks, you trade options, you trade futures, commodities, you trade Forex. I like to kind of get an idea of the crowd here and what everybody's doing. So we've got a lot of stock traders in here, stock and options, some futures. I trade stocks, options, futures, a little bit of Forex, not much, but primarily options and futures and commodity options as well. And the good news is that regardless of what you guys have typed in and kind of all over the place, is that what I'm going to share with you today is highly accurate, works in all markets, as I've said, all time frames. It's 99% mechanical. It's perfect for small accounts, but most importantly, it's simple. So I've used this strategy with $2,000 accounts, $20,000 accounts, even $100,000 plus accounts. Every market situation, from the 2008 financial crisis, roaring bull markets, traded it through debt crises, government shutdowns, presidential elections, flash crashes, you name it, from scalping and intraday trading to swing trading for a few days and position trading for weeks and or months. And you can't do this with small or large accounts if you wish. You can take as little as 15 minutes a week. Now, before we dive into all this, I'm going to introduce myself, who I am, maybe why you should listen to me. I'm a simple dude, family man who thoroughly enjoys being a two-girl dad. I've got a strong passion for the markets, golf, cooking, the outdoors, and Alabama football. But this is where it all started, the great city of Chicago. It's here where I cut my teeth in the commodity markets right out of college, working at the Chicago Board of Trade. Very quickly, I found myself working the Asia, European, and early New York session trade desk, trading for our hedge fund across the CBOT, Merck, NIBOT, NYMEX, various London and Asia exchanges, and trading for CTAs, trading and handling enormous size, 300-lot bond orders, 400-lot big S&P orders, 100-lot gold option orders, 250-lot Japanese government bond orders, and such an eye-opening experience to see how the biggest traders, market makers, and funds were trading and making decisions. So I did this for a while, soaking up everything I could, eating everything market-related, acquiring multiple futures and securities licenses. I was a sponge. But then my college sweetheart, and now my wife of 20 years, talked me into coming home to settle down and start a family. So we headed back down south and immersed myself into the quieter side of finance, helping managing equity and fixed income portfolios in that glass building there. Then went work for a private $2.5 billion private family office. And then during this journey, I managed to stay in the commodity markets, running and owning some brokerage units, and then finally started my publishing brand in 2016. And it's here where I found my real calling. It's here where I teach students across the globe different ways they can generate the skills necessary to trade, manage portfolios, and turn their trading around in the right direction. And today, I want to help you too, but let's quickly go back to the journey. Journey wasn't always easy. There was a learning curve, several obstacles and hurdles on the path to where I am today. First step, obviously learning. School cannot teach real life experience in the markets. I made money, made a substantial amount. Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account and I blew up others in what I like to call revenge trading. Anybody familiar with revenge trading? Very humbling experiences. Almost gave up, almost quit. Nothing seemed to work. I always seemed to be on the wrong side. But guess what got me back in the game? Remember, I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago. And guess what? I got back on track. Started banking wins again. I had gone off the reservation, looking for the elusive Holy Grail, but my journey ultimately led me back to where I had first started. So I went back to my roots, worked my repeatable process to find overall consistency. Now, who here is or has been a victim of paralysis analysis? Anybody affected by this? Now, this is a real thing that happens to all of us. I'm raising my hand. I've been a victim in the past. Who here has done, all of the research they thought they could do? Got their finger on the mouse, ready to pull the trigger, and then, some line crossed that line, or Jim Cramer says you should be selling instead of buying. We've all done that, and then you freeze up, and then you miss out on the opportunity. So what we're going to do today is kind of keep up with this theme, is that trading is not easy, but it can be simple. And once I show you what I have in store for you today, it should be self-liberating, okay? So this is my agenda and promise to you, is that we're going to learn a simple and mechanical setup together that is repeatable regardless of the market or time frame. Does that sound good to everybody? So we know that markets don't go straight up or straight down forever. They go up and down in waves over different time frames, and literally, billions, if not trillions of dollars have been made by smart traders by recognizing those trends. And at the same time, that amount of money has been lost by those who think they knew what they're looking at and then got it wrong. So we're going to talk about how to get you on the right side of these moves. I'm going to show you how to find trades like this in Halliburton. This simple, short, mechanical setup like we see here, here, and here. This is 10% move, 8% move, 12% move. And look, it may not sound sexy when, you turn into, you get your penny stock letter about gains of 1,200% or whatever. But these moves start to add up. We're talking, $1,100 on 100 shares, $2,000 on 5 option contracts. Same thing on Bristol buyers. Finding shorts here, longs here. You got 3.5% moves, 6% moves, 9% moves. They all start to add up. Okay, here on Lockheed Martin, I'm going to show you how to find shorts like this, longs like this, longs like this. This is 6% move, where you can, sell the stock, buy put options, sell bear calls, buy stock, sell bull puts, buy bull calls. Here's a 30-minute chart of gold futures. This is $800 per contract move, followed by a $450 per contract move on a 30-minute chart. Day traders, this is a 5-minute chart of even the S&P. You got 3 points, 8 points, 6 points, 10 points. This is $1,300 a contract in a single session. And then here, the 610 tick chart for those that like a little bit more action. This is 4 ticks here on the bonds. This is 7 ticks on the bonds. Who'd be happy with $218 a day, $500 a day, $1,000 a day? The pattern that I'm going to be sharing with you is responsible for identifying these moves before they happen and let you know when to get out. So you're saying, really, is it that simple? Well, again, we all know trading is not easy. It's not easy, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, system setups, you name it. I tried all kinds of stuff, indicators, red light, green light systems, Greeks, alert services, robots, and most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on pure price action led me to see one simple pattern over and over again. And guess what? That is when it clicked. It all started clicking. And so if you are sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. I'm telling you right here, right now, that this is a simple mechanical setup that anyone can learn, and you will keep this in your trading arsenal for years to come. And in the end of today's workshop, I'm going to make you an offer you can't refuse. You can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we'll be discussing today is, drumroll please, the 1, 2, 3 pattern. Who here has heard of the 1, 2, 3 pattern before? Let me see in the chat some yeses, some nos. But this is one of the most fundamental technical patterns in the textbook. We're talking technical analysis 101, but it is highly, and I mean highly, overlooked by most traders. Why? Because of its simplicity. So let's talk about this setup. It is price action based. And guess what? Price action is king. And speaking of king, did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic patterns, competitive analysis, on, until they find the perfect location for a new store. Excuse me. Burger King approaches it differently. They wait to see where McDonald's opens up a store. They open one up across the street or down the block. They get the same result with a lot less time and effort. So when we relate this to trading, we can let all of the big Wall Street institutional traders do all the research on which markets to buy or sell. But all we have to do is look at price action, which takes into account all their fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. Now, the setup, as I said, is price action based. The pattern is comprised of a low, a higher high, and a higher low, and a break of that higher high in the instance that we're going long. Inverse if short. Anticipates a change in trend from down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. A strategy usually occurs at the end of trends and swings. Can be an indication of a change in trend, can also be found with a trading range. And I will stress that it works extremely well when the pattern sets up at significant areas of support resistance, other technical patterns like head and shoulders, tops, bottoms, and more. So let's take a look at the basic mechanics. Let's start with identifying 1, 2, 3 bottoms. So we use 1, 2, 3 bottoms when we are bullish or looking to go long. We are expecting higher prices, so we're buying the stock, buying call options, buying the futures, whatever the market is, expecting to go higher. So as the market trades lower and finds support, that gives us our number 1 starting point. As the market retraces higher and pulls back, that gives us our number 2. As the market retraces lower and stops printing these higher lows, that gives us a number 3. And 1, 2, 3 bottom traders are looking to get long on breaks or closes above the number 2. When we look at 1, 2, 3 tops, the same rules apply, just flipped upside down. This is when we are bearish or we're looking to go short. We're looking to short that stock by put options, expecting that market to go lower. So here our number one baseline starting point is when markets push up and finds resistance. That gives us our number one. The market retraces lower, pulls up. As we stop printing these lower highs, we have our number three. So we have one, we have our two, and our number three. And 1, 2, 3 top traders are looking to get short on breaks or closes below the number two. And so one of the great things about these setups is we don't really have to worry about the first two legs. We don't really need to be glued to our screen unless maybe we're trading on tick charts or something. But all we have to do to cash in on these setups is when it's about to go past the number 2 point. Okay, it's that simple. So let's not waste any time, because seeing is believing. Let's dive into some charts. So we're going to start here with a 1, 2, 3 top pattern on the Australian dollar futures. Now, if you don't trade futures, you could look at FXA, the ETF that tracks the Aussie. Forex traders could look at Aussie USD, and you're going to see the exact same pattern. All right, so what we have identified is a number 1 point. That's a 52-week high, okay? Now, we don't require a 52-week high or 52-week low. We'll talk about ways later where we dial that back to find more opportunities. But in this example purposes, we're looking for a 52-week high. So here's our number one. Market retraces lower, starts to pull back up. That gives us our two. As the market stops printing these lower highs and pulls down, that gives us our number three. Now, we could have traded as high as up here, as long as we didn't take out the one. But now we have our pattern. So we already know all the details and rules of our system, right? We know exactly where we're looking to get short on breaks or closes below the number two. But you might be asking, hey, Silas, what about the other important ingredients of the recipe? Like, hey, where's my risk? Where's my target? All great points, okay, that we need to know. So our initial risk is going to be above the high of the one. Our initial target is the distance between the high of the one measured to the low of the two, measured down. So you'll see that right off the bat, it's a 1-to-1 risk versus reward. Now that's okay, but we can do better, okay? It's very important to let the market materialize in its anticipated direction. So as we start breaking down, taking out these swing lows, we can then move our stop or our risk above the next logical area, which is above the high of the number three, okay? So now we've cut our risk by maybe 60 or 70%, and we go on and we meet our 225 tick profit objective. Now, this is a daily chart of Walmart. Here we have a 1, a 2, and a 3 pattern. We know everything. We know that where 98% of other traders are sitting there scratching their head. Well, where am I going to get it? Where am I going to get out? Where's my risk? Where's my stop? Where's my target? We know all that days in advance. We know we're looking at short on breaks or closes below the number two. We know initial risk is above the high of the one. We know our target is the distance between the high of the one measured to the low of the two, measured down, which is about $5 in this example. Okay, we'll go down and meet our $5 profit objective. So now let's look at 1, 2, 3 bottom examples. So as you would guess, the same rules apply, but just now in verse. So here's a 15-minute chart of the E-mini S&P. So, whoa, buddy. Does it make sense to look for a 52-week high or low on a 15-minute chart? No. So if you're on a 1-minute chart, a 2-minute chart, 5-minute, 10, 15, whatever, you're looking for new session highs or new session lows. So you guys know that the markets are moving around the clock. So wherever you start your trading day, maybe it's the 3 a.m. European session, maybe it's the 9:30 New York cash open, maybe it's lunchtime, maybe it's the last hour of the day. Wherever you sit your butt in that trade desk, you're looking for new highs or new lows. So we have a session low, 1, 2, 3. Let's talk about a couple of entry methods. Aggressive traders might work a buy stop, a tick or two above the number two high. You get triggered into the trade. Now, an alternative method that I like is to wait for the market to come back and retest and or come back and do what we call a second pass or hook, a second confirmation. So sometimes the market will bust up, zip up, and hit target, leave you at the train station. No need to get your feelings hurt because there's plenty of other opportunities. Sometimes the market will bust up and then say, yeah, no, I'm going to roll back over and stop your butt out. So waiting for this second pass or hook can sometimes give you extra confirmation that we are ready to rip to the upside. This is a weekly chart of Apple. Hell of a way to catch some position type moves. We have a multi-week low here. We also have a double bottom. There's our pattern. Aggressive traders will be working or getting long here on the initial breakout, or you can see that we go sideways for 4 or 5 weeks. We come down, retest, hook back up. That's our confirmation to get long Apple. How? What do we do? How do we take advantage? Well, we buy Apple stock. We can buy calls, call options, sellable, put credit spreads, whatever your flavor or style may be. Now, let's talk about failed trades. Sorry, don't mean to ruin your day, but they don't work. We know we're all big boys and girls here. We know that there's nothing guaranteed in trading or in life. And this is a trade I probably took in my live account. Trade's going higher, getting pretty much vertical here. Here's our 1, 2, 3 pattern. Aggressive traders getting short on the trade break below the number 2. If you waited for the second pass, you're getting short right here. You're up a couple points. Now, if you sat on your hands and didn't do anything, the market turned around and stopped you out above the high of the 1. If you exercise any money management, as we started taking out these swing lows, your stock would have gone from here to now above the high of the number 3. And then as the market did turn back, you get stopped out right here. But guess what? This high is greater than this high. So we actually get a new 1, 2, 3 count. And we end up having a new trade that ends up being profitable. Now, this is what I call a no trigger or avoided trade. It's neither good, bad, or ugly. It is what it is. And let me tell you why I actually like when this happens. So here we have a pattern and we're looking to get long here, but the market says, no, I'm going to roll back lower. We take out that 1, so we start to count over. 1, 2, 3, we're looking to get long here. Market says, nope, I'm going lower. We take out that 1, we start to count over. 1, 2, 3, we're able to get long on this third attempt. Now, what is likely going on here is this. So we have prices making lower lows, lower lows, lower lows. If we added an oscillator, such as a MACD, stochastics, RSI, and it's doing this with higher lows, price making lower lows, lower lows, lower lows, oscillator making higher lows, what is that called? What is that called? Yes, it is called bullish divergence. And so when we have bullish divergence, in this case for a long, with these setups, that adds a little bit of extra icing to the cupcake. All right. So 1, 2, 3 pattern trade management confirmation of entry is on a break above the 2 or B point for a long, or a close or break below the 2 or B point for a short. Exit strategies. If you're only trading one share, one contract, one futures, one option contract, whatever, I say go for the distance between the 1 and 2. So we know the pattern looks like this, right? We have a 1, a 2, and a 3. And we know that if we break above here, we're looking to get long, and our target's going to be somewhere up here. It's uncanny how more often than not, it will tag that off into the tick and then reverse. So this is where I say, hey, if you're trading, if you have the ability to scale, trading multiples, I say, hey, take a third, half, 2/3 off, whatever, at the initial target, jack your stops up to break even, put yourself in a free ride, free position, and let the trade run its course. Now, however you choose to manage that balance is ultimately up to you. They come a dime a dozen. Parsar, moving averages, 2, 3 bar candlebacks, support, resistance, whatever. You choose what works best for you and your situation. I like to use good old-fashioned price action, targeting swing and pivot high lows, supply demand areas, and the like. So I've showed you that this setup works on any market. Pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty. I've also showed you that it works on any time frame, whether you trade on a tick chart, 1, 2, 5, 10, hourly, 4-hour, daily, weekly, or higher, and on any trading style. So I'm going to take a quick swig of water here. What is everybody's trading style? Are you guys position, swing, day, scalp, tick? What is everybody's trading style? It's always interesting to see. All right. All right, good deal. So as I expected, kind of all over the place, and that's good. And the reason I asked that is because, you've ultimately got to figure out what your bread and butter is, okay? I'm not here to tell you, hey, this works only on a 5-minute chart of NASDAQ or a weekly chart of Alibaba, because it's not true. We're trading price action and it doesn't matter. Now, these are some of the time frames that I like. I also like the 1 and 2 minute intraday, and then those that like scalping, the 6-10 tick chart works very good as well. 1, 2, 5, 10 I like for intraday. The hourly, 4-hour, daily are really like my sweet spot. But everybody's different, right? Some people have no desire to day trade. Some people, work 9 to 5. Bottom line and point is that you can design the system to be flexible around your schedule, okay? Your schedule or your preferences. Now, you've seen the proof. Let's look at some real trade examples. Not to say that what we've been looking at were fake examples. They were real by all means. But let's talk about some trade examples we utilize in some of our services. So this is a daily chart of crude oil. And I'll let you guys and gals read all this on the right. And I'm going to work myself from left to right, okay? So you can look at USO. You're going to see the same patterns, guys. And so here we have a 1, 2, 3 pattern, okay? It's a 52-week high, 1, 2, 3. And we already know everything we need to know, right? We know that we're looking to get short on breaks or closes below the number 2. We know our risk is above the high of the 1. And we know our target is right here, which is the distance between the 1 and 2. So market trades lower. We reach our $3 or $3,000 per contract price objective, and then we go sideways. So a lot of people ask me, well, hey, does this work in sideways or consolidated market? And I'll say, sure it does. Here's a 1, 2, 3 pattern right there. It ended up trading to the upside. I'm looking for new highs or new lows, okay? And that's exactly what we get. This high is greater than that high, so we have a 1, 2, 3 pattern. We also have a trend line break, and let me tell you why I was salivating at this particular setup, because we were now at a time of the year where crude oil and energies in general typically gravitate to the downside. Okay, so we have a high probability technical pattern that I've been teaching you, and we have some seasonality in the mix, and that sets us up for the perfect marriage. So we break below that number 2. If you missed it on day 1, you've got 4 or 5 days there of retest. We come down, we reach our $4 profit objective. So what do we do now? What do we do now or bounce? Well, you simply trail the market until you either get stopped out or you get a reversal, okay? And the market trades lower by another $20,000 per contract. We get a potential 1-2 pattern here, a potential 1-2 pattern here. We never break above the number 2, so there's no confirmation. And then we sell off another $10,000 a contract from here to here, okay? And then we finally get a 1, 2, 3 bottom here. It trades up and meets our $5 or $5,000 per contract price objective. All right, so I want you to remember this chart later on. Here are some setups. Again, a $5,900 move, $9,700 move, $4,500 move in crude oil. Here's a chart of gold. Okay, this is an ETF that tracks GLD that tracks gold futures. Here we have a 1, 2, 3 pattern. We break below. We reach our $4 per contract price objective. And then what are we doing? Well, we're just waiting for a reversal pattern. 1, 2, 3. Break above here. Reach our $2 profit objective. You say, well, what about this stuff in the middle? Yeah, you could have traded it. 1, 2, 3. Trades to the upside. 1, 2, 3, trades to the downside. I'm looking for new highs or new lows. And we start getting new lows. All these lows here are lower than these lows back here. This is a potential 1, 2. But this little guy right here takes out the low of this little guy right there. So we have a 1, 2, 3 pattern. We gap up 2 days in a row, come back, retest, hook back up. That's our go sign. How? We buy gold futures, minis, micros, GLD, call options, sell bull puts, whatever your flavor or style Maybe. Here we are in gold. $19,000 move, $8,000 move, $24,000 move in climbing, guys. Delta Airlines. I know this is becoming redundant by now. I'm just trying to hammer home the fact that we're trading price action. It doesn't matter. New 52-week close, 1, 2, 3. We break above, we come back, retest. $4 move to the upside. New highs, 1, 2, 3. We get a gap below the number 2. I don't trade those, but we've got students and members that will be aggressively buying puts there. We do get another shot here. This high, higher than that high. 1, 2, 3. Sells off aggressively below the number 2. Get a small retest there. $8 move to the downside, and then we get a new 1, 2, 3. Break above, we trade up, we come down, we hook back up, snap some call options up there, $8 move to the upside. And here we are in Delta again, $8.50 to the upside, $13, $5.50, $8.50. And then CAD Swissy, Canadian dollar versus Swiss franc, multi-session low, double bottom right there. Aggressive traders get long on the initial break, or we wait for the retest and or hook back up. We hit our 70 pip profit objective. What do we do now? Don't do a damn thing until we get a possible sell signal. 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, nope. Here's a final 1, 2, 3 top. There's a break. Trade below. We come up. We hook back down. 40 pip profit objective. Bet. Here we are. 80 pips, 70 pips, 35 pips and more. 70 pips, 55 pips. All we're doing, trading the ebbs and flows of price action. 5-minute chart of the NASDAQ, session low, 1, 2, 3. We break above, we come down, we hook back up, 13-point profit objective, new session high. We start a new count, 1, 2, 3. Break down below, we come up, we dance around, have to pop some tums, and then boom, 20 points, profit objective, new session low, 1, 2, 3. Break above the number 2. If you're lucky enough to get long in that retest there, you reach your 30-point profit objective there at about 2 or 3 bars. 5-minute chart, 137 ticks to the upside, 60 ticks to the upside, 91 ticks to the upside. Guys, do the math on this. Each point in the NASDAQ, $20. Do the math, and you will start to see the potential. So why are you here? You're here to learn a mechanical done-for-you strategy for all markets, all time frames. This is the part of the workshop where I'm going to ask you, have I shown you enough proof? Have I shown you enough proof? I'm not sure if it gets any more mechanical, simpler, easier. There's no really, guessing when to get in. No guessing where the market is likely headed. No guessing where to get out. Hell, if we had 100 traders looking at the same chart, we should at least have 99 seeing the same thing. There's always going to be somebody that tries to create rocket surgery out of this. We don't need that. We can keep this simple. Don't make it any more complicated that your brain and your mind is wanting it to do. But wait, there's more. The one weakness or drawback of these setups is that there's so many of them. How do you catch all of them without spending hours in front of your computer? Well, what if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that's pretty freaking amazing. Do you remember the case studies we went over earlier? Crude oil. Now, you guys are smart boys and girls. Let's take a look. Green arrow is your 1. Red arrow is your 2. Blue arrow is your number 3. 1, 2, 3. Now, what about this chevron? Is that a buy signal? Is that a sell signal? It's neither. It's telling you, it's waving at you saying, hey, we've broken below the number 2. We've broken above the number 2. If and only if that happens, you're going to get these 4 beautiful lines plot onto your chart. We have a break of the number 2. That's the break or entry level. This is your stop or risk level. This is TP1 or take profit 1, and this is TP2 or take profit 2. Okay, remember the distance between the high of the 1 measured to the low of the 2 is TP1, and TP2 is 2 times the distance of TP1. Pretty simple. Simple, mechanical. Now, you're probably saying, what in the heck are all these green arrows? These are telling us that we're making new lows. These are new number 1 points that are starting to count over. So here's that potential 1, 2, 3. We never broke above the number 2. Here's that potential 1, 2, 3. We never broke above the number 2. So hence, no arrows, hence no beautiful lines. Okay? Pretty cool. Here we are on gold. Here we are on GLD right here. There's our setup. We break above. Target 1, target 2. Here's this last setup here. We get a break above the number 2. Target 1, target 2. You can see that we're getting a new 1, 2, 3 over here in the top right. We don't get anything here in the middle because it keeps us out of the range. It keeps us out of the chop. Delta Airlines, DAL. There's our long. There's our short. There's our short. There's your long. No repainting, no hand calculations, guys. This is what I'm really passionate about. Is I used to do all of this by hand. All of this by hand for years. You know, can you imagine sitting here going, well, there's $33.38. This is going to be, this is $26.17. Okay, I subtract that from that. That's, $4.81. We add $4.81 to $26.19. It's going to be $31.31.5. Nobody's got time for that. Nobody's got time for that, especially if you're sitting there trying to day trade in a live market, okay? So this saves you gobs and gobs amount of time. Here we are at 5-minute NASDAQ. Here we are at 1, 2, 3. Boy, you're going to get excited and start licking your chops when you see how this worked on the NASDAQ today. Here we are. We have a short. Target 1, target 2. Hits target 2 to the tick, which happens to be a session low. And here we are, 1, 2, 3. We break above, we come down, we hook back up. Target 1 doesn't quite hit target 2, but it's good enough for government work. You should have lost any money there on that trade. Then we come, here's that sideways chop. We get a new low. This low is lower than that low. 1, 2, 3. Market just nips this little head there above the number 2, firing off the pattern. We come down, we come up, we come back down. Here we go. We hit target 1. Notice while we're waiting for target 2, we start to get new number 1 counts. This is warning us, saying, hey, we may need to get ready to reverse or go short. Well, we do end up hitting target 2. New session highs come into play. 1, 2, 3. We break below. We push back up, and then we come back down for that second pass. Target 1, target 2, and we end up starting to get a new pattern there in the last hour of the day. So is this training for you? Is this training for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add an arrow to your trading quiver, if you're tired of all the noise we talked about, indicator overload, analysis paralysis, just want to simplify your process and add another strategy to your toolbox. Maybe this is free. Maybe you are already successful, already profitable. You have something that works for you. Good. Keep using it. But who doesn't like new strategies that actually work? If you want a specific step-by-step plan, avoid learning in this all on your own. This is something that anybody can do, even part-time. Define mechanical setups, rinse and repeat, like this in Holly Frontier, this short in Holly Frontier, this long in Holly Frontier. Google, short. Could you sell the stock, buy puts, or sell bear call spreads? Short, could you sell the stock, buy puts, sell bear call spreads? This long, could you buy the stock, buy call options, or sell bull put spreads? Yes, yes, and yes. 4-hour chart of the Canadian dollar. There's your long. There's your short. 233 tick chart of the E-mini S&P. Those that like the action, you're going to get your fair share of action on 233 tick chart of the S&P. Here's a long. There's a short, target 1, target 2. There's your long, target 1, target 2. just trading the natural waves, ebbs, flows, price action that occur on a daily basis. Now, why do all the work when we can let technology do the work for us? Hey, this is me scanning here, Thinkorswim, 1, 2, 3 top, across the Russell 1000, only stocks that are optionable, $20 a share or greater. I hit the green scan button, and what might take me days, weeks, and or months is now done in seconds. And you can do this and have multiple watch lists running across different asset classes, markets, different time frames, tops, bottoms, and more. Now, we've been looking at a lot of Thinkorswim. This is the indicator in TradeStation and your scanner there in TradeStation. This is your indicator and scanner component in NinjaTrader 8. This is your indicator component in TradingView, a 4-hour chart of Apple. You can see the price labels there. This is your indicator component in MT4, 4-hour chart of Euro Kiwi, long, short, short, long. We've had this built for wealth charts. You can see here, long setup, as well as MetaStock. Nice, clean, easy, simple. And what I love here is MetaStock, you get a nice little smiley face when you've achieved your target. So it always makes me feel warm and fuzzy when we get to see that. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with that process. I'm letting technology scan the markets for me, locating the setup. I go to my platform for entry, and then I manage that trade through its exit. And you can, too, start profiting from these predictable patterns with what we call the 3S code. So here is your offer you simply cannot refuse. All this programming, coding, software development costs well into the 5 figures. We're talking 7 platforms, 7 different coding requirements, hundreds of hours of testing. I realized a $2,000 price tag was way out of reach for most folks. Hell, even $2,000, even $1,000. We're not charging anywhere near that, and I truly mean this, is I want you to be able to start on the right foot right now with a proven mechanical, no BS, no guessing, straightforward setup that you can literally take and use for the rest of your trading career. So we made this absolutely and completely affordable today for those that are willing to take action and get in right now with today's special offer. And we've opened up 25 slots today where you're going to get access to the 3S code indicator for 7 platforms, the scanner for 6 platforms, 3S code optimizer, access to our weekly strategy and scan sessions, our private Telegram room, all of our quick start guides and bonuses, all for a single one-time lifetime payment of $397. You go to TradesTrending.net/code. This is a one-time lifetime payment, guys. There's no renewals, there's no subscriptions, there's no weird, crazy shenanigans. It's a one-time payment. You own it for life. You own it for life. You access our scan sessions for life, as well as our Telegram room. Now, the platforms, again, are Thinkorswim, TradeStation, Ninja 8, TradingView, MT4, Wealth Charts, and MetaStock. TradingView is the only one that doesn't have a scanner, but if and when that should become available in the near future, you will have access to that and be grandfathered as well. We decide to code it for XYZ crazy charts, whatever that platform might be, it will be included as well. You're grandfathered in. We've also done a deal with PayPal. You can finance through PayPal. You'll see the big blue button on TradesTrending.net/code. For those that like to use PayPal for their convenience, finance through PayPal, hide it from your significant other, whatever it is you do, you'll see the blue button there on the order form, TradesTrending.net/code. You're also going to get access to our weekly strategy scan sessions. Good for you, because today is Wednesday. Our sessions are held Thursday. So tomorrow, every Thursday at 11 a.m. Eastern, they are recorded and archived for your viewing pleasure and convenience. This is your chance to get in with me in a live market environment. We look for trade setups. We do top-down analysis. We talk about day and swing trading using the 3S code, using options, minis, micros, much, much more. Very, very valuable there. You get access to that. And the indicator scanner, just so you know exactly what you're getting into today, it's a visual plot of the 1, 2, 3 top, bottom reversal areas with entry, exit, stop, and target levels, all color-coded for easy reference. Most of it is all customizable. Okay, so if you don't like red, you want hot magenta, you don't like yellow, you want orange, whatever the case may be, you can change that. You can scan for setups only, trigger only, or both. You can scan for tops, bottoms, or both, and you can scan for intraday setups, swing setups, position trading, or both across different asset classes and instruments. Now, you're also going to get the 3S code optimizer. This is where you can take the mechanical 1, 2, 3 top and bottom strategy and create and run multiple back tests across various inputs and settings to find the best optimization parameters that fit your trading style. We know that back testing can lead to more profits, and this tool is another one that can help you progress in your trading. So here I'm running the optimizer across crude oil here in Thinkorswim. Here I'm running this on the British pound in TradingView with all my settings and all my results. Here we are in TradeStation with all of my settings and results. And here we are in NinjaTrader with all of my settings and then all of my results. So different settings there for the tinkers that like to tinker. Now, with this package, I'm throwing in additional bonuses to make this an absolute no-brainer. This trading manual, my chart pattern principle trading manual guide, will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, and how to look at and understand the market the proper way. Bonus setups, plus how we use the power of seasonality to trade the 1, 2, 3 pattern. You're also going to get my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guy because I believe options are a powerful trading instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so and do it the right way using the 3S code. You also get access to our private Telegram channel. This is lifetime access every single day. I am posting ideas, could be a stock, could be an ETF, could be a commodity, could be a currency, day setup, swing setup, and much, much more. There's going to be other bonus setups and ideas. So basically giving you fish while you're learning to fish. And here's some ideas shared. This short here in Nucor. Here we are. This short in Cardinal Health here, tagging their target 1. Here we are on the S&P. There's a long setup there. We had another long setup there. Here we are in Moderna. We had a short setup there, followed by a long setup there. Obviously, you can trade this using stocks and or options, whatever, again, fits your style. And look, here are some success stories. And these are of students and members taking action. And I'll tell you this, you keep watching YouTube videos and buying courses and indicators and all that good stuff. And that's fine because, look, you got to figure out, along your trading journey, what style and methodology fits best for you. But you're not going to see results unless you take action. And these people, these students are seeing results because they're following the methodology, they're following the mechanical process, they're taking action, and they're having success with our 3S code methodology. So who is ready to get started? You can go to tradestrending.net/code. Again, here is the offer you cannot refuse. And what I'll do here, guys, is we'll take a couple minutes and let's look at a couple of charts just so you can see this in action. And then what I'll do is I'll turn it over to Mr. Fausto so he can tee you guys up as we head into the big earnings day. Okay, so let me do this. And I want to answer your questions too, by the way. Dave says, yeah, back in the day, we did it with a ruler, right? Yeah, I mean, those were the days, right? So look at the NASDAQ, guys. Look at the NASDAQ trades here. This is one of my templates. look at this setup here this morning. We had a couple here. This is pre-market 7 a.m. We had a buy signal, 3S code buy, hitting target 1, target 2. We came deeper into our green demand zones here, fired off a buy. This is the second pass trigger at 188, 190. Took very little heat on it. Came up, hit target 1, target 2. Turned around, gave us a 3S code sell signal out of our supply zone here. There's a 23,238 sell. Didn't quite get to target 1, but when we get to about 70, 80% of our target objective, our stops go to break even. And so there was no risk, no harm, no foul on that trade. And we look at Tesla. We don't have a pattern. We don't have a setup at this time. Okay. So the last 3 setups or so, you can see there was a sell signal that hit target 1. There was a sell signal there that hit target 1 and then reverse. Here was a sell signal. There's target 1. There's target 2. And we're not going to have a new setup unless we get a new high or we get new lows. Okay. So that's the beauty again of this system is, to me, this is just noise. You can, maybe you guys have a system or whatever is telling you, hey, get long, get short. That's fine. I'll leave that up to you. I don't really care. I don't really care. If we look at the S&P, So, all-time highs again. We're getting new 1 count. So I want to blow this up here so you can kind of see these arrows. So this is a new 1 count. So we had a 1, 2, 3 here. But if we make a new high, which is a new number 1 point, it negates that previous setup. We start over. So here's a 1, 2. And now we're just going to keep notching new number 1s until we get a potential setup. But you can see the last one here was this after the liberation low sell-off. We had a 3S code buy or 55.69. Target 1 there at 62.38. I'll do this with options. I like selling options. So selling bull puts for long setups, selling bear calls for short size setups. Hey man, I don't want to cut anybody off. I want to make sure Fausto has time here as we head into the close. So I will go ahead and turn this back over. If you guys, anybody that wants to jump on board, TradeTrading.net/code, our team can help install. We have guides and videos, but if you need help, they can jump in your computer and install this stuff for you. We are to help fast track your success. We really want to help you. And we look forward to having you part of the team and seeing you in the market. So thanks so much, Mr. Fausto and the CTU gang. Always good to be invited to this event and good to see you again and hear your voice. Take care, everybody, and we'll see you on the flip side.
Silas, thanks so much for being here, everyone. And like I said, Silas, please, you can always take up on his offer. Always looking forward to have you here, Silas. And it's always awesome. Learn a lot from you, buddy. In the meantime, like he said, we are going into the close. So a lot of exciting stuff is going to go on right now, everybody. Just give you a heads up. Earnings announcements coming out. We got Tesla, we got Google coming out. So, but one of the stocks I just want to share with you before all of you guys run in and join us in the Cyber Group room, the stock Webull, just wanted to show you what just happened here just recently. We just had a big run up on the stock right here from $17 the last 30 minutes, almost ran to 18. Want to point out one of the big things that we teach you here at Cyber Trading University. It's not right here. If you remember, we were logged in earlier. There was a big order right here. You could see here at $17. That order got executed. This is what's called a breakout. Okay. So that order got filled. And once that order got filled, as much as it became resistance levels, which you could see right here, it drove the stock down and now it came back up. That order of 88,000 got done. And now we are testing the next biggest seller, which is right here at $18 at 96,000 shares. If you have been watching us on Instagram, TikTok, YouTube, whatever you like, we did a lot of great shorts. We talked a lot about these breakouts and stuff. Right now, right here, you could see this is our trading floor. They are in the middle of trading it. If you could see right here, Josh is just posting up some news that just came out on it. Next target's probably $20 or $26. So, and you can see we're talking about some iceberg orders. So if you have not registered yet for Cyber Trading University's trial, let's post that link up there really quick, staff. There you go, right there. So you could join us. We're gonna end right now. Remember that we're gonna be back tomorrow. So we got 5 more presenters here that we're gonna look forward to have you on. So they're gonna be here, and especially Kathy Lynn is gonna be here. We're gonna have Jay Trader. We're gonna have Benzinga. So you thought today was good. Tomorrow is going to be really, really, really good too. So don't forget to be there. But if you want to come and join us and watch what's going to happen going into the after hours, just click on that link right there. You can do the trial for $9, and you're going to be here all week. We're going to show you how to get level 2, level 3, level 4, and how to trade it. But you know, but in the meantime, like everyone here, and that's why we have him here, you got to learn before you can earn. All right, guys. So don't go anywhere. Register for all these events that we've done. We'll see you back here tomorrow. If you stick around and you want to see what's going to happen in the close with Tesla and all those other big trades, like what we see with Webull and stuff, there's your chance. All right. In the meantime, thanks for listening, everyone. We'll have some videos. We'll have them shorts. We'll have all the clips. If you missed anything here, don't worry about it. They will still be available for you for your listening pleasure, because I know it's a lot to consume for being here all day. All right. Good luck, everyone. Happy trading, everyone.